So, welcome to the third session of the audit report. In the previous session, if you observe and remember carefully, we discussed SES 706. We closed our previous discussion with SES 706, that is emphasis of matter paragraph and other matter paragraph in the independent auditor's report. And what we have covered in SES 706 is only emphasis of matter we covered. We still left with the discussion about other matter paragraph. Actually, even you would have come across this standard earlier in your CA Inter or IPCC, or somewhere you would have heard about this. Whenever they discuss about other matter paragraph, they just simply read the definition and then leave it. But what they don't understand is how significant this other matter paragraph plays an important role. How significant it plays an important role. You know, if you want to clearly understand the disclosure requirements of other matter paragraph in the auditor's report, exactly what is the role of other matter paragraph, if you want to understand, you need to refer SES 600 additionally. Now, through other matter paragraph, we are going to discuss about SES 600. Sir, what is SES 600? SES 600 is regarding using the work of other auditor. In fact, it is regarding using the work of component auditor. It is regarding using the work of component auditor. I know you don't have any idea about SES 600. Don't worry. Slowly I will make you understand each and everything. First, let's look at what is other matter paragraph. The definition says other matter paragraph is a paragraph included in the auditor's report that refers to a matter other than, understand, the matter other than that is presented or disclosed in the financial statements, other than the matter which is presented or disclosed in financials. And if you look at emphasis of matter, that refers to a matter presented appropriately in the financials. Suppose in the auditor's report, you want to highlight an information which is available in financial statements. Then the paragraph that you have to use is emphasis of matter. Emphasis, highlighter. You want to highlight something in the financials, highlight under highlighter para. Then what is other matter para? Other matter paragraph deals about if you want to refer to an information, if you want to refer to some matter other than something available in financials, which in auditor's judgment is relevant. If you think you want to give some other matter but not there in the financials, if it is there in the financials and you want to refer it, you will use emphasis of matter para. But you want to refer about some matter, but that is not there in the financial statements. But according to you, it is important regarding users' understanding. Namely, what you want to make the users understand, the auditor's responsibilities or the auditor's report related, some other things. Especially if you look at the word responsibility, if you want to make the user understand auditor's responsibility. Sir, what is auditor responsibility again? We already have a separate paragraph, right? Auditor responsibilities for audit of financial statements, 11th paragraph use that. In fact, in basis for opinion section, we refer to auditor responsibilities, right? Are you talking about that responsibilities? No, I am talking about specific responsibilities of auditor, about scope of audit. Especially I am talking about scope of audit. Scope, understand, in other matter paragraph the responsibility is in the context of scope. So then what is auditor responsibilities paragraph? That paragraph, that 11th section of the audit report, auditor responsibilities relating to financial statements, that is a general para where it talks about general responsibilities of auditors with respect to conducting the audit of financial statements as per standards on auditing. So that is a general responsibility para. Then what about the other matter para, sir? In other matter para, I can talk about any matter other than something for which the information can be found in financial statements. Other than that, anything I can talk about. More specifically, what you can talk about? I can talk about specific auditor responsibilities relating to scope of audit. Relating to scope of audit. Pardon? Sir, I didn't get it still. Don't worry. I'll explain you. Before I talk about specific responsibilities, I want to give you an example. Sir, what do you mean by specific responsibilities here? Example, responsibilities of branch auditors, responsibilities of component auditors, especially relating to that, I can discuss in other matter para. Relating to the responsibilities of branch auditor, responsibility of components auditors, I can talk about here. Now, since the word responsibilities of component auditor came into picture, responsibilities of branch audit came into picture, without waiting further, I would like to start SAS 600. Now, before again I proceed to that, I would like to show you here one point. When to issue other matter paragraph in the auditor's report? If the auditor considers necessary to communicate a matter other than those that are presented or disclosed in financials, it is not related to financial statements, which in the auditor's judgment is relevant to users' understanding of the audit, auditor's responsibilities, auditor's report. If you want to make the user understand something about audit or audit related responsibilities or audit report related some issues, you can use other matter paragraph. The auditor then shall include an other matter paragraph in the auditor's report, provided this is not prohibited by law or regulation. There should not be any prohibition with respect to what you are going to discuss in other matter para. In other matter para, if you are going to discuss about upcoming company proposed plans, it breaches confidentiality. So you should not discuss. Okay. And also further, it should not be a 701 related matter. It should not be a matter where 701 is applicable. Sir, what is 701? Key audit matters. What is key audit matter? We will discuss after we finish SAS 600. So, in other matter paragraph, auditor can talk about audit, auditor responsibilities, auditor's report. 3 issues auditor can talk about. In other matter paragraph, if auditor feels some matter is relevant for users' understanding, relating to what? Relating to audit, relating to responsibilities, relating to report. Relating to audit responsibilities, what you want to talk about? Specific responsibilities regarding scope of the audit. Example, SAS 700 I'll take now. I'll take now SAS 700. Sorry, SAS 600. What is SAS 600? Using the work of other auditor. Using the work of other auditor. Now we are going to discuss a very big comprehensive example, which is a real life example and slight amount of imagination also added. Okay, it is not completely a real example, but partly it is real case, but slightly for the sake of better understanding, I've added little bit story to it. So, using the work of other auditor. Now we all know, if a company, especially if you take a company form of organization, if a company is having subsidiary companies or associate companies or joint ventures, if a company is having a subsidiary company or associate company or joint venture, then section 129 subsection 3 of the Companies Act says this company has to prepare consolidated financial statements in addition to standalone financial statements. Yes or no? This company has to prepare consolidated financial statements in addition to standalone financial statements. By the way, I'm also going to discuss along with 600, I'm also going to discuss about 299. But I will first discuss 600, then I will come back to 299. Now, so if a company is having subsidiaries, associates and joint ventures, they have to prepare consolidated financials additionally apart from standalone financial statements. What is consolidated financials and standalone? Standalone financials means my own company assets and liabilities are presented in balance sheet. My own company incomes and expenses are presented in the P&L. Whereas in case of consolidated financial statements, my company, which is holding company plus subsidiary company, so entire holding plus subsidiary company related assets and liabilities are presented. Subsidiary company plus holding company together incomes and expenses are presented. Indirectly, it is a family balance sheet and P&L. So that is consolidation of financial statements. So we prepare standalone and we prepare consolidation. For which company? For a company which has subsidiary. Plus, one more fact I would like to bring your attention. Suppose you take banks. You know State Bank of India? State Bank of India is having 22,000 plus branches. 22,000 plus branches across India. You are residing at some particular town or city, right? In your city or in your area or in your colony nearby, you will find a State Bank of India branch. Yes or no? Likewise, across India, State Bank of India is having 22,000 branches. I'm not talking about ATM centers. They are having ATM centers more than 45,000. That's different. I'm talking about branches of State Bank of India alone. Fine. In addition to this, State Bank of India is also having subsidiary companies. State Bank of India is also having subsidiary companies. Example, SBI Life Insurance, SBI General Insurance, SBI Cards, which deals with credit card division. State Bank of Hyderabad, State Bank of Travancore, State Bank of Patiala, State Bank of maybe some various other, State Bank of Maharashtra or whatever, State Bank of something. Okay, let us assume State Bank of Hyderabad. Actually now these state banks, no, whereas subsidiary banks, scheduled banks, they are actually now merged within SBI. But once upon a time, State Bank of India, State Bank of Hyderabad, State Bank of Patiala, State Bank of Travancore, okay, these used to operate separately. State Bank of Hyderabad is a separate bank, State Bank of India is a separate bank, and they compete with each other. They're separate. Understand? State Bank of India subsidiary companies, these are all subsidiary companies. They are different and branches are different. For your information, if I have to give you even more clarity, State Bank of India has 22,000 branches, right? And State Bank of India will have some head offices, right? They will have corporate offices, right? Yes or no? For all of these, State Bank of India as well as all the 22,000 branches together will have a single PAN number because they are all belong to one entity. They will have a single permanent account number under income tax. But then, this State Bank of India along with 22,000 branches may have different GST numbers. Different GST numbers. Why? Because GST is a state-wise registration. Because it's a state-wise registration. Suppose you take State Bank of India branches which are there in Telangana. All the State Bank of India branches that are there in Telangana will have a single GST unless they opted for a separate GST voluntarily in the name of business vertical. If you get to, if at all GST is started for you, you will understand that. Okay, what is business vertical? What is separate registration? Why separate registration? Under GST law, an establishment in one state, another establishment of the same enterprise in another state are treated as deemed distinct persons. Accordingly, all the establishments in one state should obtain a GST number under that state law of GST, and other branches in other states should obtain separate GST. Suppose if State Bank of India is operating in all the 29 states, then it should have 29 GST registrations. It will have. And all the 29 states have to file separate GST returns monthly. All the 29 states have to file annual GST returns. All the 29 states related, GST numbers are there. No, for all of them, separate audit report under GST law should be given. So fine. So, but understand, the State Bank of India plus branches, all of them together are only one person. Understand, they are only one person. They are not different persons. Only for the sake of GST, only separate registrations will be there. But actually they are one and same. They are one and same. They are one organization. Branch is part of the organization. Understand? Branch is not a separate entity. Branch is not a separate entity. Now, if you observe this State Bank of India, now they will prepare standalone financial statements, right, as soon as the year completes. The moment March 31st has been crossed, they will prepare standalone financial statements. Agreed or not? The standalone financial statements is how they prepare. How they prepare? Head office plus 22,000 branches, all the assets they will. And head office plus all 22,000 branches liabilities, they will total it up and they will prepare a combined balance sheet. Here I am calling it as combined balance sheet, not consolidated balance sheet. I am combining the books of head office and branches. That is not a process of consolidation in the context of accounting standard 21. It is a process of combining the head office plus branch books. Understand, head office and branches are one and same. And if we prepare balance sheet and P&L combined result of head office plus branches, it is not called as consolidation. It is still called as standalone because it is only one company. Maybe branches are different. And now, the same State Bank of India prepares consolidated financial statements. The same State Bank of India prepares consolidated financial statements. What they prepare in consolidated financials, see, for the sake of our convenience, for combined financial statements means head office plus branches together. Consolidated financial statements means State Bank of India, that asset, nothing but head office plus 22,000 branches, all of that plus subsidiary companies, their assets. So the total of this means entire State Bank of India assets plus subsidiary company assets. We will total it up. Same way liabilities also. That is consolidated balance sheet and that is consolidated financial statements. So that is consolidated finance. So State Bank of India Limited, first of all, State Bank of Limited is a company registered under Companies Act, got a banking license under Banking Regulation Act, which is following the regulatory norms of RBI. First of all, it's a company. Understand that. So State Bank of India will prepare two sets of financial statements. Two sets of financial statements for every year. One is standalone, its own picture. Another consolidated, entire group picture. The State Bank and its subsidiaries, associates, joint venture together, combined picture. I hope you understood the story till now. Now, actually, we have not yet started SA 600. We are now entering. In SA 600, if you observe, the SA 600 heading is what? Using the work of other auditor. Using the work of other auditor. Who is other auditor? And who is using the work of other auditor? Who is using whom? The principal auditor. There is a concept called principal auditor. The principal auditor is using the work of other auditor. Who is other auditor? I'll show you the definition right now. Other auditor definition. Then I will show you principal auditor definition. We'll read it once and then we will interpret it. Then we will proceed with our example. Example is not yet over. Only 10% only over example. Still so much is there. Now you see. Here if you observe. Other auditor means what? Other auditor means an auditor other than principal auditor, with responsibility for reporting on the financial information of a component which is included in the financial information audited by principal auditor, and other auditor also known as component auditor. Now, who is principal auditor? Principal auditor means the auditor with the responsibility for reporting on financial information of entity when that financial information includes financial information of one or more components audited by another auditor. What is component? Component means a division, branch. If you observe, a division, branch, subsidiary, joint venture, associated enterprises or other entity. If you observe, this is first bracket and this I will keep it under second bracket. Actually, if you look at the definition, it doesn't differentiate. It says what is component. It may be a division, it may be a branch, it may be a subsidiary, it may be joint venture, it may be associate, or it may be other entity whose financial information is included in the financial information audited by principal auditor. Audited by principal auditor. So component means a division, branch, subsidiary, but I am classifying it into two parts. Division and branch is coming under part 1. Subsidiary, joint venture, associate, enterprise coming under part 2. What's the difference? Don't worry, I'll come to the example again. Just I want to show you the definitions once, and you have to understand how in-depth the definition is. How in-depth the definition is. And now once again I'll show you. State Bank of India is having 22,000 branches. First of all, understand. So head office plus branches. So with that they will prepare standalone financials, and they will have so many subsidiary companies, some 20 plus subsidiary companies it may have. So all of that entire State Bank of India means entire this result plus subsidiary companies result together they prepare consolidated financial statements. Yes or no? Now you know State Bank of India. Now who are the auditors for State Bank of India? Now I'm talking about audit of State Bank of India. State Bank of India auditors. I'm talking about State Bank of India auditors. Still State Bank of India is having 14 auditors. Sir, 14 auditors. What does it mean? Like a firm is appointed. In that firm there are 14 partners. No. 14 audit firms have been appointed as an auditor. These 14 auditors are nothing but joint audit. For State Bank of India, it is a case of joint audit. And how many joint auditors they have? You know, 14 joint audits they have. 14 joint auditors they have. Listen carefully. This example may go up to some half an hour or 40 minutes also. But the amount of clarity that you're going to get is something at the next level. Your knowledge and perspective will improve like anything. Okay, so State Bank of India is having 14 joint auditors. So naturally, all the joint auditors have to comply with SCA 299, another standard. All the joint auditors have to comply with SCA 299. Now, sir, State Bank of India is having 14 joint auditors, right? Do you mean only these 14 joint auditors do audit of head office as well as 22,000 branches also? No. These 14 joint auditors are the auditor for the entire bank. I agree. These 14 joint auditors are the auditors for the entire State Bank of India. For entire State Bank of India, these are the auditors. But to these 22,000 branches, they're right. 22,000 branches, these main auditors won't do the audit. 22,000 branches are spread across India, across every city, across every mandal. Okay, so these 22,000 branches are audited by branch auditors. These are audited by branch auditors who are also called as component auditor, who are also called as other auditor, who are also called as other auditor. Other auditor. What they do? These branch auditors, first we will be appointed as a branch auditor. Like suppose I'm staying in Hyderabad. So Hyderabad related, Ameerpet related, State Bank of India, example. Hyderabad related, Ameerpet related, State Bank of India branch, I was got allotment. I will do audit and I will forward to the head office. I will forward to the head office. So just a minute. Yes, sorry. So State Bank of India auditors, the entire 14 auditors are there, right? They are the auditors for the entire bank, of course. And these 14 auditors together will give audit report on the entire State Bank of India. And understand, only that audit report we get for reading. But you know, in back end, State Bank of India is having 22,000 branches, right? Just now I told you, example in Hyderabad, State Bank of India, Ameerpet branch is there, right? That audit I am doing, let us assume. Now I will conduct the audit, I will forward that report to head office. I will forward that report to head office of the State Bank of India. Getting it? So once we conduct that branch audit of Ameerpet, we will forward that report to the main head office. And there, who will check this audit reports, you know, whatever all the branch auditors, you know, actually I'll tell you one more information. 22,000 branches are there, right? out of 22,000 branches, State Bank of India will have branch auditors. State Bank of India will have branch auditors. And 22,000 branches, out of which some branches, let us assume 10,000 branches or let us assume 12,000 branches are not liable for audit. 12,000 branches are not liable for audit. 12,000 branches are not liable for audit. And whereas 10,000 branches are liable for audit. Sir, what do you mean by not liable for audit? Like in a bank, certain branches are not required for audit. It's a company, no sir. Company means compulsory audit, no, for everything. But here RBI guidelines applicable. Here some RBI guidelines are applicable. For some branches, no, as per whatever the branches which satisfy the conditions prescribed by RBI guidelines, those branches are exempted from audit. Those branches are exempted from audit. When a particular branch of a bank is exempted from audit, that bank will not appoint a branch auditor. That bank will not appoint a branch auditor. For remaining branches, yes, audit is applicable as per RBI guidelines, so the State Bank of India will appoint branch auditors. Approximately for these branches, let us assume State Bank of India have appointed branch auditors like me. Example, 10,000 branch auditors were appointed. Now what these auditors do, they audit all these branches and they forward all the reports to head office. And now in head office, who are there? Central auditors. I told you now 14 joint auditors, right? These are the joint auditors. These are the auditors for the entire State Bank of India. Understood? These are the auditors for entire State Bank of India. These auditors are called as, in banking terminology, central statutory auditors. These are actually called as central statutory auditors. Central auditors. Central means main. For the entire bank, they are the auditors. Whereas branch auditor, only for the branch. He will just audit the branch and then send the report to the head office auditor. Now these 14 joint auditors, what they do, They do audit of head office, all that. They do branch head office reconciliation, everything. After that, they will take into account audit report of branches, and they will finally give their report on the head office. Not head office, entire bank. I mean, these main auditors, central auditors are there, right? These central auditors are there, right? Do you mean they don't visit the branches? No, they don't. Why, sir? How come? They are the auditors for the entire company. But then, for a particular branch, we have appointed chartered accountant having certificate of practice, a competent person only we have appointed. We have appointed a competent person only as a branch auditor. And his report is reliable, right? See, auditor report is reliable, right? Yes or no? One auditor report is obviously reliable for another auditor report. I am a user, that's it. The fact that I am an auditor doesn't make any difference. I am a user. Any auditor's report I can use, even though I am an auditor. But first of all, I am a user. So these 14 joint auditors, what they do, they rely upon branch audits reports. They rely upon branch audit reports. And what they do after relying upon branch audit reports, and they would have conducted the audit of the entire bank already by that time, head office audit. Plus, they also take branch audit reports, and finally they give opinion on State Bank of India standalone financials. Understand? I'm talking only from the point of view of standalone financials. Then this same 14 joint auditors have to give a single audit report on consolidated financial statement of State Bank of India Limited. They have to give an audit report on consolidated financial statements of State Bank of India. What is consolidated financials of State Bank of India? Here, SBI Limited, their liabilities plus subsidiary company liabilities are added. Assets are also like that, only added. And subsidiary companies, I said, right? Do you think subsidiary companies are audited by these 14 joint auditors? No, they are not. Subsidiary companies are not audited by these 14 joint auditors. Then who, sir? Subsidiary companies are audited by some other auditors again. And what these subsidiary company financials are audited by some other auditors, right? That audit report will be forwarded to again holding company auditor. Here State Bank of India From the consolidated financial statement context, we are talking State Bank of India auditors or holding company auditors. Subsidiary company auditors or just the auditors of subsidiary company. They forward their report to holding company. Now again, these 14 joint auditors, they already know what is SBI. Now they use the report of subsidiary company auditors and finally give opinion on consolidated financials. Finally give opinion on consolidated financials. Sir, so much big example you took. Still somewhere we are having clarity. Don't worry. I only gave you brief overview of the example. Now I will give you more in-depth example. See, this is a very important concept. Compulsory question always. Always XA 600 question will come in exam. Okay, listen carefully. Even otherwise, even if it is not coming in exam, very rare scenario. Okay, this is a very, very practical example. Tomorrow when you're doing an audit of insurance company or NBFC or a bank, especially, or if you're doing in a big four entity or in a particular company which has large number of branches and separate auditors were appointed, this learning will be useful there. This kind of learning will be useful there. Now, so what I told you, State Bank of India Limited. Okay, very good. And there is another company called State Bank of Hyderabad Limited. There is another company called State Bank of Hyderabad Limited. Now, State Bank of Hyderabad Limited, for that entire company, let us assume for that entire company, and State Bank of India Limited. In our example, we have thought 14 joint auditors, right? Let us keep that aside. Hypothetically, let us assume there is only single auditor. Let us assume there is only single auditor. Mr. A. Mr. A is the auditor of, Mr. A is auditor of State Bank of India Limited. I hope you understood. Now, the State Bank of India is having, or else let me do one thing. Let me follow a uniform format. The State Bank of India is having branches. The State Bank of India is having branches. 22,000 branches they have. But I'm not talking of all the 22,000 branches. I'm only talking of State Bank of India Limited branch Hyderabad. Branch Hyderabad. I'm talking about SBI branch only, but Hyderabad branch. Here, it's a separate company. It's a subsidiary company. State Bank of Hyderabad Limited, SPH. It is a separate company, not branch. Now you see, for this it is a subsidiary company. For this it is a subsidiary company. Now if you need to understand one more fact, State Bank of Hyderabad also has, instead of writing Hyderabad here, I will write SBH Limited. SBH Limited. The State Bank of Hyderabad is also having some branches. Yes, it has some 100 branches. Let us assume it has 100 branches. One branch is there. For State Bank of Hyderabad Limited has 100 branches. I'm talking about one branch of it. I'm talking about, let us assume Vijayawada branch. Okay, I'll take Vijayawada branch. State Bank of Hyderabad, Vijayawada. The State Bank of Hyderabad, Vijayawada. Okay. So now if you observe, I'm talking about 4 issues. One is State Bank of India Limited as a whole, State Bank of India Limited branch, State Bank of Hyderabad Limited as a whole, State Bank of Hyderabad Vijayawada branch. Fine, agreed? Now, State Bank of India Limited. Now let me write auditors names with a different colors. Okay, now I listed out the enterprise names. Okay, now I will list out auditors name. State Bank of India Limited, State Bank of India Limited is audited by Mr. A. State Bank of India branch is there, no Hyderabad branch. That is audited by Mr. B. State Bank of Hyderabad Limited is there, no separate company. It's audited by Mr. C. State Bank of Hyderabad, it actually having 100 branches, out of which one branch is Vijayawada branch. Okay, that one branch is the Vijayawada branch. It is audited by Mr. D. Mr. D. Now, example is not yet over. Now, if you observe, State Bank of Hyderabad Limited, though it's a subsidiary company of State Bank of India, though it is a subsidiary company, But they both are two different companies. Yes or no? State Bank of India is a separate company. It will have separate corporate identification number. It will have separate PAN number. State Bank of Hyderabad Limited is a separate company. It will have separate corporate identification number, separate MOA, AOA, separate PAN number. Agreed? But State Bank of India Limited and all its 22,000 branches are one and same, will have single PAN number under income tax. State Bank of Hyderabad Limited and all its 100 branches are one and same, and they will have single PAN number. Yes. Now I hope. And State Bank of India Limited as a whole, the main auditors are Mr. A. And one branch out of 22,000 branches, one branch I'm talking about, that branch auditor name is B. State Bank of India as a whole, auditors are Mr. C, and it has 100 branches, out of which one branch is Vijayawada branch, for which the auditor is Mr. T. I hope now you are equipped properly with the information. Now our analysis has to be done. Now, by the way, tell me, State Bank of Hyderabad Limited. No, or else will come from bottom. Mr. D. Mr. D is who? Auditor of Vijayawada branch of State Bank of Hyderabad. Hyderabad State Bank, Vijayawada branch auditor. Now what he will do? He will give audit report on Vijayawada branch. Agreed? Yes. And he will give audit report on Vijayawada branch level financial statements. Vijayawada branch level financial statements. Yes or no? Now this branch financial statements, we will combine it with, tell me everyone, branch of the Vijayawada, branch financials are there, no Vijayawada branch financials. Do we add them in the State Bank of Hyderabad Limited head office and branch? This will be consolidated, or Vijayawada State Bank of Hyderabad branch balance sheet P&L will be kept with the State Bank of India. Which one? Obviously State Bank of Hyderabad. Yes or no? So there is no connection, sir. Vijayawada branch and State Bank of India Limited, there is no connection. State Bank of Hyderabad Vijayawada is a Hyderabad Limited company. So when State Bank of Hyderabad Limited is preparing standalone financial statements, okay, I will use another color. I will use a different color. Okay, don't get confused. As soon as again I wrote example, once again I'll repeat. So the State Bank of Hyderabad will prepare standalone financial statements where they combine head office plus all branches related balance sheets and P&Ls, they combine it. But still, since it is only one company, only head office plus branches completely we are preparing, do we call them as consolidated financial statements? No, we call them as still standalone financial statements. By the way, State Bank of Hyderabad Limited, do they require to prepare consolidated financial statements? No, because State Bank of Hyderabad Limited do not have a subsidiary company. It do not have a subsidiary company. So for them, consolidated financial statements concept do not apply. Okay. Now, by the way, standalone financial statements are there, no? State Bank of Hyderabad. On that, audit report shall be given yes or no? Who will give this audit report? Do you think Mr. D will give audit report or Mr. C will give audit report? Sir, Mr. D is only branch auditor, sir. Whereas Mr. C is complete auditor. So, Mr. C only will give audit report on the standalone financial statements of State Bank of Hyderabad. Very good. Now, keep the State Bank of Hyderabad aside. Now, coming to State Bank of India Limited. Now, State Bank of India Limited, branch is there, no? Branch will prepare balance sheet and P&L, yes or no? On this balance sheet and P&L, audit report will be given by whom, sir? Mr. B. Mr. B will give audit report on State Bank of India Hyderabad branch. Okay, fine, sir. Now, State Bank of India Limited is there, no? They prepare financial statements. Now, how many financials they prepare? One is standalone financial statements, where entire head office plus all 22,000 branches financial statements are combined. I am not using the word consolidated. I am using the word combined. Yes or no? Now, in this 22,000 branches, this balance sheet P&L is also included. Yes or no? Now, on this entire standalone financial statements, who will give audit report? Mr. A. Yes, obviously, because Mr. A is the auditor of State Bank of India Limited, sir. So he will only give, not Mr. B, sir. He is only just a branch auditor. So he will give audit report only on branch. But Mr. A is the main auditor for State Bank of India. So Mr. A will give audit report on standalone financial statements. Very good. Now, State Bank of India Limited, if you observe, it has a subsidiary company. If one company is having a subsidiary company, it has to prepare consolidated financial statements also. Oh my God. It has to prepare consolidated financial statements. In the consolidated financial statements, what are all? It's not head office. It's holding company plus subsidiary companies. Holding company standalone financials, subsidiary company standalone financials, we will consolidate, and that's how we arrive consolidated financial statements. If you observe State Bank of Hyderabad, no, State Bank of Hyderabad standalone financials, how they were calculated, how they were computed, head office financial statements plus branches financial statements combined, you will get standalone financial statements. If you combine holding company standalone financials and subsidiary company standalone financials, if you consolidate, you will get consolidated financials. I hope you understood the picture now even more better. Now, still example is not yet over. I'm only listing out the information for your information. I'm only listing out information. Now analysis start. Now SA 600. What is SA 600? Using the work of other auditor. Who is using the work of other auditor? Principal auditor is using the work of other auditor. Who is principal auditor? If I have to understand who is principal auditor, I must understand who is other auditor. Who is other auditor? Other auditor is a person other than principal auditor who has been appointed for conducting audit of a component. Component means what? It may be division, it may be branch, it may be subsidiary, it may be associate, it may be joint venture. Now you see, if you observe, no, once again, Mr. A, SBI auditor. Mr. B, branch of State Bank of India auditor. Mr. C, State Bank of Hyderabad Limited as a whole auditor. Mr. D, State Bank of Hyderabad, one of the branch auditor. Now, if you observe, I will proceed. Now, State Bank of India Limited, once again you take State Bank of India Limited is there. No, it is now preparing consolidated financials. On this, audit report will be the rate. On this also, audit report will be the rate. Who will give this audit report? Obviously, same company auditor. Holding company, whoever the auditor is there, same auditor will give audit report on consolidated financials also. Who is the auditor, sir? Mr. A, sir. Mr. A is the auditor. So Mr. A, who is an auditor of State Bank of India Limited, has to give two audit reports. One, standalone financial statements. Two, audit report on consolidated financial statements. Two audit reports you have to give. Now, if you observe, in this entire example, who are all principal auditors? Who are all component auditors? That's the question. I will use another page. I will again come back to this. I will use another page. Now, if you observe, State Bank of India, first I will give information, then we will interpret. State Bank of India Limited is preparing consolidated financial statements and standalone financial statements. Yes. State Bank Hyderabad Limited is preparing only standalone financial statements. Yes. Now, State Bank of India Limited, who is principal auditor? Who is principal auditor? Mr. A. Agreed? Yes, sir. He is the one who is the auditor for the entire bank, right? Yes. And what you do is, if possible, if you have another device, now you're watching the class on laptop, right? What you do is, I will just little zoom in, little zoom out. You take this photo in a phone. What you do is, you take a photo in a phone. Just click a snap in the photo. Now, based on, you just observe that photo while I'm writing here some information. Now State Bank of India Limited, you look at your photo, State Bank of India Limited, who is the main auditor? Mr. A. Now we discussed about State Bank of India 22,000 branches, but we are not discussing all 22,000 branches, only one branch. Other auditor, whom we call him as branch auditor, is simply called as other auditor. Who is other auditor? Mr. B. In which context? In which context? Standalone financial statements context. Fine. Now come back to State Bank of Hyderabad Limited. State Bank of Hyderabad Limited. Who is principal auditor? Yes sir, Mr. C sir, you already told. No, we are looking at the phone image also. So Mr. C. Who is the other auditor? State Bank of Hyderabad has 100 branch, but I'm talking only about Vijayawada branch. Who is other auditor? Mr. D. Very good. Now, so this I think everyone understood. This I think everyone understood. Now the question is consolidated financial statements. Consolidated financials. Who is principal auditor? Sir, whoever is giving opinion on the overall financials is a principal auditor. So obviously Mr. A sir. Obviously Mr. A. Who is other auditor? Who is other auditor? Who is other auditor here? Who is other auditor here? Just a minute. Who is other auditor? Mr. C. Mr. C is the other auditor. Mr. C. Sir, Mr. C is auditor of SBH Limited. No, sir. Yes or no? Other auditor means branch auditor. No. No. Other auditor in the context of standalone financial statements, other auditor means branch auditor. But in the context of consolidated financial statements, what are we consolidating? We are not consolidating head office and branch. We are consolidating holding company, subsidiary company. Subsidiary company auditor is other auditor. When we are consolidating holding and subsidiary company, the definition of other auditor includes subsidiary company auditor. But if it is in the context of standalone financials, other auditor means branch auditor. In the context of standalone financial statements, other auditor means branch auditor. In the context of consolidated financial statements, other auditor means subsidiary company auditor. From the point of view of holding company auditor, in the context of consolidated financial statements, other auditor means subsidiary company auditor. From the point of view of holding company auditor, in the context of standalone financial statements, other auditor means branch auditor. Understand? I hope now you understood. Now if you see the definition of component, now once again, if you see the definition of component, if you observe, component means what? Component means what? It means a division or branch. It means a division or branch. It means a division or branch. Or comma, subsidiary, joint venture, associate or other entity. It may be division or branch, subsidiary, joint venture or associate. Now what are they saying? So division or branch or subsidiary whose financial information is included in the financial information audited by principal auditor. Such a beautifully drafted. Whose financial information, subsidiary or branch, whose information is included in another information audited by principal auditor. Now if you observe, look back at the example. Mr. C is the auditor of State Bank of Hyderabad. Yes, this financial information, nothing but their financial statements are included in consolidated financial statements. This State Bank of Hyderabad financial data is included in financial data of consolidated financial data of State Bank of India Limited, for which Mr. A is the principal auditor. So from Mr. A point of view, consolidation point of view, Mr. C, subsidiary company auditor, is a component auditor, other auditor. Standalone statements point of view, Mr. B. Now if you observe Mr. C, Mr. C, you see, was used at two places in our example. Mr. C is a component auditor, or you can say other auditor, and Mr. C is a principal auditor. Both the capacities he has. In one capacity he is other auditor. In another capacity he is a principal auditor. Where he is principal auditor, Mr. C? State Bank of Hyderabad Limited, I am the principal auditor. State Bank of India consolidation point of view, I am other auditor. I am not the principal auditor. But you know, I audited balance sheet P&L of State Bank of Hyderabad, right? I gave report, right? That balance sheet P&L is included in consolidated financial statements, which is audited by Mr. A. He is principal auditor. Now you see the definition of other auditor. Now you see the definition of other auditor. Other auditor means an auditor other than principal auditor with responsibility for reporting on financial information of a component. I am having responsibility. I'm having responsibility for reporting on the financial information of a component which is included in. I mean, I'm reporting on component financial information, right? That is included in. It is included in means something is bigger is there. In that it is going to be included in financial information audited by principal auditor. When my audited information includes in another information, I am other auditor, he is principal auditor. Now who is principal auditor? Exactly this definition wordings have been reframed. Principal auditor means auditor with responsibility for reporting on financial information of, if you see the word used is entity. Here the word used is component. Principal auditor is an auditor with the responsibility for information on entity. Other auditor is the auditor with responsibility for reporting on not entity but component. See how cleverly the definitions have been drafted. Entity, when the financial information includes, entity financial includes financial information of one or more components not audited by him but audited by another auditor. To understand these three definitions, we almost spent half an hour, more than half an hour, 40 minutes I think we spent. Sir, understood, sir. This example I understood, sir. Why we discussed all this, sir? Why we are discussing this entire thing, sir? You started with other matter paragraph and you came up with such a big story. I know it is interesting, the story is interesting, but then why are we learning this? Now, I want to talk about responsibility of principal auditor, because I want to make you understand responsibility of principal auditor. What is the responsibility of principal auditor? What is the responsibility of principal auditor? Now I am a State Bank of India auditor, right? Now I will directly go. I am not even covering that examples. Now I think you would have understood the story. Now I just take the facts and then explain you what is the concept. State Bank of India Limited is there, right? Yes, sir. It has standalone financials and consolidated financials. Yes, sir. Standalone financials, Mr. A is giving opinion. Yes, sir. He is only giving audit report. And that audit report is sent to public, sir. Yes, sir. It is correct. That audit report is sent to public, sir. Now, in the audit report contains unqualified opinion. Yes, sir. Agreed. Now, in this financial statements balance sheet, there is some assets, sir. Some of them are fraud. Now, who gave the audit, sir? Who gave the audit report? Mr. A gave the audit report. Now, everybody is saying arrest Mr. A. Now, people, enforcement directorate, all CBI people, everyone went to the Mr. A auditor to arrest him. Mr. A said, I did not audit that particular asset. Wherever you are saying fraud, no, I have not verified it. Then you are the one who signed the audit report? No. Yes, I am the one who signed audit report. But based on what? Based on audit report of other auditors. I signed them based on reliance on other auditors. So, technically speaking, you don't have authority to arrest me. Why? Because the fraud is relating to branches. And the branch is audited by a competent person like me, a chartered accountant having certificate of practice. He is the one who audited that. And since he said everything is true and fair, I saw his audit report. I also relied his opinion. I proceeded giving true and fair opinion. Now, how can you blame me? You are the only one says you can use the work of other auditor, right? I used his work. He's a stat auditor. If you think his report is not reliable, then why you appointed him? He is a stat auditor, I am a stat auditor. He is external auditor, I am external auditor. He is independent auditor, I am independent auditor. And do you think I can verify all the 20,000 branches? I know I cannot. So only branch auditor was appointed by RBI. So only branch auditor was appointed by RPI. And that fellow gave audit report saying everything is true and fair. And I got that report. Likewise, I got 22,000 branch reports. In this particular branch, there is a big fraud happened, some 100 crores, very big amount. Okay, let it be. How can you arrest me? I gave my opinion based on his audit report. I gave my opinion based on other auditors' report. My opinion is influenced by other auditors' opinion. If at all he said adverse opinion, then I would have highlighted in my audit report. He gave everything is true and fair. Then I also adopted the same. I said everything is true and fair. You can't arrest me. Okay, fine. So you have to go to other auditor. You go and ask him what happened, not me. Which means you are saying, though you are giving the audit report on the standalone financials entirely, which includes 22,000 branches related financial information, for the branches related information you are not responsible. Yes, there is a division of responsibility. There is a division of responsibility between principal auditor and other auditor. Principal auditor is not responsible. Make a strong statement in your mind. Principal auditor is not responsible at all with respect to financial information indicated, in the financial statements of component. That component may be a branch or subsidiary, or it may be a division, or it may be an associate company or joint venture company. Suppose in State Bank of Hyderabad Limited some fraud happened. Again, people are coming and asking, Mr. A, State Bank of India auditor, sir, you only signed a consolidated. Yeah, man, I signed. But how I signed consolidated financials which include State Bank of Hyderabad data? I relied upon State Bank of Hyderabad auditor's report. He said everything is true and fair. So, and head office, this State Bank of India related, you ask me. Hyderabad company related, I didn't do audit. Then how you signed? He signed true and fair. No, I relayed his report. Today, if I'm giving audit report, you are relaying. No, same way his audit report, I'm relaying. So, the principal auditor, other auditor have a clear-cut division of responsibility. Now tell me, if you want to exercise division of, if you want to escape like this by showing division of responsibility, first you should tell that fact right to all the members. Yes or no? You have to tell this fact to all the people, whoever is using your audit report. You know what you're doing? You are giving audit opinion on entire consolidated financials. You are taking entire credit, no? We are giving opinion on the consolidated financials of so you are giving opinion as if you did the audit. Yes or no? People think, oh my god, this auditor did so much big company audit. You should tell 22,000 branches are not audited by you. You should tell 20 subsidiary companies are not audited by you. You should tell that. Then only you can exercise division of responsibility. You give opinion. In the above, you give opinion. We are giving true and fair opinion on the consolidated financials. But in the audit report, you also mention your opinion you gave. No, it is not only your personal opinion. It is also based on audit reports of subsidiary companies, audit reports of branches. Mention that fact. Then only you are eligible for claiming exemption if something goes wrong in branches. You have to clearly inform people that you are not responsible for subsidiary companies. You are not responsible for branches because you have not audited them. Then how come you gave opinion? You gave opinion on them also, which data is included in overall data. You gave opinion on overall data. Indirectly, you gave opinion on that data also. How you gave this opinion? Purely based on their auditor's report, purely based on other auditor's report, purely based on subsidiary company auditor's report. Mention that fact in the audit report. Okay, it's better now. I understand. I should mention it in the audit report. Where should I mention? Other matter paragraph. That's how other matter paragraph is used. I hope now you understand. Other matter paragraph. Other matter paragraph is a paragraph where I can explain specific responsibilities about audit and auditor, all that. In order to understand that, we understood this much example. And you know what is the one good point? We are able to understand how exactly other matter paragraph is used in real life. And indirectly, we also covered SA 600. Major content is over. Major content is over. Now in SA 600, now I have some more doubts in SA 600. In SA 600 related, I have some more doubts. Now after discussing this, immediately we'll read SA 600 and finish it off. Okay. So what is the doubts there? Suppose The same example, let us continue. State Bank of India Limited, Mr. A is the auditor. Yes or no? This has 22,000 branches. This has 22,000 branches. And all the 22,000 branch audit reports were forwarded to Mr. A. Agreed? Yes or no? Now, you know, one branch auditor 1, he gave unqualified opinion. Branch auditor 2, he gave unqualified opinion. Branch auditor 3, he gave unqualified opinion. Branch audit 19,000, he gave unqualified opinion. Branch audit 22,000, somewhere the last branch, no, he gave adverse opinion. He gave adverse opinion. Now, yes sir, since one of the branch auditor gave adverse opinion, Mr. A should give adverse opinion on entire State Bank of India, sir. Because one of the branch auditor out of 22,000 branches gave adverse opinion. Only 1% gave adverse opinion out of 22,000. Still, State Bank of India Limited, entire Mr. A should also give adverse opinion on the entire bank, sir. Sir, it is only one branch out of 22,000 branches, man. It is just one branch out of 22,000 branches. I agree. This auditor gave adverse opinion, I agree. But you know, he gave adverse opinion because the mistakes were material plus pervasive. The mistakes in that particular branch are material. The mistakes in that particular branch are material and pervasive. Now you tell me, when other auditor, I'm a branch auditor. What is material? See, at a branch level, 1 lakh rupee may be material. But do you think a State Bank of India entire company having 22,000 branches, for that entire company also 1 lakh rupees is material as a whole? No. At a branch level, it's big amount. But as a company whole point of view, it's not a big amount. It's immaterial, negligible. So there is a fraud happened in the branch. One of the particular branch, there is a fraud happened. The fraud happened is 2 lakhs. The branch auditor felt it is a rural branch, a small branch. It is material and pervasive. He gave adverse opinion. But the same 2 lakhs in the entire State Bank of India having a total assets of 20 lakh crore. Total assets of State Bank of India, let us assume 20 lakh crore. Out of 20 lakh crore, do you think 2 lakhs is material? Immaterial. So though branch auditor gave adverse opinion, since it is immaterial, what you can do? You ignore it. You give unqualified opinion on State Bank of India as a whole. So if a component auditor is giving a modified opinion, it is not compulsory for the principal auditor also to modify his opinion. Look at the reason why he gave modified opinion and analyze whether that reason as a whole company point of view also material. If so, then you modify the opinion. Otherwise, leave it. Or you can do one more thing, you know. What you can do, you know, in other matter paragraph, you can mention 10 branch auditors gave adverse opinion. You just mention the fact, that's enough. Okay, but decision making, just because they gave qualified, you also give qualified, that's wrong. They gave qualified, they gave adverse as per their branch level thinking. You should adopt it as a whole company wise. You should think company wise and verify, is it material company wise? If so, only then you give modified. Otherwise, unmodified is enough. Same way with respect to holding company auditor, considering subsidiary company. One of the subsidiary company auditor gave adverse opinion. You know, Reliance Industries Limited, you will shock. Reliance Industries Limited consolidated financial statements is a result of Reliance Industries Limited plus 279 subsidiary companies plus 69 associate companies, and another 14 joint ventures. All of these together only consolidated financials came. And suppose if you think any of these particular auditors gave an adverse opinion, do you think even the Reliance auditor have to give adverse opinion? No. Same way. He may give only from the subsidiary company point of view, it's a big mistake, he gave adverse. But when I combine it, no. Not only that company is there here, along with the 279 different companies, total is there. In the entire 200 and 300 companies total, one company total may be immaterial. So you can ignore. That's how you have to, interpret the opinions of component auditors. How to use his opinion, how to use his work, how to interpret his report. For that reason only SAS 600 has been given. And whenever you are giving audit report on a particular enterprise or a particular statements, which includes information audited by other auditor, if you don't want to take responsibility for that other auditor information, mention that point in other matter paragraph. Such a big length, but understanding, I think you felt very interesting. To best of my knowledge, you would have felt interesting, the stories. So now let's look at the theory of SA 600. So now I think by this time you would have understood definitions. So you see the definitions. Once again, I'll erase all this and then I'll read the definition. Who is principal auditor? Principal auditor is a person, Mr. A. I will substitute with names, Andy. Mr. A is a person who is conducting audit of State Bank of India Limited, which includes 22,000 branches financial information audited by other auditors. Correct, no? Standalone financials. Or Mr. A is an auditor, principal auditor, who is giving audit report who is having reporting responsibility on consolidated financial statements of State Bank of India Limited, which includes 20 subsidiary company financial statements audited by subsidiary company auditors, nothing but other auditors. Now, who is other auditor? Other auditor is a person appointed for giving report on State Bank of India Hyderabad branch limited, which information is again adding in State Bank of India Limited audited by Mr. A, principal auditor. That's how the definition is drafted. Who is principal auditor? He is an auditor with responsibility to report on financial information of entity when that information includes financial information of one or more components audited by another auditor. Then who is another auditor? He is an auditor other than principal auditor with responsibility to report on the financial information of a particular component which is included in financial information audited by principal auditor. What is a component then? Component means it may be a division or branch, or it may be a subsidiary or joint venture or associated enterprise whose information is included in information audited by principal auditor. Correct? No, component means what? That information is added in another information. That is audited by whom? Principal auditor. That's it. Now, when you come to the reporting responsibility, then I will come back to the procedures. Suppose if other auditor gave modified opinion, what is the consequence? If other auditor gave modified opinion, what is the consequence? If the other auditor issues or intends to issue, suppose if the other auditor is thinking to issue a modified report, okay, the principal auditor should consider whether the subject of the modification, why he gave the modification, what is the reason, what is the context, what is the subject, is of such nature and significance in relation to the entity. He gave modified opinion. What is its nature? What is its significance from entity point of view on which principal auditor is reporting that it requires modification of principal auditor's report. Look at other auditor. He gave modified opinion. Now there is a reason, subject, context. Look at that context. What is the nature? What is the significance at entity level that requires? Does it really require modification at entry level? Think of it. So, and then accordingly you decide. Where other auditor's report is other than unmodified. Other than unmodified means modified. Suppose if other auditor gave modified opinion, the principal auditor also document how he dealt with the qualification and adverse remarks contained in other auditor. Okay, other auditor gave some qualified or adverse, no? How you dealt? You considered it, no? How you dealt? If you ignored, how you ignored? Why you ignored? Hey, he gave adverse opinion in branch, but you ignored, saying it is immaterial. Why? Document the reasons whenever, whatever you consider. You know, this is a requirement to report under 143 subsection 3 clause C. I will come to that later. Don't worry. Don't worry. Suppose if the other auditor work cannot be used. Oh my God, you did not get other auditor report. You didn't get. And the time is over already and you are about to give final audit report on the entire company. And you did not get other auditor's report. and principal auditor has not been able to perform sufficient. Okay, he didn't give report. You want to go and do the audit, but that also not possible because you don't have time or you don't have resources. Something is some reason you cannot verify the component data regarding the financial information of the component audited by other auditor. Then principal auditor should express a qualified opinion. If it is the branch you have not audited, no, you did not have information, you did not have evidence not obtained for a particular branch, and if at all you think possible effect, qualified opinion definition I'm thinking, you did not get. See, with respect to branches, what is the evidence for the main auditor? Audit report is the evidence. That itself is not there. And you did not perform any procedure there, you did not conduct any audit there. Ultimately, with respect to the branch, do you know anything? Nothing. And if you think it is material but not pervasive, qualified opinion. If you think that branch plays a material and pervasive role, disclaimer, because you don't have data. You don't have data. You did not get report. You did not audited. You don't know whether the information is true and fair or not. And that is material and pervasive. For a material and pervasive item, you don't know what it is. Is it right or wrong? You don't know. In such a case, how can you give opinion? Disclaimer of opinion. Because you were not given the other auditor report, which is a limitation on your powers and scope of the audit. Suppose if such component, where you did not get audit report, if the branch is there, you did not get audit report, if it is immaterial, maybe it is one audit report or aggregate of 10 audit reports, all of them together immaterial only, ignore it. It's an exception, ignore it. So that's about this one. And still in the standards, little more content is there, but before I go with that, I would like to show you State Bank of India other matter paragraph. State Bank of India audit report. This is State Bank of India audit report. If you observe State Bank of India audit report, and this is consolidated financial statements audit report. This is consolidated financial statements auditors report, and I will also show you Reliance Industries audit report also. Okay. State Bank of India, and you see here independent audit reports title and addressee to the board of directors of State Bank of India. Okay, generally we can even here mention to the members, nothing is wrong. Report on consolidated financials, very good. We have audited the consolidated financials of State Bank of India comprising balance sheet, P&L, cash flow, notes, all that. Okay, and before I read these points, I would like to first move to other matter para. Yeah, other matter paragraph. Okay. So what are they saying in other matter para? Incorporated in these consolidated financial statements are, in the consolidated financials, we incorporated something. What? We along with 13 joint auditors. We along with 13 means how many joint auditors? 14 joint auditors. These 14 joint auditors are auditors for branches or head office or for entire bank. Entire bank. Did not audit the financial statements of 9,169 branches included in the standalone financials of the bank. So they're talking about standalone financials. Okay, the State Bank of India have prepared standalone. In that standalone, 9,169 branches related data is included. That particular branches related data we have not audited. Whose financial information reflect? How much it reflects? Total asset of 30,87,000 crore. Total revenue of 1,20,000 crore. Yes or no? And the financial statements of these branches have been audited by branch auditors. With respect to standalone financials, in that standalone financials, 9,000 branch related data we have not audited. That 9,000 branches are audited by branch auditors whose reports have been furnished to us. Their reports were given to us. And in our opinion, so far as relates to the amounts and disclosures with respect to these branches is based solely means purely on the report of branch auditor. We are giving on standalone financials opinion, right? Our report on that is purely based on branch auditor's report. Indirectly, by mentioning this point, what am I saying? Look, though I am signing here, doesn't mean I'm responsible absolutely for the entire financial information. Out of the financial information, standalone financials, 9,000 branches, branch auditors are responsible. Second point you see. Now this is consolidated financials, right? Subsidiary companies point also should mention. We did not audit the financial statements of 27 subsidiaries, 8 joint ventures, whose statement reflects 2,60,000 crore assets and 69,349 crore revenue, which are considered in the consolidated financials. The consolidated financial statements also include group share of net profit 2,948. Total net profit of 2,948 is others, not companies only. Okay. These financial statements, which one? Subsidiary companies, have been audited by other auditors, means subsidiary company auditors. Subsidiary company auditors are principal auditors for subsidiary company, but from holding company point of view, other auditors. So these financial statements have been audited by other auditors whose reports have been given to us by the management, and our opinion on the consolidated financials, our opinion on the total consolidated financials, however, insofar as relate to amounts and disclosures of subsidiaries with respect to subsidiary amounts and joint ventures, is based purely on the reports of other auditors, subsidiary company auditors. Though I am saying consolidated balance sheet, the consolidated balance sheet I signed, the total asset includes subsidiary company asset value also. That asset value I am signing, no, true and fair, that is purely based on his audit report. I think you would have understood, though I am repeating multiple number of times for making you understand more and more clearly. I hope you are able to digest what I'm saying. I will appreciate very much after you listen to this particular video. If you reply me on a Telegram, I'll appreciate very much because I understand it. Okay. That's it. And further, oh my God, we did not audit the financial statements of one subsidiary. Sir, already subsidiary company point here it is there, no? So State Bank of India is having 28 subsidiaries, 27 subsidiaries were audited. One subsidiary was not audited by anybody. So that point is they are mentioning. We did not audit financial statements of one subsidiary and whose financial statements have not been audited by us, and these financial statements are unaudited. So in the consolidated financials, State Bank of India holding company plus 28 subsidiary companies data is included. Out of 28 subsidiary company data, 27 subsidiary companies report only received. One subsidiary company report not received. Why? Because it is not audited. So in the consolidated financials, out of 28 subsidiary companies, one subsidiary company is not audited, another subsidiary company is audited. So here, if you see, the main auditors of State Bank of India, in their audit report, they are mentioning for 27 subsidiary companies, we based on their report. For one subsidiary company not audited, then how did you give the opinion? How did you give the opinion? These financials are not material to the group. So even if the audit report is not there, we ignored it. That much information you have to give. Imagine the level of expectation from you. Imagine at the level at which the audit knowledge is expected from you. If you are having this kind of knowledge, no, you can easily reach to top level. If you're only good at working, no, you will be in the working level only, execution level only. Decision making level you will go only if you have absolute command on in-depth concepts. So with this, I indirectly covered other matter paragraph SA 706 is over, and I also covered division of responsibility when the principal auditor is using the work of other auditor, where other auditor may be a branch or division auditor in the context of standalone financial statements, or where the other auditor may be the subsidiary company, joint venture, associate company auditor in the context of consolidated financial statements point of view of principal auditor. It's like tongue twister, no? Yeah, if you understand the concept thoroughly and if you understand the terms, no, I think you can also say like me the definitions very easily. Okay, you can also very fluently say the definitions very easily, reproduce it easily. I never mug up, I only understand. And that's why I can easily say all the terminology, whatever the sentence, whatever the context, I can easily give direct speech, indirect speech, any speech I can give, only because I understand. If you ask me to speak about a general English, it may be difficult for me, but this is something which I understood very thoroughly. And next, Next. So now we have still few more points which are pending. So in SA 600, you see preface, if you observe the standard, when auditor delegates works to assistants or uses work performed by other auditors and experts, I am the one who is signing the balance sheet ultimately. No, he will be continue to be responsible for expressing his opinion on financial. So since I am the one who ultimately signed, my article assistant did a mistake or I expert did a mistake, because of them only I was caught. Sorry, you can't take all that. You are the one who signed, ultimate responsibility is yours. However, he will be entitled, means eligible, to rely upon work performed by others. When others are performing work, you are eligible to rely, provided he exercises skill and care and is not aware of any reason to believe that he should not have so relied. I should have not relied. That kind of incident you didn't come across. I unnecessarily trusted him. That kind of incident you didn't come across. So you relied him. So that's what. In case of independent statutory appointment to perform the work, when an independent auditor is performing the work on which auditor has to rely on information, in such a case, example, work of branch auditors, the auditor's report should expressly state the fact of such reliance. Audit report should clearly mention that point. When I'm relying upon the other auditor who is statutorily appointed, in such a case I can rely upon him, I can mention about it. Suppose if a company is having internal audit and I am using internal audit data and gave opinion. Tomorrow if something goes wrong with respect to internal audit, no, I can't say he is responsible, because internal audit is not a stat audit. He is part of management. But in case of branch audit, he is a statutory auditor. He is also having responsibility. So I can trust him. One statutory auditor can trust another statutory auditor. But a stat auditor cannot trust internal auditor. You can trust him, but you cannot make him responsible because he is not signing. Whereas in case of branch audit, he is also signing audit report and you are also signing. So both are signing, you can trust. Now division of responsibility. So coming to the division of responsibility, as I already told, principal auditor is not responsible for branch auditor's report. Holding company auditor giving opinion on consolidated financial statements is not responsible if some mistake is there in subsidiary company data which is audited by subsidiary company auditor. The principal auditor would not be responsible in respect of work entrusted to the other auditor, except in circumstance where you got some doubt. Unless you got some doubt, you expressed it and still negligently you eliminated and proceeded with. In that case, maybe under negligence reason they will blame you. When principal auditor has to base his opinion on the financial information of entity, which may be standalone or consolidated as a whole, relying upon the statements and reports of other auditor, then his report should clearly state the division of responsibility for financial information of entity by indicating extent to which financial information of components are audited. You see in the other matter paragraph of State Bank of India, extent to which 30 lakh crore worth of revenue, 1,20,000 crore worth of revenue and 30 lakh crore worth of assets were audited. So extent to which information is audited by other auditors have been included. Example, number of branches or components or turnover data about branches or components you can mention. Clearly you have to mention. After our session, you have to once again read division of responsibility clearly. Okay. Then acceptance of principal auditor. What is this acceptance of principal auditor? Generally, in real life, you will understand based on your agreement, terms of appointment. You will understand whether you are a principal auditor or other auditor. Suppose if the appointment letter says you are appointed as an auditor for the company, you are the auditor for the company as a whole, and for a particular branch another auditor was appointed, he is a branch auditor. Or if the appointment letter says you are appointed as an auditor for branch A of so and so company, means you are only branch auditor. Suppose if the appointment letter do not contain anything, how do you know whether you are a principal auditor or component auditor? When you can accept yourself as a principal auditor, logically speaking, what should be the qualities of principal auditor? What should be the qualities? What is expected from principal auditor? the auditor should consider whether his own participation is sufficient to be able to act as principal auditor. You alone, your alone participation, your own participation, is it enough to call yourself as a principal auditor? Example, materiality of the portion of financial information that you're auditing. You're going to give opinion, right? Are you going to give opinion on the total financial statements of the company as a whole, or are you going to give only on the part of the financial statements? That is one factor. Based on that, you can understand about yourself whether you are a principal auditor or other auditor. And your degree of knowledge regarding businesses in the components. How much knowledge you have? Do you only know about the component data? Are you with only responsibility of component, or you must aware of all other components and their businesses, their functions and all? What is your duty here? Risk of material misstatement in the financial information of components audited by other auditor. In order to prove yourself as a principal auditor, you must understand the risk of MMS in other auditors' component. What is the possibility of risk in other auditors? What is the possibility of risk in components which is audited by other auditors? And what is the performance of additional procedures as set out in the standard regarding components audited by other auditor, resulting in principal auditor having significant participation in that audit? How far on branches you are performing audit? How far on branches? Suppose your major performance on branches only, then you are a branch auditor. No, yours is not the significant portion in the components. For components, significant of the work is done by them. You are only sometimes visiting there. Then you may be a principal auditor. But I'm telling you, this is a stupid question. Acceptance of principal auditor is a stupid logic. Why? Today appointment letter will be very clear. The appointment letter will say whether are you a principal auditor or not. You need not decide and accept. Management will accept and send you already. They will only decide it. You are not here for decision making. Are you a principal auditor? I'm a State Bank of India. Suppose send me an engagement letter. Appointment letter. I will not be thinking, am I auditor for the entire State Bank of India or already for a branch? Don't think of it. Read the appointment letter clearly. You'll understand. You need not accept or reject. Okay. You will understand based on that. Suppose if your company is appointing you principal auditor, as a principal auditor, you see whether how far in these 4 points you are fitting. You fit yourself. If you are fitting in all the 4 points, getting it? Yeah, you may be a principal auditor, you are eligible, you accept the appointment and proceed. If you think you don't have knowledge of components, you think it is difficult, or you think that much portion of the financial statements you can't audit, or you think you can't relate them, you have to go and perform so much of their work also. If you think you don't have the capability, don't accept as principal auditor. Tell the company, reject the appointment. But I'm telling you, that's a very, very, very rare scenario that won't come in reality. Note, this is not required. This is not required. This is already repeated. Already in the first point, it is already repeated. In this, it is already repeated. So this note point you can take off. So now tell me, okay, now you are a principal auditor. There are other auditors. What you do as a principal auditor? What is your duty? What you will do? In the capacity of principal auditor, what you do? I know you do audit of holding company, or you do audit of head office, all that. Branches and all they will do. But with respect to branches, what you do? You are a principal auditor. With respect to branches, what you do? Do you talk to other auditors? Will you talk to other auditors? Or you do your own work? Once they send you the report, you just combine it and then give a single report. What you do as a principal auditor? What you do? What are the additional procedures you have to do? Because you are a principal auditor. See, in a family, everybody is a member. But head of the family will have certain additional points, right? Similar way, they are asking this. The principal auditor should perform to obtain sufficient appropriate evidence that work of other auditor is adequate. You have to get an evidence that, okay, other auditors are working correctly. They are doing sufficient appropriate audit procedures, all that. Now again, you may get a doubt. As soon as you see this, and sir, why principal auditor has to see their work, sir? They are also CAs and COP. Their opinion you can rely. No. If something goes wrong, they are only answerable. No. The standard, whatever they are saying, is only a precautionary measure. In reality, especially you take a bank, principal auditor will never look into other auditors' work. He will never look into. Okay, but the standard says the principal auditor has to get sufficient appropriate evidence whether the work of other auditor is adequate for the principal auditor's purpose in the context of specific assignment. For a particular bank audit I'm doing, whether branch auditors, the way they work, the work they're carrying out, is it right or not, is it enough or not, I must check out. When I am using the work of another auditor, the principal auditor should ordinarily perform the following. Whenever I'm using his work, I will perform the following activities. What? I will advise other auditor use that is to be made of the other auditor's work. How I am going to use his work, I will make him understand. Dear other auditor, look, you are only responsible for the branch. If you think your report is not issued to the public, my report is what issued to the public, and you are negligent in performing your duties, subsequently you will only be responsible. Remember, you have to make him understand that fact. So how his report is made use by me, I will use your report. At the same time, I will mention in my audit report that my opinion is based on your report, which means I am going to blame you only. You have to make him responsible. You have to make him understand what is his duty, understand what is his role. So the advise the other auditor of the use that is to be made of other auditors' work, how his work I am going to use, and report and make sufficient arrangements for coordination of efforts at the planning stage. I should do this immediately at the planning stage itself. As soon as I and they were appointed, we all should have a meeting, probably an online meeting or probably a meeting through management. I will communicate management will communicate. I will give a single letter to the management. See, other auditors are responsible absolutely for their branches. I will give opinion on the whole company based on their reports. If something is wrong in that particular branch, they are only answerable. Please communicate this to them. Management will communicate. At planning stage only you have to communicate. Further, I analyzed entire about company, right? I know what are the complexities in the entire company, right? Maybe similar complexities or similar threats, similar risk factors are there in branches also. I don't know. So I can advise other auditors. I can give guidance to other auditors. Dear other auditors, I don't know how far you looked into the company affairs, branch related affairs, all that. But as far as my knowledge, in this company, sales, there are so many risks. In this company, trade receivables, there are so many risks. When you are doing audit, please focus on that area more. I can instruct them. Second point, the principal auditor would inform other auditor matters such as areas requiring special consideration, procedures for identification of intercomponent. I can also tell them these are the areas: purchases, specially you focus; sales, specially you focus; intercomponent, head office with branches, you give special attention in reconciliation, which may require disclosure and timetable for completion. I can also tell them, see, only if you give your audit report, I can give my audit report. So finish audit within next 25 days, finish audit by April 10th, finish audit by April 20. So these kind of instructions I can pass on to them. Further, suppose I'm doing audit of a company, not a bank, and to this company, CARO is applicable. And I am not the auditor for the entire company. Actually, I am the auditor for the entire company, but for some branches, branch auditors are there. I don't know whether branch auditors are aware of applicability of CARO to the company or not. As per CARO, if CARO is applicable to a company, it is applicable for branches also automatically. And if a branch is audited by another auditor, that other auditor has to give CARO report. Now I am a principal auditor. I know to this company CARO is applicable, but I don't know whether the branch auditor knows it or not. So what should I do? Dear branch auditor, further to the above, timetable for completion of audit, special aspects, please understand to this company CARO is applicable. When you are sending me your audit report, you should also forward me CARO also in that. Don't forget. I should reply. So the principal auditor should advise the other auditor significant accounting, auditing, reporting responsibilities and obtain representation as to compliance with them. I will get a declaration from other auditor. Dear other auditor, for this company CARO is applicable. Please give me a declaration that you have checked the CARO points and all. Yeah, give me declaration. I can take a declaration. So this question can be asked in exam for 4 marks. This question, write about principal auditor's procedures in the context of SA 600. They can ask a straight question, write about principal audit procedure. You just have to write the first point. Second, third point, fourth one, not much required. Second point is what? The principal auditor might discuss with other auditor the audit procedures applied or review of written summary of other auditors provision. Whatever the work he did, I may review his work, or I can advise him how he has to work, all that. And if at all he is having any findings, no, if he found something in branches, no, yes or no, or I can get information from him in the form of questionnaire or checklist. I will send him set of questions. He just have to answer and send me back. These are all optional. These are all optional. The principal auditor, if possible, may also visit the other auditor. I can go and visit and consult him. That is also I can do. And nature, timing, extent of these procedures, the above, whatever I said, no, when should I communicate him? How much time I can communicate with him? At what time? How should I communicate? All that depends upon circumstances of the engagement. For a bank, I generally don't do. But for a normal company, branch auditor is there, I may do it. The principal auditor's knowledge of professional competence of other auditor. If I think he is professionally competent, I will not much involve him. I will not much compel him. He will do, he knows it. Suppose if I think other auditor may not be that good at professional competence, he is just a new entrant in the market, then I may regularly interact with him. That's it. These are other auditors' procedure. But if in exam a question comes, only the first point if you write, that's enough. Write about principal audit procedures in the context of SA 600. You just have to write first point, inside that sub points A, B, C. For your easy information, I just gave side headings also for the sake of easy recap. That's it. So how coordination should be there between principal auditor and other auditor? There should be sufficient liaison, sufficient relationship, sufficient coordination between principal auditor and other auditor. For this purpose, principal auditor may find it necessary to issue a written communication. Okay, so like there should be a good channel of communication between them. So I may issue a communication to them. What will I mention in communication? First I will introduce myself. Then I will explain him. You have to verify, oh, these are all the items. You have to specially focus on these items. And you have to follow these reporting requirements. If at all you are having any trouble, you can consult me through so and so channel. I should give first written communication. So coordination should be very, very flexible. The other auditor, knowing the context in which his work is used, now other auditor, no, after communicating with him, he will understand how his work is going to be used by me, should coordinate with the principal auditor. Correct? No? Now he understands how his work is going to be used. Now accordingly he has to plan how to work with me. For example, bringing to the principal auditor's attention any important findings to be dealt at entity level. Suppose at a branch he found one transaction which is like a head office branch versus transaction, which is a major transaction, which is fraud. He should immediately bring it to my attention because that is an amount which is affecting overall company wise. And adhere, other auditor should obey the timetable for audit of component. I told him to finish the audit within so and so time frame. He should try to obey that. And other auditor should ensure compliance with statutory requirements. I told in the communication already, these are the reporting responsibilities. Principal audit procedures, above para. Principal audit procedures, I will advise him what are the accounting, auditing, reporting responsibilities. He should comply with that. Similarly, principal auditor also advise other auditor any matters that comes to my attention, and if I think it will have important bearing on the other auditor's work. Suppose if I come to know about a particular branch related thing, some fraud, I should intimate him. He may know or he may not know. He would have observed, he would have not observed. So I should observe. So the coordination should be, first principal auditor send a formal communication to other auditor about introducing himself, timeline, planning, everything. Then other auditor, whatever, after understanding his role in the overall company audit, should communicate with the principal auditor any important things. Same way, principal auditor should communicate other auditor any important things useful for him. When considered necessary by him, if the principal auditor thinks it is necessary, he may require other auditor to answer a detailed questionnaire regarding matters on which principal auditor information for discharging his duties. If at all I want some other information from branches, I can send a big list of questionnaire. I can send a document in that it will contain some questions. Excel sheet or some SWOT to copy. They will fill it and send me back. If you observe here, 2, 3, 4 points are there. No, same is explained here actually. Here 2, 3, 4 points. What you can do is you can strike off here. You can strike off here. You can strike off here and you can put it as coordination below. You can. So they may ask you a straight question on this. Write about coordination between principal auditor and component auditor as per SAS 600. Straight question which can also be asked for 4 marks to 6 marks. That's it. Now what is your responsibility? My responsibility, I did. Your responsibility after watching this video, close the book and sleep. No. Okay, if you want to sleep, you sleep. But after some time, today only, as soon as you watch this video, immediately read the standard word by word, word by word. 3 times you have to read. 3 times you have to read. Please read 3 times. I'm telling you, later on you need not require to read. Only this standard I'm asking you. Till now, we have covered so many topics. Did I ask you to read these many times? No. But this standard I'm asking you because this is important standard. Moreover, little crux is there in terminology. The terminology is little tough. Enough. Fine. Okay. Principal audit procedures we understood. Coordination point also we understood. Principal auditor should tell the other auditor how his work is going to be used, and I should tell him what are the areas where special focus he should give. I should tell him what are the reporting responsibilities applicable and get a declaration that he is satisfied with that. Then how our coordination should be, first I should give a written communication explaining him what is his role in the company and what is my responsibility in the company. Then accordingly, once he understands his responsibility, he will share me any important information useful for me, any findings useful for me. He will comply with the timetable I sent. He will comply with all the reporting requirements which I told in audit procedures. Same way, I should also tell him any important matter that affect his branch. If possible, I can send him a questionnaire and ask him to fill it and send me back. Now, suppose if other auditor found significant findings, some important findings he found, some frauds he found, what? The principal auditor may consider it appropriate to discuss with other auditor and the management of the component. That branch management is there. No, with that component I can discuss the audit findings or other matters affecting the components. These branch auditors, no, they went to components, they found some frauds and errors and lapses, some internal control weaknesses and all. Some problems are there in branches. Now these people have communicated to me because I sent them a questionnaire. In the questionnaire they answered me. I found so many findings. What I can do? I can go to the branch, sit, ask principal or ask other auditor, management to come, and I will discuss with them. And if needed, he may, means principal auditor may also decide to conduct supplementary test. I can go and test the records of the component if needed. Okay, such test, no, it may be performed by me or I may ask other auditor to perform. Okay, you saw me, you showed me these findings, no, have you checked that? Okay, if not, check it right now. Supplementary test can be ordered by me or I can go and perform it. And finally, I should document. What are the things the principal auditor should document? The components audited by other auditors. 9,000 components are audited by other auditors. Significance to the financial. 30 lakh crore worth of assets were audited by 9,000 auditors. Names of the other auditors. I will ask the bank list of branch auditors. Any conclusions reached that individual components are not material? Yes, if you remember State Bank of India, one subsidiary company is not audited and I felt immaterial. Why you felt immaterial? Reasons you record. The principal auditor should also document the procedures performed and conclusions reached. What I performed with respect to branches, I communicated them, I gave them a representation from my side, and I asked them to complete the audit within so and so time, and I directed them what are the reporting requirements, and I communicated what are the points useful for them. All that I will document. That's it. And with this, the SAS 600 standard is completed. With this, the standard SAS 600 is completed. If you observe, I spent 1.5 hours on this standard. I almost spent 1.5 hours on this standard. I don't know how many of you now digested the concept and understood how important to have an in-depth knowledge. I think now you're clear. By the way, where are we at in the audit report? Forgot, SCI 706. I will once again open the audit report. Don't worry. We are at right now, where we are at? We are in SEA 700 actually. We are discussing contents of audit report. We are discussing contents of audit report. Don't worry, right now I'm going to revise whatever we discussed till now in audit report chapter. Huh. You see this? Contents of audit report. Title. How title should be? Independent auditors report. I'm going to use a highlighter. Okay, I'll use a different highlighter. Yeah, green color I'll use. Title we discussed. Independent audit report. Addressee to the management. General purpose financials to members we will mention. Special purpose financials generally board of directors will request, so to board of directors. Opinion. We know unmodified, modified. Unmodified. If financial statements don't require any modifications, they can be issued as it is, unmodified, which means they are free from material misstatements plus applicable financial reporting framework is followed. How do you know? Based on sufficient appropriate evidence. Or modified. If you think financial statements are not free from material misstatements, or you're unable to get the evidence to say that they are free from material mistakes. And modified opinion is of three types. Qualified, adverse, disclaimer. Qualified means everything is fine except. Adverse means majority, pervasively it is wrong. Disclaimer, I don't know. I did not get any evidence. I'm unable to obtain sufficient appropriate evidence. So I'm not in a position to give opinion. So I am disclaiming of the opinion. Then basis for opinion. Whenever you are giving opinion, you have to give reasons why you gave that opinion. Generally, if you give unqualified opinion, in basis for opinion, we just mentioned we do audit as per standards. Our responsibilities under those standards are further given in auditor responsibility section of our report. We are independent of the company. We comply with code of ethics. We believe that evidence we got is sufficient and appropriate. Suppose you are giving qualified opinion. Why you gave qualified? What is the specific reason you should mention? What if that mistake is not there? Impact, revised impact is what? Quantification is also important. If quantification cannot be done, mention that it cannot be determined. And adverse opinion also you should give reason. Disclaimer also you should give reason. Next. Then we discussed about emphasis of matter paragraph. For this we first saw ILFS auditors, ILFS financials. We understood since it is 120 pages, who will read? There are so many important points. That important points if you want to highlight in the emphasis of matter para. Other matter para, if you want to give some information which is not there in the balance sheet P&L. Example, you want to talk about branch auditors responsibilities and you want to say that you are not responsible with respect to branches. Then which paragraph you will use? Other matter paragraph. That's it, we completed. And when we are discussing other matter paragraph only, SA 600 branch audit, everything came into picture. And when we are discussing SA 706, we also covered simultaneously 600. That's it with the session. And in our next session, I'm also going to discuss SA 299, which is an extension to 600 for me. For me, 600, 299 are equally important, similar to each other. In 600 branch auditor we are talking about, whereas in 299 I'm talking about other audit, joint auditors. In both the cases, division of responsibility is there. So 299 I will talk in the next session. With this session I'm completing, I'm closing it. I hope you thoroughly enjoyed. I appreciate really if you give feedback on this particular session, because this is one of the toughest topic which I cracked in nuts and pieces and fed you. That's it. Carry on, take rest, wait for the next session. Bye-bye. So, welcome to the fourth session in the auditor's report. And till now, if you observe in the previous 3 video sessions, what are all that we have completed? We started with discussion about audit report, and we understood that there are certain elements of audit report, and we completed element called title. Then we completed addressee. Then we understood opinion, and there we understood there are 2 types of opinion, modified and unmodified. Unmodified opinion is dealt under SAS 700. SAS 700 heading is forming of an opinion and reporting on financial statements. And then SAS 705 we discussed modifications to the opinion in the independent auditor's report. Then we came to emphasis of matter para and other matter paragraph in the independent auditor's report, that is SAS 706. When we are discussing about emphasis of matter paragraph, we understood how that paragraph is used in the context of expressing division of responsibility by the auditor, especially in case if the auditor is using the work of a component auditor, in case of standalone financials or in case of consolidated financials. Nothing but SES 600 we discussed in detail. Now let's discuss, let's move on our discussion to the next one, SEA 299. SEA 299, responsibilities of joint auditors, or you can also say, I mean the standard heading actually, if you see, joint audit of financial statements. The standard heading is joint audit of financial statements. So along with 600 only we have to discuss this, because there is an interconnection here. Even in SEA 600, principal auditor is using another auditor's work, whereas here multiple auditors working together. So that is a process called as joint audit. So what is meaning of joint audit? What is meant by joint audit? The meaning we need to decode it correctly. Appointment of two or more than two auditors. Appointment of more than two, the process of appointing two or more than two auditors is called as a joint audit. The definition is so simple, but we need to understand it in a thorough manner. What is not joint audit also we must understand. What is not a joint audit we must understand. What is joint audit? Fine, definition is there. What is not a joint audit we must understand. Suppose a company appointed ABC & Co Chartered Accountants firm. A firm of chartered accountants were appointed, ABC & Co. Now to this company, our company name is, let us assume, X Limited. Mr. A and Mr. B, both of them are chartered accountants. Both of them are coming and doing the audit. Since two auditors are coming and doing the audit, can I call this as a joint audit? No, this is not a joint audit. Here the auditor is the firm itself, not the partners. Whether all the partners are coming and doing or only one partner is coming and doing, it will be treated as only one auditor is coming, because the auditor is here the firm. So it is not a case of joint audit. Then we have appointed Mr. A, an individual who is a practicing chartered accountant, to conduct tax audit of our company, and we have appointed Mr. B, another chartered accountant, separately we have appointed for conducting company audit of our company under Companies Act. Now since two auditors were conducting audit, can I call it as joint audit? Can I call it as joint audit? No, I cannot call it as joint audit. Why? Because Mr. B scope of work is different. Mr. A's scope of work is different. Mr. A is appointed under income tax law, and his purview, his reporting requirement is different. Mr. B purview, his reporting requirements are different. Okay, fine. Let us modify this example. Mr. A is appointed for the company. Mr. A is appointed for the company and not for the entire company. One of the branch, let us assume branch 1 he was appointed. Mr. B has been appointed for branch 2 of the company. Branch 2 of the company. None of them are the company auditors. Company auditor, there is another one. Mr. C is there. He is the auditor for the entire company. Mr. A is the auditor for branch 1. Mr. B is audited for branch 2, whereas Mr. C is auditor for the entire company. Now, since three auditors were appointed, can I call it as joint audit? Again, no. Why? Because C is having entire company under his scope, whereas Mr. A is having only branch 1 in his scope, whereas Mr. B is having branch 2 in his scope. So they are not working together on a common purpose. Understand? Mr. B's scope of work is different. Mr. A's scope of work is different. Mr. C's scope of work is different. It is not a case of joint audit again. Okay. Then Mr. A is appointed as an auditor for X Limited entire company, and we have appointed BCD & Co Chartered Accountants also for conducting audit of X Limited. Now can I call this as joint audit? Absolutely yes. Absolutely yes. Now if you observe, we have appointed a sole proprietary firm and we have appointed a partnership firm simultaneously for company, assuming for same financial year 1920. Even if the financial year changes no in the scope, it is not a joint audit. If Mr. A and firm, this firm BCD and Co, if both of them doing audit of same company for the same financial year, then only we call it as joint audit. I hope now you understood what exactly joint audit means. In order to call a particular number of people conducting audit, in order to refer it as joint audit, there must be common scope of work, there must be common financial year. So only then we can refer it as joint audit. Otherwise the concept of joint audit will not come into picture. Fine, very good. If you observe, if I take an example of State Bank of India itself, State Bank of India Limited, you know, State Bank of India has 14 joint auditors. You know, Reliance Industries Limited have 2 joint auditors. Almost many big companies, they have a practice of appointing joint auditors. Especially in case of banks, especially in case of overall central statutory auditors. In case of banks, no, we call it as central statutory auditors. Total auditors are called as central statutory auditors. They are generally joint auditors. Okay, sir, understood the meaning of joint audit. Now, what is the significance of this standard? Why are we learning this standard? Okay, 2 or more than 2 are doing fine. Why are we learning this standard? See, when joint auditors are appointed, how do they work? How do they work? Option 1, I'm explaining you option 1. How do they work? Will they work in this option 1 or option 2? I'll give 2 options, you have to select. Option 1, first joint auditor A, he will visit the company, completes the audit and come back. Then joint audit B will visit the company, completes the audit, and joint auditor 14 will visit the company, complete the audit and come back. Now all 14 of them, they have completed the audit of the entire company 14 times, they finally discuss. No, this is not joint audit. This is not the reason why joint auditors are appointed. The reason why joint auditors are appointed is in order to reduce the work burden. A very big enterprise like a bank, if at all we appointed only one partner, only one auditor, maybe he may not focus on all the areas of company at the same level of attention and quality. So the audit quality will be compromised. So we don't want compromise in quality of audit. We don't want to burden him completely. So let us appoint few more auditors. Let us appoint few more auditors along with him, so that these joint auditors divide the work. Understand? They divide the work and do the work. Sir, how joint auditors divide the work? On any basis they may divide. Suppose tomorrow for a particular company, you and me were appointed as joint auditors. We 2 of us are joint auditors for a particular company. In such a case, how we can divide the work? We can divide the work on the basis of time. Yes, we can divide the work on the basis of time period. Example, you will be doing 6 months audit, I will be doing 6 months audit. Just example. Or we will be dividing the work based on geographical area of the company. Suppose if the company is a pan-India company, it has almost branch in every state. It has operations in every state. Okay, we'll do one thing. You do north region, I do south region. You do east region, I do west region. So I may divide based on geographical locations. Or we may divide based on items of financial statements. We may divide based on items of financial. So what do you mean by that? I will do assets and income. You do expenses and liabilities. On this basis also we can divide. Or we can also divide on the basis of identified units. We can also divide on the basis of identified units. You do audit of branch 1, 2, 3, 4, 5. I do audit of branch 6, 7, 8, 9, 10. Anyway, I can divide the work. Or I can use mix of all this. Suppose if you look at State Bank of India, 14 joint auditors are there, no? Out of 14 joint auditors, 4 auditors are looking at northeast region completely. They are taking care of complete northeast region. Remaining 10, they are dividing the work like south, east, west, all that. Any combination they can do. That's their wish. All joint auditors sit together and jointly develop an audit strategy and audit plan. It's their responsibility. So joint auditors will divide the work and execute the work. It's not that every joint auditor will work on everything. They divide the complete work and then do it. Now here you may get it out. Sir, when you say joint auditors are dividing the work and doing it, don't you think if one joint auditor do a mistake, it will affect the other joint auditors also? Let us assume one joint auditor is not exactly verifying, sir. He is very negligent and he did not properly conduct the audit. And because of this, tomorrow if something goes wrong, other joint auditors may affect, right? See, in case of division of work, you know what is also there? Division of responsibility is also there. The moment there is a division of work, there is a division of responsibility. So whenever there are joint auditors, both the division of work is there, division of responsibility, both are there. So joint auditors are responsible. What is the responsibility of joint auditors? How joint auditor is liable? Joint auditors are liable only for the work allocated to them. Only for the work allocated to them they are responsible. They are not responsible for the work performed by other joint auditors. Further, sir, do a joint auditor has to review the work of other joint auditors? Like, first joint auditor review the work of remaining 13 auditors. Second joint auditor will review the work of remaining 13 auditors. 14th joint auditor will review the remaining 13 auditors. Will it? No. Joint auditors need not review the work of other auditors because all of them are competent people. All of them are CS with COP. All of them are knowing, well aware of their liabilities if something goes wrong. So joint auditor need not review the work of other joint auditor. Sir, does it mean, suppose I did purchases and liabilities, sir. For me it is true and fair. Another joint auditor is coming and saying me incomes and assets are true and fair. Now do you mean, can I trust him? Yes, you can. You can trust him. You can rely upon him. Whatever he says, you can rely upon him. Maybe in back end, he would have done something negatively. That's none of your business. You can trust him. Tomorrow if something goes wrong, he will only answerable. Coming to reporting. Sir, now I think 14 of us divided the work. No, 14 of us will prepare a report and come, sir. No. Joint auditors have to prepare a single audit report. Joint auditor have to prepare a single audit report. You cannot prepare multiple reports. Joint auditors have to arrive into common conclusion. Simple. I did purchases and other expenses. According to me it is true and fair. Another joint auditor did liabilities work. For him it is true and fair. Another joint auditor did assets. True and fair. Another joint auditor verified incomes. True and fair. All of us are having true and fair opinion on our own components. No, as a whole also it is what then? True and fair. Suppose a particular joint auditor may have an objection. Suppose a joint auditor who have verified incomes, he is having some objection. He want to give qualified opinion. And all of us want to give unqualified opinion. So we will combine. Okay, you want to give qualified, show me the reason. And we also felt, all of us felt, yeah, it's material reason. Then we will encourage him. Combined report we will provide where we will mention qualification as per his name. Qualified opinion we will give, but his name will be mentioned, not mine. Suppose if majority of us collectively concluded your point is not material. Okay, you said something is wrong in sales, but as a whole company point of view, that is not a material thing. No need of any qualification, no need of any modified opinion. You also come join with us. Let us all give unmodified opinion. We are saying, do you think a particular joint auditor has to follow majority? No, not required. A joint auditor is not bound by majority. Generally, as much as possible, all the joint auditors have to come to a common conclusion. and they have to give a common opinion through a single audit report. But if there is a particular joint auditor who is disagreeing with majority of the joint auditors, this particular dissentient joint auditor, who is disagreeing, can give his separate audit report mentioning his own reasons. In such a scenario, the company will have multiple audit reports. Yes. One audit report is saying unqualified opinion, which is signed by 13 joint auditors. Another audit report is saying qualified opinion or adverse opinion, which is certified by another auditor. So two audit reports are there in our example. Two audit reports we have to issue to the shareholders. Sir, if two audit reports are issued, shareholders should believe which audit report? That's their wish. Why you have to worry? I mean, don't you think shareholders will confuse, sir? Why they confuse? The auditor who is giving negative opinion, no, he will mention reason, no, in basis for qualified opinion, basis for adverse opinion, he will mention reason, right? He will mention reason. Why he gave qualified opinion, why he gave adverse opinion, he will clearly mention the reason. And shareholders will read the reason. If at all people feel his reason is very, very agreeable, they will follow his report. Suppose if a particular investor feels this reason is stupid, he will follow the other report. That's it. And whenever there are multiple joint audit reports, one more important precaution. This joint auditor is there, no, 14th joint auditor who disagreed. He has to mention in his report. Other matter paragraph, audit report of other joint auditors. Other matter paragraph, we draw your attention to another audit report issued by other joint auditors, which is also attached here only. Something he has to refer. He should mention in his audit report that there is another audit report. Same way, 13 joint auditors are there, right? They have to mention in their audit report about this fellow's auditor's report. So we are saying to the shareholder essentially, whenever we are giving an audit report, inside that other matter para, we are also mentioning there is another audit report. But tell me, do you think all this happens in real life? Till date, there are no separate audit reports issued by joint auditors. All the joint auditors give a combined opinion. You know, State Bank of India itself is a live example. I'll show you State Bank of India audit report once again. It will be beautiful. If you see, the State Bank of India audit reports have been signed by 14 joint auditors. It is signed by 14 joint auditors. If you see, this is audit report of State Bank of India, you see here. So these are all joint auditors. And you see, this is the firm name and the partner name. Firm name and 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 partner name. You know, if you observe how many were there? 1, 2, 3, 4, 5. 5 into 2 rows, 2 columns, 10. And here it is not 5, only 4. So 10 plus 4, how many? 14. And moreover, I showed you in other matter paragraph where they mentioned we along with 13 auditors. Means yesterday also in the previous session also I clarified you 14 joint auditors. So the joint auditors are there across. They are coming from across various parts of the country. Of course, various parts of the countries, these joint auditors were recruited. Okay, suppose you take Uma Maheshwar & Co. This is like Hyderabad related firm. Actually, they are having a head office in Guntur. Okay, like you take V. Chandrasekharan, Chennai. You see, almost they're giving Mumbai, Indore, Chennai, New Delhi, and Ernakulam from Kerala, Kanpur, Mumbai, Kolkata, and Hyderabad. Almost from all well-known metro cities, auditors were recruited. So 14 joint auditors. So it's a joint audit report. The report which is given here is a joint audit report. So that's about joint audit. So shall we look at theory first and finish it off what is there in SA 299? Yes, we'll open. So SA 299 will finish it off immediately. Yes, SA 299. So SA 299, actually the old heading I mentioned here, but actual heading is this one, joint audit of financial statements. Joint audit of financial statements is the revised heading. So indirectly what this standard is talking about, this standard talks about responsibilities of joint auditors. So what is the meaning? The process of appointing two or more individuals or two or more firms or two or more a combination of individual and firm. Two different firms essentially, or more than two different firms. It may be sole proprietary partnership or two partnership or two sole proprietors, whatever. So it is known as a joint audit. Advantages, disadvantages you read later on. What is the responsibility? Where the work is divided among the joint auditors on a suitable basis, then each joint auditor is responsible only for the work performed by them. Generally, the work is divided based on the following: items of assets and liabilities, incomes and expenses, geographical areas, identified units, period of financial statements for 6 months, next 6 months, like that. And there are some cases where joint auditors will have a joint responsibility, combined responsibility. If someone asks me what is the responsibility of joint auditor, it is joint and several. At some cases where the work is divided, several responsibilities, separate responsibility, where the work cannot be divided, are certain areas, joint responsibility. Sir, where and all joint responsibility? This alone can be tested as a question. 3 marks question or 4 marks. They may ask you straight away, explain the areas where joint auditors will have a combined responsibility, joint responsibility, where several responsibility cannot be applied. Where the audit work is not divided. If the work is not divided, or decision has been taken by all the joint auditors together for a particular incident, they have to come to a conclusion. Suppose they have to come to a conclusion on which opinion to give. All of them agreed unanimously, unqualified. On unqualified opinion, all of them are equally responsible. Then any matters brought to the notice of all joint auditors. Suppose if a particular joint auditor has knowledge of some particular thing, he has a knowledge of it, there is a proof that somebody sent a mail to this fellow, there is a proof that he has a knowledge of it. In such a case, all joint auditors are, if at all a particular matter was brought to the notice of all joint auditors, all the joint auditors are aware of it, all of them are responsible. And joint auditors are responsible for verifying disclosures in financials. Yes, see, I may not be responsible for conducting audit of every aspect, but the 200 pages balance sheet, P&L, cash flow, notes, statement of changes in equity, every one of us have to go through each word by word. Yes, I cannot, you verify 20 pages of notes to account, I will verify next to, no, it cannot be done. The financial statements, whether disclosure requirements are satisfied as per applicable financial reporting framework, each joint auditor is equally responsible. And not only that, every joint auditor is responsible to ensure that the audit report complies with the statute. Whatever the audit report they are issuing, it is issued as per SA 700, 701, 705, 706. By complying all this only, we have issued audit report. Every joint auditor will have that responsibility. Then, what is the reporting in case of joint auditor? I told you, generally, all the joint auditors, they get into common conclusion, express common opinion through a single audit report, for which we have already seen State Bank of India example. However, no joint auditor is bound by majority. A joint auditor is not bound by majority. If there is a difference of opinion among joint auditors, such disagreeing joint auditor can express his own opinion by a separate report. In such a case, each joint auditor shall refer about other joint auditors' report in their audit report. Under which paragraph we will report? Other matter paragraph of ACA 706. There we will refer. And one more thing, each joint auditor is entitled to rely on work performed by other and need not review work performed by others. Whether it is true or false question or MCQ, you will be able to easily answer if you are having this kind of clarity. And what are the special considerations as per SCA 219? Actually, this was asked in CA Inter. I gave here reference because it is equally important at CA final. Please get a clarity that CA inter questions are not relevant for you. Don't think like that. Your standard and their standard is almost the same with respect to standards. With respect to standards, the standard of discussion is mostly same. Maybe the level at which we take examples for you will differ, but the expectation from the ICI with respect to understanding standards and auditing from you and inter, it is same level. So when I give a reference, it is equally important for you. Getting it? Now, what are the special consideration as per SA 299? What are the special? Okay, fine. What are the special things these joint auditors should take into account? What are the special things? The standard has recently amended with respect to these points. It was amended in 2018. What the standard says, you know, the engagement partner and the key engagement team from each of the joint auditors shall involve in planning the audit. Now, State Bank of India has 14 auditors, right? From all the 14 audit firms, one partner will come and sign. Yes or no? We have seen now in the audit report, each engagement partner from every joint auditor firm, plus if needed, who are the team members? Your engagement team will be there. No, you are in articleship. No, you will go as part of audit, right? As you would have already went along with your partner for particular meeting, initial meeting before starting the audit. You are a key team member. So a key team member plus partner from all the 14 firms, all of them should have a meeting and should be involved in planning the audit. Because no, if you don't plan, if all 14 of them don't sit together and plan, what happens? How can they divide the work? They have to divide the work by mutual consent, yes or no? So in this particular F point, we are what we are learning, you know, we are learning the process of working. Second, all joint auditors establish jointly overall audit strategy and develop overall audit strategy as discussed in SCA 300. So these are the joint auditors, all of them sit together and develop overall audit strategy. Sir, what is overall audit strategy? It's already there in your CA intro, but don't worry, since we also have standards syllabus, we have a separate chapter on that. If you look at the index, we have a separate chapter called audit strategy and planning. There we will discuss what is meant by overall audit strategy. Don't worry. So all of them have to develop. So all of them should involve in planning and develop strategy. And then they have to develop a joint audit plan. So which means what the 3 points collectively says, all of them should involve in planning. First develop common strategy, then develop separate, then first you develop joint audit strategy, then you develop plan. Sir, what is the difference between audit strategy and audit plan? That's a very big discussion which I will cover in audit strategy and planning chapter. That's a very big discussion. In reality, we will not have two separate documents like strategy and plan. We will only have one document called plan, which is also called as program. Okay, so that I will discuss there. Just you assume that all of them should develop common, all of them should together develop what is the strategy to be followed. Then they will develop the detailed plan. So all the joint auditors should develop a joint audit plan in detailed, and the following points shall be kept in mind when you are drafting the plan. What are the points? You must identify division of areas, incomes, sales, joint auditor A will do, purchases, joint auditor B will do, expenses, joint auditor C will do, and common areas shall be listed at last. The areas where joint auditors collectively will do, all of them will do. The areas where joint auditors, all of them will do. I will show you right now how generally a plan looks like. I will show you a normal plan for a normal basic trading company or manufacturing company. I'll show you now. Suppose this is how a plan looks like generally. This is a basic level of plan. This is a basic plan. Okay, I'm not showing you the advanced level. Today the planning formats have changed a lot. I'm showing you one traditional plan format which traditionally accepted even today. This is a well accepted format of plan. See, if you observe here, we are mentioning audit plan, client name, period for which we are doing the audit, nature of engagement, statutory audit, audit commencement date when you are starting the audit, and expected closing, engagement team, partner, manager, senior article, junior article, and paid assistant. And you see, so area, I mean serial number, audit area, who has to do that? duration, for within how many days he has to finish it, and what he has to, how much extent sampling, how much percentage of sample he has to select, and what instructions he have to follow, what is the status of the work. A similar way only joint auditors, here joint auditor A, joint auditor B, joint auditor C, joint auditor D, like that. Then at last, no, here common areas for all the joint auditors will be kept in the last generally. Common areas will be worked later at last generally. And see, this is a audit plan among joint auditors. This is a joint audit plan of all joint auditors. Again, you know, each joint auditor will have his own separate plan with his separate team members. This is an internal plan, and that is not mentioned in the standard, but what happens in reality, I'm just saying you. Okay. Now, so you have to develop a joint audit plan. In that, you have to clearly identify what are the areas that where the work is divided and what are the areas common responsibility is there. Further, reporting objectives also should be ascertained. Sir, what are reporting objectives? I will discuss again in the audit strategy planning chapter. What do you mean by reporting objective? Like joint auditors periodically should conduct certain meetings among them, and they should periodically inform the management of the company status about the work completion, and whatever the queries they are getting, they should periodically interact with the management. The word used is reporting objective, not reporting responsibility. There is a difference between reporting objective and reporting responsibility. When I say reporting responsibility, I'm talking about audit report. When I say reporting objective means communication. Like, you know, suppose you go for audit. Example, in your articles, you would have went for some audit alone, or along with your junior, you would have went. Every day at the end of the day, you will be calling your principal and then informing the status, right? That is called reporting objective. Reporting, we call it as. Your principal would have told you, hey, as soon as you go to the client premises, report me. What is meant by report me? Audit report. No, it's a regular day-to-day communication. That reporting objective. And all the joint auditors in the joint plan, you should clearly mention that significant factors identified with each of the joint auditors shall be communicated among them in such a way. You should put certain dates for it. On so and so days, on once in 3 days or once in 4 days, we all have a meeting and let us discuss any significant points. And preliminary engagement activity. What are preliminary engagement activity? We have a separate question on that. See, these points, no, third point, no, this entire third point, no, actually this entirely is taken from strategy and planning chapter. Completely planning and strategy related terms. There I will discuss more in detail. At that time I will refer back to this. You don't worry. If at all you already understood it, well and good. Actually speaking, you are supposed to understand. Why? Because this you have already covered in CA intro. Then further, each joint auditor shall assess risk of material misstatement and communicate to other joint auditor. You know what is the process of audit actually? You know, now we are actually discussing about audit reporting. What actually happens in audit, you know? What happens in audit is, what is the process of audit is? The process of audit is like, you know, as soon as client appoints me, you know, he will first send me an appointment letter. Then I will send him a formal acceptance letter. Then I will send him, this is client and this is auditor. Then I will send him letter of engagement as given under SA 210. Acceptance letter is just a letter of acceptance acknowledging your appointment. Letter of engagement is about terms and conditions of the audit. What are the terms and conditions? What are my duties? What are your duties? This we are going to discuss in the standards class. So as soon as the client, we send letter of engagement, then the client will have to send a management representation letter. Management representation letter has to be sent in the context of SA 580. He will send us this letter. With this, our initial activities are closed. Now I need to start the audit. If I have to start the audit, I will not directly go to the books of accounts department. I will not go to the accountant directly. First, I have to understand how the organization is working. And that process is called as risk assessment procedure. You know, there is a standard on that. SA 315. What is SA 315? Identifying and assessing risk of material misstatement through understanding the entity and its environment. What we do in risk assessment, see, audit means it's not about like going and verifying arithmetical accuracy of books of accounts, going and verifying voucher amount matching or record matching. No, not that. The vouchers may be actually duplications would have been there. There would have been fictitious. They are fraudulent. Or there are some transactions which are not recorded. How do you identify unrecorded items? How do you identify whether duplication is possible? How do you identify whether dummy entries are possible? You have to identify the sources of frauds and errors. You have to identify whether in this company a fraud can happen or an error can happen, whether it can happen or not, what can go wrong. So we have to do what can go wrong assessment. So that assessment is called a risk assessment. I am identifying risk of MMS, possibility for mistakes, through understanding the entity and environment, by looking at the entity, by walking through the entity, by talking to the people, by applying analytical procedure, by understanding the environment, legal environment, ownership environment, by looking at the environment, I will understand how this entity accounting process will affect. How are the internal controls in the organization? How the entity is protecting the assets? How the salaries are made, how the salaries are paid, how daily workers are being paid salaries in cash. Is there any cash pilferage? Is there any goods pilferage? I need to identify what are all the risk factors in the organization. Once if I understand the company process, how the company works, who are the important people, who will work in what way, what are the sources of errors, what are the sources of frauds, if I understand this, then I can plan the audit. Literally speaking, the audit planning will start only after completion of risk assessment. First thing that we do is risk assessment. As soon as all the formalities are fulfilled, then I will do risk assessment. Then I will come back to my office. I will select my team members, seniors, juniors, all that. Okay, whoever I want to send to that company audit. So I will explain them what are all I found in this company. I will tell him sales, there is a problem. Scrap, they are not maintaining records with respect to scrap. And with respect to daily wage workers, there is a segregation called semi-skilled, skilled and unskilled, but there is no record which is maintained for that. And moreover, salaries are paid in cash, and that is also a source of fraud. I should tell them all of them, and I should allocate them the work. Now I will execute the plan. Once I finish risk assessment, then we'll plan. And once we plan, my team will go to the client premises. If possible, I will also go with my team. They will go and do the field work, and that is called, the field work is called as actual audit procedure. Of course, these are also audit procedures. All of them are audit procedures. All of them are audit procedures. Whatever I'm doing, it's a process for audit. Audit means verify. Procedure means some process. Verification process entirely. What I'm doing is verification process. This is planning procedure. That is risk assessment procedure. This is compliance and substantive procedure. Then my team will go and do all the areas, whatever I tell them. They have to verify sales, other income, purchases, depreciation. They have to verify employee costs. They have to verify finance costs. They have to verify remuneration to the directors. They have to verify other expenses. They have to verify liabilities, long-term, short-term, agreements, secured or unsecured, forms filed or not, charge forms filed or not, assets related data, everything we will verify. Computations we will verify. Accounting standard requirements we will verify. After verifying all of that, then we will have a final discussion. We will have a final discussion where the partner, the team members plus client important staff will present. And in that final discussion, we all come to a conclusion of which opinion to give. And then we will prepare a draft auditor's report and send it to the management. If management objects anything, we will try to sit and resolve. And finally, we will issue auditor's report. And with this, our objective of conducting audit is completed. Once we give audit report, then we have gathered so much of data, right? Working papers. We have gathered so many working papers. We call it as documentation. We have gathered, no, we have to assemble it. We have to assemble it as per SQC, Standard on Quality Control. We have to assemble it, and we have to keep it in our office, in our auditor's office for 7 years. This is what the process of audit broadly. This is what happens in everywhere. So again, coming back to this. So the joint auditors, all of them should assess risk. You know, all 14 joint auditors will do risk assessment. Risk assessment cannot be shared. All 14 auditors will do, because you know the risk which I identify based on my perspective, based on my perception, is different from other joint auditors' perceptions. And all the joint auditors should discuss and document nature, timing, extent of procedures for common areas and specific areas. Fine. Now all of you document nature, timing, extent of audit procedure. Nothing but all of you document the audit plans. All of you document the audit plans. You please discuss and document the plan. Already you developed the plan now in the third point. Now you document it. And engagement letter, I told, right? Joint auditors will get a common engagement. Will give a common engagement. Here actually it's not obtained. The joint auditor shall give a common engagement letter and obtain. Please add these wordings here. Here it is not obtain. Here it is give. All the joint auditors shall give or shall send common engagement letter and obtain common management representation letter that responsibilities of management are fulfilled. And work allocation happened. No, in the above points we have decided, all of us did risk assessment, all of us were involved in planning, all of us developed strategy, all of us developed plan, all of us documented. Now we have done work allocation process. In the all above 6 steps between the joint auditors, it shall be documented and signed by all joint auditors. Tomorrow if something goes wrong, I did not involve, joint auditor 4 did that work. How should I prove that it is joint auditor 4's responsibility? Yeah, I have document. He also signed, I also signed, you see. And how many you should prepare? You know, n plus 1. N plus 1. Suppose if there are 14 joint auditors plus 1, totally 15 documents you have to prepare. On 15, all the 14 joint auditors should sign. One management representative should sign. The one copy is for management. Even to the company you have to provide that copy. Tomorrow if a company is having a particular doubt in a particular audit related aspect, the company will not call each and everybody to find out who did that. They directly open that audit documentation, joint audit plan. Okay, so and so work sales is done by joint auditor 5. So I should call him, they'll call directly. So that's it. So the work allocation between joint auditors, shall be documented and signed by all joint auditors, which shall also be communicated to those charged with governance, top management of the company. That's it. And below, how from this standard a question can be asked in exam. See, actually I gave here answer references also. Please remove. Wherever the chapter you are getting answer reference, like this in relevant questions, you please remove it. I'll tell you where to remove, where not to remove. Don't worry. Okay. So here answer references you can remove directly. You can remove it and read the question. Look at the actual standard. Figure out what is the answer. 99% of the cases the answer reference given is correct. Don't worry. So that's about SCA 299. I hope now you have got a very good command on SCA 299 in all dimensions. How they plan the work together, how their responsibilities, how do they give report, what if there is a difference of opinion, where and all they have common responsibility, where they have separate responsibility, do they have to verify their work, can they trust their work? See, we have discussed in all 360 degrees dimension. That's it. So that's about SCA 299. I hope you are really confident on the standard. SCA 299, we hardly spent 40 minutes on this standard, whereas in the previous standard you observe, we spent almost 1.5 hours on this one, SCA 600. Of course, some standards take more than 1 hour, some standards take 40 minutes, some standards take half an hour only. And there is a standard called planning and strategy. I said no, we are having a separate chapter itself that will take 2 to 3 hours, 2 hours maybe it will take. Risk assessment is there. In fact, I gave you material, only a basic material. With respect to risk assessment, I'm going to give you additional soft copy, by the way. There are some frameworks in risk assessment related to information technology which I have not covered in the material which I gave, but which is also important. I'm going to give you another 50 to 100 pages material as a soft copy, not now, at a future date. Very soon I'll give you. Okay, but right now this 700 pages material which I gave is sufficient. But that material also you have to read. That is an advanced material, you can say. I can say once if you're confident on this, you can go and read that. So that's how you can use it. Just 50 to 100 pages material which will contain additional concepts which are there in your syllabus, plus some question bank. It is like a question bank where I'm covering all last 5 to 6 RTPs, 5 to 6 MTPs, all suggested answers. I'm going to cover all that in a one single question bank. So that will be useful for last minute revision also for you. And with this, joint audit is completed. And you know what are all we have completed right now? If I just get back, you know what are all we have completed? We have completed 700, 705, 706, 600, 299 we have completed. Actually in the standard we have, in this chapter audit report, we are having 12 standards totally. Only 5 standards were completed. So that's about joint audit. Now once again I just have to come back to the audit report format once again. You see, every point I'm connecting you to with the audit report. You know, at the end of this chapter, by the time we complete this chapter, any audit report you open, even if someone asks you what is so and so para, you should tell what is there in that para. Such a kind of command you should have. And I'll tell you the level at which you are having knowledge and command on the subject and terminology, so that you know, you can write any exam, any question on that particular topic, you can write very easily. I hope your confidence is improving. Class by class, session by session, your confidence is improving. And I hope you understood. We are learning both realistically and exam oriented. Both we are focusing simultaneously. And one more thing, you know, at the end of this chapter, we are having so many illustrations. Yes, we have at least some 15 to 16 illustrations we have. Don't worry. Illustrations we have and questions we have. More than 25 practical questions we are going to solve at the end of this chapter. So our class will be both learning oriented, exam oriented. I challenge you, buy any other classes, there will not be many questions, or there will not be any even learning also, not much aggressively. They just within 110, 120 hours they'll close auditing syllabus. But I'm telling you, 120 hours is enough really once upon a time, but not today. Today the paper standards have really increased. Once upon a time, you know, what is the audit secret mantra? Company audit, audit report, professional ethics, and fiscal audit laws. 4 or 5 chapters if you read and go, no, 70 marks will come from that. Straight questions, no more twisting also. 70 marks straight questions. Even like opinion para, I told, no, wordings, all that also they won't ask. Straight, what is qualified opinion? That's it. Such a kind of questions. And those days, really 90 hours to 100 hours enough preparation for audit. But today, the exam standards, you just see January 21 attempt or November 20 attempt or November 2019 attempt or May 2019 attempt. You see the papers from past 4 or 5 attempts. Really rock solid. And we have to be very happy for that. Only if the paper standards have increased, and if you qualify in that particular paper, you will have more respect. If at all papers are easy, many students will easily qualify. If many qualify, what's so speciality in you? So whenever a paper comes tough, also you please aim that, you please pray that your paper should be tough and you should crack it. That should be the spirit always. Okay. So coming back to our audit report once again. Coming back to audit report, appa, we scribble like anything. I'll erase it and then I will come back again. I mean, I'll erase it once. So now you know what is our next topic, you know? Key audit matter. Our next topic is key audit matter. Our next topic is key audit matter. And one more thing what I would like to do is, now onwards, I am going to name the file. I'm going to name the file, not only chapter, along with that I will also name it with standard number what we covered, so that later on when you're watching it, no, it will be convenient for you. So it's a standard, okay, you can pick out easily. Okay, fine. Contents of audit report. So what we covered here, what are all we have completed? We have completed title is over, addressee is over, opinion is over, basis for opinion we understood how it has to be drafted. Then emphasis of matter paragraph is over, other matter paragraph is over. Along with other matter paragraph we have covered what? SCA 600, SCA 299. Both of them will have a little impact on other matter paragraph. I showed you SBI audit report. In that, in the other matter paragraph, they also spoke about joint audit. They also spoke about other auditors. Yes or no? Fine. So now our next agenda is this one, key audit matter. This is our next agenda. key audit matter. Generally, many students, they actually think that they understood key audit matter, but if at all you are also in an assumption that you understood very well key audit matter once upon a time, probably 99% chances are there after you listen to this class, to this session on key audit matter, you'll change your opinion. And by the way, I'm stopping the video right now, and key audit matter will be given as a next video. It will be in the next video. Okay, so just let us have, yesterday we had one video that is exclusively 600 video. That before we have two videos on audit report. They are 700, 705 videos. Now we are having a separate video on SA 701 because SA 701 itself is 1 hour discussion. More than 1 hour it may take sometimes. But 1 hour is required, no doubt about it. That's it. Okay, so wait for the next session. Just watch the key audit matter. So the next standard is SA 701. In the previous session, what we covered is SA 299 read with other matter paragraph of SA 706. I hope you remember. And now we are discussing SA 701. If you look at the heading of the standard, communicating key audit matters in the independent auditor's report, one of the important standard and now one of the popular standard also across the audit spectrum, because today you just open any listed company audit report of your choice. Every listed company audit report includes key audit matter. Yes, every listed company audit report is now covering key audit matters. So, but even very recently also when I'm interacting with a few of my friends are also like, there is a very big confusion to understand what is the key audit matter and what is its significance in the auditor's report. And even the same kind of confusion I found in students also. Especially, what is the difference between key audit matter, emphasis of matter para, other matter paragraph? I think when you are doing article shape, probably you would have prepared, you would have got a chance to prepare an audit report. And I don't know how many of you know when you're preparing audit report that these paragraphs are there. So, but anyhow, so communicating key audit matter in the auditor's report. So what is a key audit matter exactly and how it is different from emphasis of matter para, how it is different from other matter para. So that we are going to discuss. In this session, the agenda is discussion and completion of this standard. And I already gave you the material. In the material, complete text is already there. In addition to the material, I would also like to show you one more important point which is there in the pronouncement book of SA 701. Fine, don't worry. Let us start with the discussion on what is a key audit matter. What is a key audit matter? Actually the definition is what, key audit matters are those that in the professional judgment of the auditor were of most significant in conducting the audit of the current period. These are the matters that are addressed in the context of audit of financial statements of current period. This is how it is. You take any audit report, key audit matters, before they write about what is the matter, there is an introductory paragraph. There is an introduction language will be there. In actual audit report, I'm showing you. I'm talking about actual audit report. Why? To that extent, I will show you State Bank of India itself. State Bank of India itself, key audit matters. See here, key audit matters are those. Key audit matters are those matters that in our professional judgment were of most significant in our audit of financial statements of the current year, nothing but that year. These matters were addressed in the context of our audit of financial statements as a whole and in our forming our opinion thereon. We do not provide a separate opinion on these matters. I know you have not understood anything. Fine, I'll tell you. So what is a key audit matter? I'll write the definition here. Key audit matters are those, KAM, key audit matters are those in professional judgment of the auditor, were of most significant in conducting audit of financial statements of current period, The key audit matters are those matters in the professional judgment of the auditor were of most significant in conducting the audit of current period. Before I decode this sentence, let me decode this terminology. Key audit matter. Key audit matter. Or I can say key audit matter. There are two terms in this. Two parts I can divide. Key audit matter. So what is a key audit matter? It is an audit matter, some audit related matter. Understand? It's not financial statements related matter. It's an audit related matter. Audit matter means what matter? Obviously audit related matter. And key means important. Important audit related matter. In an audit, which matter is important? Which audit matter is important? I am involved in so many audit matters. I did purchases, I did sales, I did expenses, I did revenue, I did assets, I verified liabilities, I verified contingent liabilities, I verified notes to accounts, I verified risk assessment process, I verified accounting estimates, I verified accounting policies, I verified accounting standard, Ind AS. So many matters I verified, man. I verified means I audited. There are so many matters that I have audited. So many matters that I have audited. Among these so many matters I have audited, what are important? What are important? Who will know that? Out of so many matters that I have conducted audit, among these so many matters, which matter is important for me? Who will decide? Do you think management decide what audit matter is important? Obviously not. Who will decide? Auditor. Auditor. So key audit matters are those in professional judgment of the auditor. Understand, it is from auditor point of view. Why? Because he is the one who audited these matters. There are so many matters which he has audited. Among them, what is the key matter? Only auditor can understand. Only auditor can decide about it. Okay, according to him, what is it? It is most significant key. It's an important. And when it is important, why? In conducting audit of financial statements of current period. In current period when I'm auditing, that is important. Indirectly, what am I giving in key audit matter? Suppose, I planned the audit. No, I showed you the audit plan. If you look at, I showed you the audit plan. No, so here also I'll just put this. Okay, I have this audit plan. First, I did risk assessment. In risk assessment, I don't have anything. I verified. I audited this. This is also an audit. Risk assessment procedure is also an audit procedure. And then I conducted audit procedures on opening balances. So audit matter. One audit matter is opening balance. One audit matter is risk assessment. Another audit matter is revenue. Another audit matter is other income. I audited them. It's a matter which is there in the financial statements and I audited them. It's an audit matter. Look at the wordings I'm carefully using. It's an audit matter. CGS is an audit matter. Direct expense is an audit matter. Employee cost is an audit matter. Depreciation is an audit matter. I felt depreciation is important. Why? For me, depreciation is important. Why? In this company which I audited, during the year, life of asset has been changed. Life of asset has been changed during the year. Yes. The useful life of the asset and residual value has been changed. If you remember, Ind AS 16 or Accounting Standard 10, old one, you have two measurements: initial measurement and subsequent measurement. Example of subsequent measurement: revaluation. Right? A fixed asset, a property, plant and equipment can be valued in the financial statements either using cost model or I can use revaluation model. And there is another model called fair value model. That's keep it aside. That's not required now. That's very advanced discussion. So subsequent measurement. During the year, what happened is residual value has been changed and useful life of the asset has been revised. And there is a change in accounting estimate. And what is the value of the asset? What is the value of the asset? First of all, whose life of asset has been changed? What is the value of the plant and machinery? 3 lakh crore. Oh my God. 3 lakh crore worth of plant and machinery is there in this organization, to which the useful life of the asset has been changed. Example, suppose Suppose if the useful life has been changed from 10 years to 11 years, no. Okay, 1 year only, no sir, what's a big deal? Are 1 year only, but 3 lakh crore means 10% there is a change in life means 30,000 crore depreciation will change. Even if 1 year there is a change in useful life, the amount of depreciation will be 30,000 crore, such a big amount. I know depreciation is just like any other matter in the financials. How revenue from operations is a matter in the financials, how cost of goods sold is a matter in the financials, depreciation also. But then for me depreciation is a key matter and I audited it, so it's a key audit matter. Why I am calling it as key audit matter? Because significant change is there in that. Because the life of the useful life, the balance useful life has been revised. Residual value has been revised, because of which the depreciation amount has been affected during the year substantially. Then coming to inventory, I choose an inventory also key audit matter. Why? Inventory, with respect to inventory, there are risk of errors. There are so many risks are there. I went to go down, I did risk assessment in the go down, I analyzed what can go wrong, I checked entire internal control policies related to the go down inventory management. There are so many errors. The GRN policy, the purchase requisition policy, software, the SAP or the ERP which they are using, certain lapses are there in that. Segregation of duties are not proper. Inventory is a key audit matter for me because I spent lot of time on auditing that inventory. Inventory is a matter and I audited that. And it's important. Why? You know how I felt in depreciation, more attention I gave. Same way in inventory also I gave major attention. See, in depreciation I gave major attention because it's an estimate. It's an estimate. Significant estimate is involved. Yes or no? Useful life is an estimate, and moreover the value is 3 lakh crore. So the estimate is so significant. It's not just ordinary accounting estimates. It's a significant accounting estimate. So first criteria, first item which I selected, depreciation as key audit matter, because there is a significant estimate is involved. Now inventory I am selecting because there is a risk of error or risk of fraud. I can say risk. Significant risk is involved. I can say a significant risk is involved in inventory. And I have another key audit matter, investment. During the year, company has acquired 80% share capital in another company. It's a very big event or a very big transaction during the year. It's a significant transaction during the year. Generally, every year company will buy and sell investments, securities. But this year, it is little different. This year, it is little different. It is not a routine investments, purchases and sale. It's an acquisition itself. The company has acquired another company, or company has purchased so many significant amount of share capital. It's a significant transaction or event in the current year. It's a key audit matter for me. See, logically speaking, there are so many audit matters. If you observe all this entire column is about audit matters only. I audited everything. In fact, everything. Reserves I audited, debentures I audited, deposits I audited, revenue from operations, everything I audited. But out of so many things I have audited, out of so many matters that I have conducted audit, some matters I am considering, I am selecting as key audit matter. Now I think you would have got some clarity. What is key audit matter? According to me, these are key. Why depreciation is key audit matter? Because during the year, the useful life has been changed, which is a significant estimate. Why investment is a key audit matter? Because during the year, we had made a huge investment. It's a very big transaction. Why inventory is a key audit matter? Because there are so much of risk of fraud, risk of error, risk of MMS is involved. And what you decided, sir, do you mean only these three are key audit matters for you? Maybe some other also there, but these three I felt most significant. These three matters I felt most significant. Okay, fine, they are most significant. What you did, I gave so much special attention to them, and I have verified them very much in depth. And you know, I want to communicate these three matters in my audit report under SA 701. I want to communicate in my audit report under key audit matters section of the auditor's report. I want to communicate these three. What you will communicate? How do you communicate? What you will say? What are you going to tell about them? Are you going to give a qualification? No, I'm not giving qualification. See, I will give modified opinion when there is a material mistake. Here there is no material mistake. I felt they are significant. When I'm doing audit, I felt they are significant. Since they are significant, I have deployed myself little more attention towards it. I gathered sufficient appropriate evidence, and I have sufficient appropriate evidence that they are free from mistakes. Depreciation rightly done as per Ind AS. Inventory rightly shown. Though risks are there, no frauds and errors were noticed. And investment rightly recognized. Everything is true and fair. Then why key audit matter? Wait. I want to show these 3 points to shareholders, and I will tell them why it is important, and I will also tell them how I verified them. I will tell to the shareholders how I verified them. Does it mean you want to show off how you do audit? Yes, literally speaking, yes. I want to show off. Or I can say, I want to show to the shareholder how I do audit. How you do audit? You do so many, no? Can you explain entire what you do in audit? No, entirely I can't explain. But for key items, I can explain, no? For these 3 items, how I did audit, I can explain, no? Yes, and that is key audit matter. Key audit matter is nothing but auditor is selecting few important matters. Listen carefully. He is selecting few important matters among so many. See, in our example, see how many he is verifying audit: provident fund, GST, TDS, professional tax, municipal taxes, debentures, borrowings, reserves, payable, receivable, cash. So many were there. I'm not selecting all of them and explaining how I verified them. First of all, it's none of everybody's business. How I audit is my own thing. Even how I do audit is not even relevant for another auditor. How I do audit is not even relevant for management. How I do audit is not relevant for shareholder also. Ultimately, at the end of the day, what they want is my opinion they want. How I do audit, man? Tell me. I do audit as per standards in auditing. You remember basis for opinion paragraph? We do audit as per standards. Everything I did as per standards only. Then what is key audit matter? It is just that out of so many things I audited, I will select few items and I will mention in the audit report how I conducted audit of those matters. In the audit report, I am taking few examples of what are all I did in audit and explaining here in the audit report how I verified them. So you want to demonstrate how you did audited these items. Yes, I want to demonstrate. Then why only these items? If I take a useless item and demonstrate, nobody reads. If I take a very big item and demonstrate, yeah, maybe some people will show interest to read it. So what is big item? Something which is significant, something which is a significant transaction, or something where there is a significant risk is involved, or something where there is a significant accounting estimate is involved. If you select something that is significant, either because of the estimate or because of the transaction size or because of the, what is another one? Risk involved. Because of significant aspects, if you select and discuss how you chased them, how you solved them, people will be impressed. So key audit matter is that exactly. Sir, what is emphasis of matter? Tell me, sir, other matter, emphasis of matter, key audit matter. Can you differentiate and tell me? Right now, I think I have got some clarity, but I just want to know exactly how key audit matter is different from emphasis and different from other matter. I think if I get this understanding also, I'll get more clarity on key audit matter. Wait, don't worry. I will also talk about emphasis and other matter paragraph. Again, I'll come back and tell you the same key audit matter story once again. And I will also show you, for all the 3 examples I took, no practical examples, I'll show you 3 different audit reports. One domestic Indian company audit report, one Europe company audit report, one foreign company audit report I'm going to show you. Fine. So, sir, what is emphasis of matter paragraph? Can you all once recollect what is emphasis of matter para? Emphasis of matter para, emphasis of matter. Where is this matter? Where is this matter? This matter is there in financial statements, sir. This matter is presented or disclosed in financials. In notes to account, somewhere that matter is there, sir. What we are doing? We are highlighting that matter. How are we highlighting? We draw your attention to note number 40 of notes to accounts, which discusses about so and so stuff. And below we are mentioning our opinion is not modified for the above matter. So what are we saying? Dear shareholder, please open note number 40 and see. That's an important point which is there. Please read that. That's it. By the way, when I say note number 40, you have to read means, am I having any objection on that? No, I don't have any objection on that note number 40. It is important point here in notes to accounts. You just read it once, then take decision of your choice. So our opinion is not modified. Emphasis of matter paragraph. What am I explaining here in emphasis of matter paragraph? Some point in the notes to accounts or financial statements, balance sheet, P&L, cash flow notes. If I think there is some important point which I feel shareholders must read, I can highlight it in my audit report. Tell me, am I discussing here audit matter? No, I'm not discussing about audit related issue. What am I discussing here? Something is there in the balance sheet, P&L, cash flow, nothing but financials. I'm just highlighting here. I'm just asking you to please look at that note number 40. I'm not talking about audit. That's emphasis of matter. Then what is other matter para? Other than financials information, like I want to tell here responsibilities of branch audit, joint audit, like that. Here in other matter pair also, I am not talking about how I audited. I am not talking about my audit procedures. Then what you are talking about in other matter para? In other matter para, I am just conveying shareholders, look, I have not done the audit of so and so branch. I have not done the audit of subsidiary company. Along with me, there are few more joint auditors. I'm just giving responsibilities of auditor related information in other matter para. So in other matter paragraph also, I am not talking about how I conduct audit of specific issue. In this company, depreciation, how I audited, I'm not talking about that in emphasis of matter, or I'm not talking about it in other matter para. Then what is key audit matter? That's what. What is key audit matter? It is a paragraph or it is a facility given for the auditor. What is this facility? To demonstrate his skills. What is his skill? For auditor, what is the skill that he is supposed to have? He should have audit skills. Audit skills are applied when you are conducting audit. Okay, you applied, you conducted audit. How do people know that you have these many skills? How do people know that you do audit in this way? That's why key audit matter has been brought. Actually, if I have to personally speak, nobody reads key audit matter. Nobody reads key audit matter. It's waste of time, no? See, like I'll show you how key audit matter has been presented in Reliance Industries. Then we will discuss about that. 1819 audit report I'll take. 1819 audit report I'll take. If you observe in 1819, so financial statements 259 page. So if you observe here key audit matters, if you see below, if you see D point, if you observe D point, as on 31st March 2019, the company had a gross block of 2,28,000 crore plant and machinery, which occupies 73% of the PPA. This company has some 2,30,000 crore plant and machinery, which is 73% of the total PPE. Okay. In the current year, the company has revised the useful life and residual value of plant and machinery. Okay, they revised it. Assessment of useful life and residual value is an integrated and complex process. It involves historical experience, considering past experience, technological changes, obsolescence, everything to be considered, and then the management will take it. Accordingly, since the value is almost 2,30,000 crore, in respect of which value has useful life has been changed, residual value has been changed, since it is so significant, accordingly it has been determined by the auditors as key audit matter. We felt this is a key audit matter. So which means, you know, you are informing the shareholder, dear shareholder, there is an issue number T under D, key audit matters. Till now it is a fourth issue in key audit matter. This changes in useful life, we auditors felt it is important. Why it is important? We are giving the reasons and mentioning finally that it is since because of this it is important. Okay, fine, it is important. What you did, man? Don't worry. You know what we did in audit when we went for audit? Now you're looking at the audit report. No, you're looking at the end result. But what we did in background, we did our audit procedures include but were not limited to following. We did so much. But I'm just giving you a brief outline of what we did. What we did, we first looked at reasonableness of assumptions. Yes or no? If you are the auditor, you went to a company, the company changed the useful life. What you will see, what is the old useful life, what is the new useful life, is it reasonable or not, is it genuine or not, yes or no? Same thing this fellows also checked. No special, nothing special. Second point, auditors examining useful life and residual values with reference to past experience, technical valuation by third party expert. So like what you also do, okay, what is the new useful life, what is the new residual value, is it true and fair, is it genuine, is it acceptable? Look at the past experience, your experience, call third party expert, he will also give a report. Yes or no? And then what you will also check, okay, yes, it useful life changed, it's reasonable, expert report is there, opinion has been taken, fine, everything. Have they accounted properly? Don't you check or not? Account useful life has been changed, no, asset useful life. You will check one more point in audit, have they been accounted properly? See, assessing whether impact on accounting of the changes been appropriately recognized. Yes or no? And review the disclosures made by the company. As per Ind AS 16, whenever there is a change in accounting estimate, useful life, you have to give certain disclosures. What are all the changes? Why there is a change? Disclosure. That's what these people also checked, man. They just did normally only. There is no special in audit procedure. The only specialty is that's a significant item. The item only special. In that what we do is nothing special. Only thing is because it is very big item, very big amount involved, we would have spent little more time, we would have spent little more intensively, we would have given more attention to it. That's it. Very simple. So here the auditors have selected changes in useful life as key audit matter because it involves significant accounting estimate. Now you tell me, sir, what is key audit matter? Nothing but in so many matters I audited in this company, selecting few items and keeping in the audit report that few items. I select depreciation. Right side I will just mention how I audited. Left side I will mention what is it, depreciation. Right side how I audited. Left side revenue, how I audited. That's it, key audit matter. It is just an audit matter. How you audited that matter, you're just describing that. Now you should never have confusion. Sir, is it emphasis? No, emphasis is what? In balance sheet or P&L or notes, if I want you to read that point at any cost, how I can read, how I can tell you, I can send you a public mail. Hey, please, that 40th point, it's important point. Or I can give in the audit report highlighting you that point. That's it. Key audit matter is what? It is just that how I do audit I'm expressing. That's it. Tell me, in this entire D point, am I raising any objection? Am I giving any separate opinion on this matter? Tell me, am I giving any separate opinion on depreciation? Your objective is to give opinion as a whole on financials. You will not give separate opinion on these items. Key audit matter is not a separate opinion. Understand? It's not a separate opinion. Then what is it? That's what I'm telling. Just take one item of audit. How you audited? You are just demonstrating your audit skills. Nothing more, nothing much. Nothing much. You are just demonstrating how you are doing audit. I'll show you, in Europe also, I showed no TDC company, Denmark registered company. There also it is called as same key audit matter. United States, no, they call it as critical audit matter. They don't call it as key audit matter, they call it as critical audit matter. Before I show you Denmark audit report, I would like to read once the definition. What is key audit matter now? Once again tell me. Key audit matters are those matters. From whose point of view? From auditor's professional point of view. Nothing but from auditor's professional judgment were of most significant in the audit of financial statements of this company in the current year. That's it. Key audit matters are selected from matters that are communicated with those charged with governance. Tell me, when such a big event happened, for 3 lakh crore worth of plant and machinery, useful life has been changed. Tell me, don't you discuss with top management of the company why they changed? Yes or no? So obviously, key audit matters are generally Generally, he will select key audit matters. No, that matters would have already been discussed with top management. That's why the standard says key audit matters are selected from the matters that are communicated with those charged with governance. If it is very important only, I will communicate with top management. So naturally, whatever key audit matter I'm selecting, it would have already been discussed with top management. That's it. So the definition is also very logical. Now, I will open this one, TDC group. This TDC group also gave key audit matters. Okay. So what key audit matters they gave, I'll see. Here. Yeah, see here they also gave key audit matter, and I will show you the definition is exactly same. I will compare right now Reliance audit report definition of key audit matter and this one. This is Europe company, no? And you see here, key audit matters are those matters that in auditor, nothing but our. When auditor is giving the opinion, he will not say auditor judgment. He is only giving no our, he will say. Okay. In our professional judgment were of most significance in our audit of financial statements for 2019 audit report, current period. These matters were addressed in the context of audit. Of course, whatever I'm showing here below, no important points, I already addressed them in audit. When I'm doing audit, I already verified them. I know while doing our audit of financial statements as a whole and informing opinion thereon, and remember when we are doing audit of financials with a view to form opinion, all the matters mentioned below as key audit matter we addressed. Remember, we do not provide a separate opinion on this matter. This is a presentation requirement as per key audit matter standard. This is how you have to present it. See, Reliance audit report also same terminology will be there. Introduction, same terminology will be there. See here. Yeah. See here, I will just show you. Now you see, key audit matters are those matters that, okay, Reliance audit report, key audit matters are those matters that in our professional judgment, were of most significant in our audit of financial statements, we say 31st March, they say 2019. These matters were addressed in the context of audit of financials. You see, these matters were addressed in the context of audit of standalone as a whole and informing opinion thereon. Here also continuation is what? As a whole and forming opinion thereon. And we do not provide separate opinion on these matters. Exactly, no. Okay, fine. I will again compare it with once our class material. Key audit matters are those matters that in auditor's judgment, there they have used our professional judgment, there it is auditor's judgment because it is a definition, were of most significant in the audit of financial statements of 2019, nothing but current period. Simple, same exact. What is there in book is there in reality. Okay, now you see TDC, what are the key audit matters? They have selected revenue recognition as key audit matter. See, why they would have selected revenue recognition? You know, in order to select something as a key audit matter, either some significant risk is there, fraud or error, or some estimate is involved, very significant estimate, or it would have been a very big transaction during the year. Because of these reasons only, generally, some audit matters are treated as important audit matters. Now, why TDC group have chosen revenue recognition as key audit matter? We will read. TDC billing environment, okay, their billing system is complex, comprising a high number of applications and complex contracts, some of which include multiple elements. Okay, fine, that's about billing process they're talking about. We focused on this area. Okay, auditors are saying they focused on that area due to risk of errors. Okay, I told no one reason. Risk of fraud, risk of error. When significant risk is involved also, we take it as key audit matter. Okay, that's it. So accordingly, this is selected as key audit matter. And you see, they're also giving reference to revenue points in notes. That doesn't mean it's a emphasis of matter. Okay, they're just giving a reference. And you see, and what they did in our audit, we focused on the following. So what they did in audit, they are just telling you. See, that's a very complex billing, no? So how they did audited? So they're also mentioning it. But logically tell me, for a normal shareholder, or even if you and me as a shareholder look at audit report, how he audited, why the hell I bother? We all know at the end of the day he has to do audit as per standards. If not, he caught, he will be punished. Why I want to know how you audited about certain important, okay, you felt important, you are sharing, but why are you increasing the length of the auditor's report? I'm ready to argue on this with anybody. Why the hell? First of all, okay, you have your own reasons, okay. So someone asks, if you see the standard, no, the standard want to support itself very high. What is the purpose of key audit matter? It started with that. If you look at the study material pronouncement, no, what is the purpose of key audit matter? I'll show you the second point itself. SCA 701. What is the purpose of key audit matter? You see, the purpose of communicating key audit matter is to enhance communicative value of the audit report. Array, our audit report is boring. In audit report, opinion is there. So I just want to bring some entertainment in audit report. I just want to tell in audit report how I do audit of certain important items. Simply, my audit report is not just about opinion. It is more than opinion. Communication is more through audit report. By providing greater transparency about audit, how I do audit, you are providing through key audit matter. You are explaining to the people how you do audit. By selecting important points how you do audit, you are explaining them how transparently you do audit. Tell me, why the hell a shareholder want to read all this? First of all, shareholder doesn't know what is meant by opinion. How many shareholders know what is an opinion, what is an emphasis of matter, what is the other matter? We people itself, we CA students itself struggling like anything to understand what is this. And a person who doesn't even have the syllabus, do you think he understand it? So that's about key audit matter. So I think now you would have understood. I've showed you 2 examples. Okay. So now let's enter into the standard and read and finish it off and close. Okay. However, I think now you would have understood what is key audit matter, what is emphasis, what is other matter. You would have already understood. So definition, the matters which in auditor's judgment are most significant in audit of financials of current period. Correct. And these are the matters selected from various matters communicated with those charged with the government. Obviously, when a particular audit matter, when you're doing audit, when you find something which is very important, you would have already spoke to top management. From that only you will be selecting key audit matter. Nothing new in this. What is the purpose of key audit matter? The purpose of key audit matter is to enhance communicative value of the auditor's report. Okay, audit report is communicating so much. People should feel, hey, audit report is not boring today. Key audit matter is there. Emphasis of matter is there. Other matter paragraph is there. So audit report is having some entertainment. To create such impression, you are communicating. By providing greater transparency about the audit. Key audit matter provides additional information to the intended users, shareholders, market, stock market, analyst, bank, all that, to help them, to assist them in understanding the entity and areas of significant matters in professional judgment. From the point of view of the auditor, in this company, what are most important areas? Key audit matter is giving that information. And by the way, communicating key audit matter, suppose I'm doing audit, one of the director approached me. Sir, dear auditor, we prepared financials, approval also over, but one accounting standard disclosure we didn't give in the notes. Now we are in a position not to give. We want to use your audit report for disclosing this. Can you please permit me use your key audit matter to disclose our presentation requirements as per accounting standard? Hey, if at all you have not presented or disclosed something as per accounting standard, it's a material misstatement. Key audit matter is not a substitute for that, man, dear director. Key audit matter is, understand what is key audit matter. I'm doing audit, no. In that so many points I did audited, some points are important, no. I will tell what is important point, how I audited. For that purpose only key audit matter. It is not a substitute for presentation or disclosure in financials. Key audit matter is not a substitute for modified opinion. Suppose if material misstatement is there in inventory valuation, I should give qualified opinion or adverse opinion. I cannot show it under key audit matter. See, key audit matter is not a substitute for financial statements disclosure as per applicable financial framework. Communicating key audit matter in the audit report is not a substitute for disclosures in financials, which is required as per applicable financial reporting framework for the management to make. And communicating key audit matter in the audit report is not a substitute for modified opinion. What you can do is, you can only read up to here. That will be more better. That will be more better. Not a separate opinion and not a substitute for reporting as per SA 570. Key audit matter is, I mean, are you giving separate opinion on depreciation? No, no, no. Arey man, listen. I'm not giving opinion here. Key audit matter is just that. Depreciation, how I audited. I'm just telling this process of audit, nothing. I'm not highlighting anything. I'm not giving opinion. Then what are you doing? I'm just telling you how I do audit. Why the hell I want how you do audit? No, standard is there. No, I'm just doing. Moreover, the standard says it is applicable for listed entities. So I'm giving it. Pavam. The auditors don't have any other, this thing. Since listed entities, it is mandatory, they are giving. Again, is it compulsory, sir? Key audit matter? Logically tell me, forget about the applicability part. Is it compulsory to communicate key audit matter? I am the auditor. I don't want to communicate key audit matter. Can I? Yes, of course, it's your wish. It's your wish. Whether to communicate key audit matter or not is your wish. The standard is originally applicable to listed companies. This SA 701 standard is actually applicable originally to listed entities. Even not only that, even in other companies, if the circumstances require you to communicate, you communicate. Maybe if law or regulation asking you to communicate, you communicate. If at all you decided there are no key audit matters, there is nothing new, no key audit. Why to communicate unnecessarily adverse consequences? People may misinterpret it. I decided not to communicate. Okay, don't communicate. Tell that point in the audit report that you don't have any key audit matter. Sir, is it acceptable? Yes. If you want to communicate, communicate. You don't want to communicate key audit matter? In audit report, right side heading key audit matter, below mention what is key audit matter definition, mention a statement that you don't have any key audit matter. Over. So, this is also important. What is the purpose of communicating key audit matter? 4 marks to 5 marks question, they may ask you straight question. What is key audit matter? They may ask you an MCQ here. They may ask you an MCQ here. They'll give 4 options with different twisting and you need to select. One of the option may be like past year. One of the option may be current year plus past year. One of the option may be current period. So like that they may twist. And by the way, key audit matter is applicable in the context of general purpose financials. Understand our entire auditing subject. All standards on auditing are in the context of general purpose financial statements audit. We are not discussing about special purpose financial statements audit. Then applicability and prohibition on key audit matter. This standard applies to audit of complete sets of GPFS of listed entities and circumstances when auditor otherwise decide to communicate. If at all you want to communicate in non-listed companies, it's your wish. So whether you want to communicate or not is your choice. SCA 705, look at this. The second point is most important point in the standard. This is most important point in the standard. Very important point. Please highlight this. SCA 705, as per SCA 705, communicating key audit matter is prohibited if an auditor expresses a disclaimer of opinion. If auditor expresses a disclaimer of opinion, SCA 705 prohibits key audit matter. See, logical, okay? Sentence here it is given, so we are discussing. Even if it is not given, logically tell me. When you give disclaimer of opinion, when you have not conducted audit, right? When you have not conducted audit, there is nothing for you to verify. So you are unable to give opinion, you give disclaimer. Disclaimer of opinion means, dear shareholders, sorry, you appointed me for opinion. I'm unable to give opinion because I did not audit. Good. When you did not audit, where is the question of important audit matter? Logical, common sense. See, if I audit all the 10 items, out of 10, what is important I can pick out. If I have not audited at all, where is the question of important audit matter? Audit ille. There is no audit itself. Audit itself is not there. Where is the question of key audit matter? That's what common sense. Sometimes our auditors forgets common sense. No, that's why standard only specifically put a common sense point. Now, how do we select key audit matter? How do we select? The standard definition says professional judgment. But sir, sometimes my common sense don't work. My professional judgment not there. How to select them? Okay, standard is answering for people like you. Okay. The auditor shall determine from the matters communicated with top management those matters that require significant auditor attention in performing audit. Okay, when you're doing audit, there are some issues which caught your attention significantly. From that you can select the audit matter. Example, the auditor shall take into account following points. Okay, don't worry. Following points you take. You think of these points, accordingly you select. First point, areas of higher assessed risk of MMS. There is a possibility of high. Sorry. This Google talks, no, sometimes. So, areas of higher risk of misstatement. Some significant risk is involved. You remember TDC Group Europe, they selected revenue recognition because of risk of errors. Areas of significant judgments are involved. Reliance Industries Limited have selected changes in useful life because it's a significant judgment. Estimate is involved that are made by management. Or we have selected investment because there is a significant transaction. In the same Reliance audit report, Reliance Industries Limited has invested in Reliance Geo Communications. That's a significant investment during the year. So, key audit matter can be selected from higher risk of areas having higher risk of MMS, or areas where significant estimates or judgments are involved, areas where significant transaction took place. Examples: impairment of asset, provision for contingencies, valuation of financial instrument, revenue recognition, taxation, whatever, some example they gave. But I showed you even more live example, which is even more powerfully, it will store in your brain. Then there is one more thing. Certain matters not to be communicated as key audit matter. Dear Mr. Enthusiastic Auditor, dear Mr. Auditor, don't be over enthusiastic. Whenever you are communicating, don't try to demonstrate your skills too much also. When you are communicating, follow these precautions. There are 3 precautions that you have to follow. What are they? Sometimes you want to communicate about a particular issue. If communicating that issue is prohibited by law, if law or regulation prohibits such disclosure about a particular matter, suppose you verified certain agreements in the company which they have entered with the government of India. Suppose you're doing audit of a defense company, and the defense company has entered into certain contracts with a government of India with respect to certain defense equipment, and that contract is a very material contract, and you felt it is very significant, and you verified that everything is fine. You want to be over enthusiastic and you want to communicate. If you look at your terms of engagement, the government clearly prohibits you to discuss those matters with the public. You keep it confidential, you keep it with you. Don't show it in key audit matter because law or regulation prohibits it. Very careful. Or if the auditor determines that the matters should not be communicated, you only felt not to be communicated. Why? Because of possible adverse. Sometimes communicating additional information will bring problems. You should know how to communicate, maintain the communication. Or if the auditor concluded the matter is highly confidential or sensitive, you felt it is very sensitive issue, you felt it is very confidential issue. Actually, company has so many reserves, you verified them, and company next year want to repay in the form of buyback. You came to know when you're doing audit. Don't communicate that information because it's highly confidential. Only directors first have to inform to SEBI, then only announcement can be followed in public. You cannot directly announce it. There are highly sensitive matters, highly confidential matters. Now if you observe, we discussed so logically what is a key audit matter, how it is different from emphasis of matter. I think now even if anybody try to confuse like anything, you won't confuse. Blindly, what is key audit matter? I do audit of so many matters, select 2 or 3, how I audited them, explaining that in the audit report. That's it. It is not highlighting what is there in the financials. That is emphasis. It is not talking about joint auditor, branch auditor. That is other matter. I think now you would have understood. Now it is strongly noted in your brain. Then I have 2 more points to show in pronouncement. In pronouncement, there is 1 more point. I think not required, but then I'll show you. Very simple. You see here, interaction between descriptions of key audit matter and other elements. Okay, so what is key audit matter and other elements? How they will interact with each other? Example. A matter give rise to modified opinion. Suppose if some matter is there, Modified opinion you have to give because that's a material misstatement. You must give modified opinion. Yes or no? Or a matter, there is a something related to going concern as per SA 570. Then you have to take a call as per that. Okay. In that case, no, though they are important. Yes, going concern issue is no doubt important. Or when some mistake is there in the financials, no doubt it is important. Just because they are important, don't think whenever something you feel important, come and copy under key audit matter. Don't copy. Don't use key audit matter. For them, you have a separate standards based on that you follow. That is what the 15th point is clarifying. Just because you feel important, don't bring everything under key audit matter. Some important things may be requiring a modified opinion. Give modified opinion. So that's it. Not required from exam point of view. I'm just telling you. Okay. Then, with respect to key audit matters, what you have to document. What you have to document. Please, in our material, make a note. Make a note. Make a note here in the material. Refer page number 505 in pronouncements. Pronouncements relating to documentation under SA 701. That point, just you have to refer it. Not important, but maybe if at all the examiner is crack, he want to ask you on documentation part, he may ask you this. But I'm telling you, remote possibility. The chances are remote because in the main study material they have not given this. Documentation related discussion is not there in your main study material. Only in pronouncement it is given. But considering the improved examination standards, it is better at least if you read once at least, a single time. That's why I'm doing in class only. Whether you read later on or not, your choice. Here I don't want to make objection also. You don't want to read documentation, leave it, it's okay. I'm confident 99.99% it will not be asked. So the auditor shall include in documentation. What are the things you have to document relating to key audit matter? The matters that required significant attention. What are all required according to you significant attention? And rationale for auditor determination. Why you felt it is very important. And the rationale for auditor's determination that there are no key audit matter. Sometimes no. You may feel there is no key audit matter. You may feel there is no key audit matter. Listed company only. You would have felt no key audit matter. What is the logic behind you? Why you have not felt there is no key audit matter? That thing you have to document reasons. And what is the rationale? Auditor's determination not to communicate some matters as key audit matter. I told no confidential items where adverse consequences it will bring or law prohibition per some matters are important, but you have not communicated why. So what it is asking is very simply identify what are all key audit matters and logic why it is a key audit matter. And suppose you don't have any key audit matter. Why you don't have key audit matter? Or you identify 10 matters but you communicated only 4. But 6 items you have not communicated. Why you have not communicated 6 matters as key audit matter? Documented. That's it. So you read that later on once again. I think now you would have having absolute clarity on key audit matter. Key audit matter. Now you can debate with anybody on key audit matter. Okay, take chance, debate with people. Sometimes that kind of feeling will be very, very powerful. Okay, see, I'm just joking. Don't debate. Okay, I'm just joking. I hope now we have completed one more beautiful standard, that is SA 701. By the way, where this will come in audit report? In the main audit report. And you know, there is one question which is there in RTP. There is a question which is there in RTP. You see the 7th question below which I gave. The auditor shall describe each key audit matter using an appropriate subheading in a separate section of the audit. Correct, no? You see the Reliance audit report, you see the Reliance audit report or SBI or Reliance audit report, separate section. Key audit matter has a separate section, opinion has separate section, basis for opinion has separate section, key audit matter separate section. And below that, again subheading should be clearly mentioned, no? Investments in Reliance Energy, changes in useful life, subheading also should be clearly mentioned. Okay, so the question if you see. So in a separate section of the audit report under the heading key audit matters, what would be the introductory language in this section? See this question, if at all this question comes, no, if a student who have not prepared in depth like this will definitely leave it and he will say out of syllabus question. But actually it is in the syllabus, very much in the syllabus. They are asking you, they are not asking you definition, they are not asking any concept, they are asking you in audit report, if you want to give key audit matter, introduction you will give, no, what language you will use, what language we will use. You see what language we have used here. What language here the Reliance auditors have used here? You see, introductory language. This is the introductory language. What is the language? Key audit matters are those in our professional judgment were of most significant in our audit of financial statements of 31st March 2019. These matters were addressed in the context of our audit of financial statements as a whole and while forming opinion thereon. We are not providing a separate opinion on these matters. That's it. For each of the matter below, our description of how our audit addressed, how we audited, that also provided. See here, the same answer I gave. Key audit matters are those matters in our professional judgment were of significance in audit of financial statements of current period. These matters are addressed in the context of audit of financial statements as a whole and in forming opinion thereon, and we do not provide a separate opinion on these matters. I'm telling you, it is not relevant from exam perspective generally, but I cannot guarantee you. Sometimes an MCQ may come like this. An MCQ may come like this. See, I am making my best efforts to give you the best clarity on the concepts within the minimum shortest possible time. You see, almost it's been 55 minutes around. We have started this standard. Spending at least 1 hour for each standard is a genuine requirement. Okay, if I explain the standard within 15 minutes, you only understand 5 minutes of it, and in exam you only write 1 minute of it, and the marks are so. Okay, only if we discuss at this length, you understand it. So what you need to do after completing this video, after watching this video, you have to do one more thing. You just have to read once again this, and if possible, documentation in 505 page of the pronouncement if possible. November 2020 edition pronouncement. Maybe if it is some other edition you are following, you just try to find it out, documentation in SA 701, you'll get it. I hope you are confident on key audit matter. So again, coming back to our audit report, just contents. You see now, see if you observe, we are actually what are we doing? We are not learning concepts, man. We are learning how to prepare audit report. Yes, what we are learning is how to prepare audit report. Tomorrow, after you finish coaching or after you finish a CA, if someone asks you about audit report, if you say, I don't know, I didn't do articles, who told you auditing? People will ask you, you will immediately say caramharsha sir. Paru mottam poye. Okay, so we have to be very careful. So now we have completed key audit matter. Yes or no? Successfully we have completed another one, which is key audit matter. So key audit matter is also completed. You know what is our next agenda? Material uncertainty related to going concern. Another important standard, 570. Another important standard. And you know what are the standards that we have completed already? 700 opinion, 705 modified opinion, 706 emphasis of matter, other matter para. Then 299, 600. Now we discuss 701. What is our next agenda? In our next session, I am going to discuss about 570. And in that next session, I am going to discuss about caro, all that. Then finally, I will come back to, sorry. After 570, I will discuss 720 also. 720 other information, which is another interesting standard. Okay, fine. So after finishing this video, your responsibility, once again, watch it. I hope you'll do it. Bye-bye. So this is the 6th session of the audit report. In this session, we are going to discuss about a paragraph in the audit report, 5th section of the audit report, material uncertainty related to going concern. Here, it is important for you to have one clarity. All these 5th para, 6th para, 7th para, 8th para, which I am showing you right now, like for which there is a bracket here, no, applicable as per relevant standard. These paragraph, there is no compulsion that this should appear in every audit report. Only if auditor want to give emphasis of matter para, he will give that para. That paragraph will come into picture. Only if auditor want to give other matter paragraph, then other matter paragraph will come into picture. Same way, if SEA 570 material uncertainty situation arises into the picture, then only that paragraph comes into picture. But with respect to key audit matter, no. For listed entities, if you want to communicate any key audit matter, then this particular paragraph will come into picture. Suppose if you don't have any key audit matter, even then this paragraph will be there, but you need to clearly mention there are no key audit matters. That's how this paragraph will come into picture. And coming to positioning of these paragraphs in the audit report, I gave you the acceptable order. Actually, if you observe, no, basis for opinion. Until here the position is fixed. Then if material uncertainty SCA 570 situation comes, then fifth paragraph will be material uncertainty. Suppose if it is not there, then you can give key audit matter. Suppose if you want to use emphasis of matter also, then actually there is a mixed argument here. People, some claim that emphasis should come first, then key audit matter should come next. And other matter, if you see, some people say other matter will come after auditor responsibilities para, but before report on legal and regulatory requirements. Even if you observe the audit reports formats that we are seeing, other matter paragraph, if you observe, that will be there somewhere above, exactly after auditor responsibilities discussion, other matter paragraph will be there. But there is nothing wrong if you keep other matter paragraph exactly after emphasis of matter para. There is nothing wrong. Getting it? With respect to other matter paragraph, this is the right position. Even the standard did not say that. But remember, the information you are communicating in other matter paragraph regarding branch audits, all that is very, very important for the user to understand your responsibility. And moreover, this auditor responsibility paragraph is a general responsibilities. Which one you have to make the user understand more clearly? Your general responsibilities, the user have to be more attentive, or your specific responsibilities, he have to be more attentive. Specific responsibilities. So you can place other matter paragraph in the above itself. And then you can give information on other information. Or instead of discussing all this, just to follow standard order, happy, opinion 700. Basis for opinion 700, and if at all you are giving modified opinion also, here only it will come. Then 570, since the standard clearly says you have to give there itself, so you have to give it. After opinion, even 570 is the first order if it is there. Then 701, then 706, then 720. Very reasonable, order, the standard order wise, numbering wise. So that's about positioning of the paras. Okay, maybe when you're reading, you may get a doubt like this, or is it the same positioning should we follow? It is acceptable position, I'm saying you. I'm giving you what is acceptable position. Getting it? Fine. Now we'll start without wasting much of your time. We'll directly enter into SCA 570. SCA 570. SCA 570, which deals with going concern. Just a minute. So going concern. So what is this standard is about? Going concern. Sir, we already know what is going concern. Sir, it's an accounting assumption. It's a fundamental accounting assumption which we already know in our CA foundation itself, in CPT itself. Yes, I know. What are the, going concern is one of the fundamental accounting assumption. One of the fundamental accounting assumption is going concern. Yes, very much we are all aware of it. But in the context of audit, what is the relevance of this going concern? If you once observe, what is the objective of the audit? What is the objective of audit? To obtain reasonable assurance that financial statements are free from material misstatements. Yes or no? We have to ensure that the financial statements are free from material misstatements. There should not be any material misstatement. Misstatement includes any statement, something which is wrong. And if you observe, every company on its notes to accounts first page itself, they clearly mention that the financial statements are prepared on going concern basis. So the management is making a statement on the face of the notes to accounts that the financial statements are prepared on going concern basis. And remember, you are certifying that notes to accounts also. When you are certifying that notes to accounts, naturally, you are also certifying the statement made by the management, which means you have the responsibility to check whether the statement used by the management going concern basis, is it right or wrong? Is it right or wrong? Before I even enter into the in-depth of the standard, I would like to give you one basic idea how important it is, the going concern assumption. See, going concern assumption, because of this assumption only your balance sheet always tallies. Yes, your balance sheet will tally only because of the going concern assumption. And because of the going concern assumption only, we are following cost model for fixed assets. And because of the going concern assumption only, we are following cost or NRV, whichever is lower for inventory. See, suppose if you look at a plant and machinery, original cost is 100 crore minus accumulated depreciation is 50 crore. The net value of the plant and machinery, net block value is 50 crore. This is a plant and machinery I'm talking about, not land or building, plant and machinery. Tell me confidently, if I sell this plant and machinery today, as on the date of balance sheet, let us assume 31st March 2020, do you think the organization will exactly get 50 crore money or more than 50 crore money? Cannot say. In fact, I can confidently say that the 50 crore worth of plant and machinery whose WDV, like book value, is 50 crore. If you sell that plant and machinery, sometimes you may get less than 50 lakhs also. Yes, sometimes it may be less than 1%. Sir, how, sir? Most of the plant and machineries that are used by the enterprises are customized. Understand? Customized plant and machineries. For customized plant and machineries, there will not be a ready-made market available. Nobody will be a buyer. Nobody will buy. If you sell it in piecemeal, you hardly get 50 lakhs. Maximum 50 lakhs. But then, we are showing it at 50 crore as book value, carrying value. Why? Because why I want to sell? I don't have intention to sell, right? If I am intended to sell, then I'm worried about the market value, how much I can realize, all that. But the problem is, I don't have intention to sell. I want to use it for my business. I want to use this machine for another 10 years, generate cash flows whose present value is more than 50 crore. That is what we call it as recoverable value in accordance with accounting standard 28 impairment. In accordance with the standard impairment standard. Because we want to use that asset and we want to use it for another few years, generate cash flows. So by using this asset, I can generate more than 50 crore worth of cash flows, and that is what we call it as recoverable value. Why I have intention to sell? Why do I sell when I'm using it? Okay, you are saying you want to use it for another few years and recover this value. Can you use it for another few years? I mean, can you run your organization for another few years? Of course I can run. That is the reason why I have chosen going concern assumption. Understand, going concern is not an assumption. First point. Though I am using it as an assumption, it's not assumption. Going concern is an ability. First understand. Going concern is an ability. Only if the organization can have the going concern. You know what is the going concern? Going concern. The concern means organization. Organization will not have any halt. It will be going. Going concern means our organization will be running successfully. There will not be any halt or stop. So our enterprise will run successfully in near future. We have the ability. Only if you have the ability to run your organization in the near future, you are eligible to choose this assumption. If at all your organization is unable to run in near future, you cannot have going concern assumption. You cannot choose going concern assumption. It's impossible for you to choose going concern assumption. Today you see Anil Ambani, Adag group companies, majority of the Adag group companies, Reliance, like Anil Ambani group companies. Many companies are not having any prosperous contracts, all that. There are no contracts for them. Okay. And if you ask me, next year will the company be running or not? Not sure. If that company is choosing going concern assumption and preparing the financial statements, as an auditor of that company, you have to figure out, you have to pinpoint this, you have to finger this. You have to pinpoint, yes, the assumption used by the management is not right. You have to clearly say that. And only when the going concern assumption is used, you will prepare financial statements and your next FIRs and all will be there. If at all going concern assumption is missing, we don't prepare financial statements. If going concern assumption is not there, what we need to prepare, liquidator final statement, not the balance sheet. You see, probably you would have done in CA Inter liquidation of companies chapter. Post liquidation balance sheet, is there any such concept? No. Once you liquidate, where is the company to have a balance sheet? So the same logic. So going concern, management will choose that assumption because no management will have intention to liquidate the company. They always choose it. As an auditor, you have to check whether management usage of going concern assumption is right or wrong. You have to check. Sir, is it that relevant? Yes. I'll give certain examples. 31st March 2019, Jet Airways. The financial statements are prepared on going concern basis. And somewhere in September 2019 or October 2019, entire Jet Airways collapsed. In February and March 2019 around, if I remember correctly, the Jet Airways share price was at its peak. And within 6 months, the company was in a position that they are unable to pay salaries also, and none of the flight was flying by September itself. Here, there is a massive criticism the auditors have received. What auditors are doing? Very recently we have seen the balance sheet of the company. Very recently we have seen the financials of the company. And there everything seems fine. And suddenly, overnight, entire position has been changed. Yes or no? So, understand, if at all you did not check going concern ability of the organization while conducting audit when you are attesting it, one day suddenly you will wake up hearing the company was insolvent. And every regulatory authority, the first person they'll approach is auditor. You are the first person everybody approaches. Dear Mr. Auditor, you said company financial position is true and fair. You said company has chosen going concern assumption and you said it is true and fair. The company use of going concern assumption is true and fair, whereas the company got insolvent and unable to repay. Now the company is readying for liquidation. What are you doing, mister? They'll ask you. Understand the consequences. When you're doing audit, no, what we do in article sheet, no. We see, sir, TDS challan is missing, sir, GST challan is missing. Where is GST return? Sir, in GST return, this amount is not mentioned. All silly issues. We only look at all silly issues in article sheet. But none of us look at the position balancing of the company, whether the company has how much liabilities they have, how many assets they have, what are the immediate liabilities to be repaid in the next year, and do the company have the capacity to repay the liability? The company is preparing financials on going concern basis. You are thinking it's an assumption. It's a right of the company to use that assumption, you are thinking, but you are forgetting that you have to verify whether the usage of that assumption is right or not. Whether the usage of going concern assumption is appropriate or not, you have to check it out. Especially the going concern concept came into picture, especially in India. It became very popular with 2009 Satyam scam. It became very popular. Later, so many incidents happened. Another incident that happened in stock market is in 2017, ILFS drop. When infrastructure leasing financial services company, when there is a steep down, suddenly, so many investors have lost money. 2018 and 19 around DHFL, D1 Housing Finance Limited, similar. They are also unable to, they're just defaulting. I will show you ILFS audit report also, 17-18 audit report. I'll show you ILFS audit report of 17-18. Auditors in their audit report specifically commented on going concern. I'll show you the report. Don't worry. So, the moral of the story, you have the responsibility to check whether an entity's going concern is appropriate or not, whether the organization's going concern is acceptable or not, whether the assumption is right or wrong, right or not. So okay, fine, sir, how do we check this? How do we check all this? How do we know whether going concern is affected or not? And by the way, going concern is an assumption, means company will continue in future, sir. Future means what? Future means what is the period for which, the auditor has to do going concern assessment. What is the period for which auditor has to do going concern assessment? We as an auditor, for how many months the company's going concern ability we need to test? From balance sheet date, minimum 12 months. From balance sheet date, minimum 12 months we need to do. From the date of balance sheet, the balance sheet which you are going to sign, from that date of balance sheet, minimum 12 months you need to check whether the company is having the ability to continue in a foreseeable future, that is 12 months. Suppose if organization, the client, the management has worked on this assessment already before you do that. If the management of the company did assessment for more than 12 months, let us assume, then follow the management assessment period. Suppose if the management is doing assessment for 20 months after balance sheet date, then follow management period. Suppose if the management is doing assessment for less than 12 months, ask them to do going concern assessment of themselves for at least 12 months. For some cases, more than 12 months is also necessary. So what I do in going concern assessment, essentially, in going concern assessment, if you ask me what exactly going concern assumption means, for me, I directly link it with cash flows of the company. I directly link it with the cash and funds flow of the company. I directly link it with that. Example, suppose as on 31st March balance sheet, the company have some liabilities and the company have some assets. Equity is not a liability. We need not repay, right? Okay, that's the last thing. So I know I'm not talking equity liability. I'm talking about all other liabilities. I will identify how much is the liability total. And when these liabilities have to be paid, what are the maturity dates? I will list out. And can I repay on that date? By the time whenever the liability is approaching maturity, do the company have enough funds, enough inflows to repay that expected outflow? I will also do this is the reason why you would have understood in corporates why they prepare cash budgets, because they have to continuously assess themselves. Can I honor next month payment? Even a well-sound finance company, even a very sound, financially very sound company also prepare cash budgets. Even a company called Infosys or TCS who are having huge cash reserves, they also prepare cash budgets. Why? Because they have to continuously test their potential of repayment. If at all you found somewhere negative cash, somewhere you found there can be a possibility of default, immediately go and ask management what management is going to do to overcome this default. First of all, this is an assessment which you should not do. First, management has to do, you verify their workings, is it right or not? Getting it? So if management have in their workings identified some deficit, ask them what are the alternatives so that this deficit cannot be arisen. So management would have said, oh, no sir, we have OD facilities are already. So here 3 crores deficit is there, no, but we have 10 crore OD from also and so banks, sir. We will just get the OD, repay it. And OD has to be repaid in the next month, sir. For that month, do you have inflows? Next month there is a positive inflow. So they can offset with OD. If they are able to give you suitable workings and proofs that yes, they can continue for the next 12 months minimum without any interruption, without any default, fine. You can trust them and accept, yes, going concern is appropriate. From now the actual discussion is starting now. More important, reporting related discussion I'm starting now. Be careful. Now you can understand, now you can relay the management that yes, going concern assumption is appropriate. Why? Because there are no uncertainties about default. There is no situation or indication, there is no indication that the company will, collapse. No indication. I did all the possible analysis, all possible provisions and all possible losses, everything has been taken into account. No possibility or indication of collapse of the company. So company going concern assumption is appropriate. So after you analyze, after the auditor, after analyzing going concern assumption, he may come into three kinds of conclusions. Broadly, the auditor can come into three kinds of conclusions, for which I'm also giving you practical cases. Sometimes some practical examples I will slightly modify for making you understand more clearly the subject. Fine. So auditor, after analyzing going concern of the going concern ability of the organization, he may classify broadly into three types. The answer: 1, yeah, no problem, going concern. The going concern is appropriate. The auditor may think, yes, going concern is appropriate. Yes, going concern is very much suitable. And how they prepared financials? Using going concern assumption. What they have used is appropriate, you're only saying. So is there any material misrepresentation or misstatement? No. So obviously, in this context, you give which opinion? Unqualified opinion. Over. Very simple. Suppose, let us assume for this, let us name a company, Reliance Industries Limited, Geo Communications. Let us take an example of Geo. Then, third situation, directly. After you analyze entire company prospects, everything, you understood, within next 12 months, you have to pack your bag. You told the management also within next 12 months, they have to pack their bags. And the management also in their cash budget, so many deficits are there. They don't have any alternative financial arrangements in order to fill the deficit. They don't have any arrangements also. And even management also accepted openly, we can't comply, we can't repay, we can't fulfill, we can't honor. They've openly said, accepted. Going concern is inappropriate. Going concern is inappropriate. Going concern is inappropriate. And but what company did, But financial statements are prepared using going concern assumption. Financial statements are prepared using going concern assumption, and you have sufficient appropriate evidence that it is inappropriate. You have a clear-cut evidence, you have a sufficient appropriate evidence that going concern is inappropriate, whereas financial statements are prepared using going concern assumption, and company want to now issue the financials as it is, without going concern, without even complying with going concern assumption. They want to issue the financials with going concern, whereas in reality it is not there. It is completely a misrepresentation. Now tell me, when going concern is missing and the financials are prepared using going concern assumption, tell me everyone, do you think the financial statements will be materially affected or pervasively as a whole will be misrepresenting? Exactly. As a whole it will be misrepresenting, because when going concern is affected, it is not one or two items of the balance sheet or P&L which is affecting. Entire balance sheet, entire P&L, financial statements, picture itself will change. We don't follow fundamental assumptions, accounting standards and all, we don't follow if going concern is not there. Only if going concern is there, standards and all applicable. So auditor has to give straight away, no more further discussion, adverse opinion, plus indicate the reasons in basis for adverse opinion section of the auditor's report. So auditor has to straight away give adverse opinion and indicate the reasons in basis for adverse opinion section of the auditor's report. That's the third situation. There could be a mediocre situation. Example for this, I don't want to take, but actually BSNL position is similar to this. Because BSNL is still surviving because of the broadband connection they have. If it is cellular segment, BSNL position is actually going concern inappropriate. The BSNL cellular wise, the segment wise, it's inappropriate. BSNL is surviving because still the government offices are using BSNL landline phones and BSNL broadband data network. So it is surviving. Fine. So example BSNL. Middle situation. It is not appropriate. At the same time, it is not inappropriate also. Huh? Sir, do you think such kind of situation possible? Yes. Going concern is appropriate. Going concern is appropriate. But a material uncertainty exists. See, such an important observation. A material uncertainty exists. Going concern assumption is appropriate, but a material uncertainty exists. For this, I would like to take Vodafone example in 2019 position. Vodafone situation in 2019 position I want to take. Actually, right now it is not that scenario, but 2019 Vodafone situation I would like to tell you. And this is the same situation ILFS are having in 2017-18. Vodafone is having in 2018-19. A similar situation. What is that? Going concern is appropriate, but material uncertainty exists. What is that? Now you take Vodafone in 2019, no? Vodafone you take in 2019, no? 2019. What happened is the company actually having good customer base. Okay, many customers are migrating to Jio, but then with the existing subscriber base, after especially merging with Idea, with a good with an existing subscriber base, they are having decent cash flows, operating cash flows, everything is fine. But the biggest problem for them was AGR dues, which are payable to Telecom Regulatory Authority of India to the tune of 58,000 crore suddenly came into picture. Suddenly it came into picture. What is AGR due is very simple, adjusted gross revenue due. Every telecommunication company has to pay on a periodical basis as per the telecom regulatory terms and conditions some percentage of the total revenue to the telecom regulatory as some spectrum fee, as a spectrum fee. Ad hoc payment will be there whenever a spectrum has been got. Whenever they got a spectrum 4G or 5G or 3G spectrum, they will pay ad hoc fee. In addition to that, variable pay has to be made. So that is one of the terms. But what happened in this issue is earlier, telecom regulator is not collecting regularly that payment because of some issues. It was kept in abeyance. Suddenly in 2018-19, telecom regulator passed an order on all these companies that they have to pay spectrum fee within a short period of time. And at that time only Vodafone is already facing severe crisis of unable to retaining their existing subscribers. They are continuously moving to Jio. But then they are surviving with operating flows. They are able to pay salaries. They are able to pay creditors on time. Everything is going smooth. But they don't have any profits. They are still in losses. But earlier they have accumulated profits, right? With that they are surviving. They are borrowing and surviving. Somehow they are doing it. But a big shot has happened on them with an order, telecom regulatory order, 58,000 crore. And Vodafone went to Supreme Court. Why should I pay? And Supreme Court said, this is your liability which you agreed, you have to pay. Oh my God. So suddenly Supreme Court also said Vodafone has to pay 58,000 crore amount, worth of amount, and they gave a deadline. As on 31st March 2019, see, actually I have modified the story slightly. I'm not giving an entire story. It will take so much time, but I just want to make you understand. As on 31st March 2019, they prepared balance sheet on going concern basis, and their liability is somewhere in the December 2019. They have to pay 58,000 crore in the December 2019. If you keep this liability aside, this company have very much potential to repay everything except this. If at all company has to repay this, in fact, the then Vodafone CEO has openly claimed, if at all government is willing to collect it, yeah, we will pay by liquidating the company. We will pay by liquidating the company because that's the only possibility they have. That's what the Vodafone CEO have directly replied. Yeah, he openly replied. You can just open Google it. So he said very clearly, the only possibility is we have to sell off the company and leave the country and pay the government dues and then leave the country. That's the only possibility we have. No way to pay 58,000 crore we are. Now running operating activities itself became a difficult challenge. Later, now also, even today I'm telling you the issue is going on. They are paying in a deferred payment basis, like installments basis. They have entered into some contract with the government. So now they are paying in installments, all that something. As on 31st March 2019, Of course, auditors have not mentioned it, but what I felt is Vodafone position was like, okay, going concern is appropriate. Actually, you know what they did is Supreme Court also passed an order. They went for review petition. They went for once again review. Since the petition is in review, so 50% chances are there that cases will turn favor to Vodafone. Cases will turn favor to Vodafone. Some 50% chances are there. Okay, so even the lawyer is very much confident that the court will allow certain relaxations, all that. Company position was what, you know? Going concern is appropriate, but it depends on the case judgment. It depends on the case judgment again. Right now it is appropriate as on 31st March. Within next 12 months, if the judgment comes negative, we have to wind up. If the judgment comes positive, we can continue. But we will pay installments basis something, some agreement. So, though going concern is appropriate as on today, but a material uncertainty exists. I rightly linked you the Vodafone example to make you understand better. So, though going concern is appropriate, but a material uncertainty exists. I know going concern is appropriate. We can repay all the liabilities, but what about that big contingent liability? If at all a case was negative, unfavorable to us, we have to liquidate. If it is favorable, okay. Now, is it favorable or unfavorable? Uncertain. Is that uncertainty small or significant? Very big. It is life and death issue. So, going concern is appropriate, but a material uncertainty exists. That's the middle situation. Suppose if auditor concluded that the enterprise, your client position is like going concern appropriate, but material uncertainty exists. If this is the situation, what you'll do? So what as an auditor you are going to do? Two situations here. Are the financial statements adequately disclosing this fact? Are the financial statements adequately disclosing the fact? Yes. See, actually this is the question, sorry. So, going concern is appropriate, but material uncertainty exists. Going concern is appropriate, but material uncertainty exists. Then auditor has to look at this question. This is the only question auditor has to look at. Are the financials disclosing this fact? See, going concern is appropriate, but material uncertainty exists. So only if the case was favorable to the company can run in near future. Otherwise, the company have to liquidate. So within 12 months, next 12 months, can the company run successfully? Uncertain. I cannot say yes, I cannot say no. Uncertain. Now, whether such uncertainty, is it disclosed in the books of accounts? Is it disclosed in the financial statements adequately? If the answer is yes, express unqualified opinion. Company so honest. ILFS is the best example. ILFS, they are having a severe position like this in 2017 and 18. And you know what they did? They honestly disclosed in their notes to accounts, dear shareholders, we are actually facing a severe financial crisis. Within next 12 months, we are arranging for restructuring plan, alternative financing methods, asset financing method, something. If it went successful, we will continue. If not, we may have to liquidate. They clearly mention, honestly mention in the financials. See, going concern, there is a problem, you understood. And the problem is disclosed in the financials honestly by them, no? Then tell me, why do you object? Our duty is what? Whatever shown in the financials is right or wrong. Is it right or wrong? That's what you have to tell, yes or no? Suppose if the financial statements are showing like going concern is appropriate, the company is showing confident in the going concern appropriate, and you know that is not correct. In such a case, it is misleading, right? So you give adverse opinion. But here, ILFS honestly in the notes to accounts disclosed about the material uncertainty they are facing. So they are very, very truthful and honest to the shareholders with respect to material uncertainty. They disclosed. So you give which opinion? Unqualified opinion. Suppose if the financial statements are not adequately disclosing, the question is, are financial statements adequately disclosing this fact? No, the financials are not disclosing. Company is still claiming going concern is appropriate, and I am the auditor. I have sufficient appropriate evidence that there is a material uncertainty, and I asked management to show it. Management said, no, sir, we won't show it, sir. Okay, you won't show it. According to me, they are misleading. The financial statements are not showing. So I will give a modified opinion, which may be qualified or adverse depending upon the severity. Depending upon the severity, I will either give qualified or adverse. But even the standard uses the word either qualified or adverse. But I'm telling you, since it is a going concern issue, you directly give adverse. You directly give adverse in future if it comes. Plus, mention the reasons. You have to give the reasons, right? Where? Basis for qualified or adverse opinion section of the report. That's the standard. But still not yet over. Don't relax. Now you see the first situation. Listen to this discussion very carefully. Now I am linking you with that audit report. If you see the audit report here, material uncertainty related to going concern is there, right? Fifth point. When that point will come in the audit report, sir, you didn't say about that. I know, I remember. Now I'm going to say you that. Suppose, as I already said, a going concern is appropriate plus material uncertainty exists. Company honestly disclosed. So since company disclosed everything true and fair, what you said, since it is everything is true and fair, nothing to object, everything is honestly showed. So I just have to say, yeah, they are correct. Correct means what? Unqualified. I will give true and fair opinion. Now you see, if I give unqualified opinion on this situation, any shareholder looking at my audit report, as soon as he see the unqualified opinion, he will come to a conclusion that, hey, company, everything is fine. He doesn't know, layman, no, he doesn't know that. There is some significant issue which is there in the financial statements, some material uncertainty in the notes to account, somewhere they mentioned. So that issue, I don't know whether this fellow will read it or not. I give unqualified and he looks at my unqualified opinion and he will chill. Yes or no? So what should I do? What should I do? Think of it. You will immediately, I think it would have striked for you. Sir, we will highlight that. That point is there no material uncertainty related to going concern? We will highlight it. Where do we highlight? Exactly. Emphasis of matter paragraph. Where do we highlight? Emphasis of matter paragraph. We will highlight that material uncertainty point, sir. Company showed in the notes to accounts no, that they are having problem related to going concern certainty. That point will highlight in emphasis of matter para. Very good. Your thought process is absolutely correct. But then I have an objection here. See, generally, whenever something is there in the notes to accounts, when something is there in the notes to account which I feel important, I always highlight them in emphasis of matter paragraph as per SA 706. Okay. But tell me, going concern. Here the issue I'm talking about is the going concern ability of the organization. That too material uncertainty. Is it similar to the item which I want to highlight generally? I know some important points I'll highlight. Suppose company is having a contingent liability, I highlight under emphasis of matter para, some contingent liability. Now tell me, going concern issue and contingent liability, are they of equal importance? No. Are a going concern issue, man, that's not a general para to highlight under emphasis. Emphasis of matter para, you use it for highlighting. That's not a general issue to highlight under EOMP. That's a big issue. It's a life or death issue. So SA 570 has brought another side heading. SA 570 has brought another side heading in the audit report. Material uncertainty related to going concern. There is a separate heading in the audit report to highlight that issue. There is a separate section given in the audit report to highlight that issue. Material uncertainty related to going concern. A separate section is created because it is such a big item. Such a big item. You have to highlight that point in audit report. If you give unqualified opinion and leave, no, people don't know that there is a material uncertainty. I don't know whether the shareholder reads that 95th page in notes to accounts. I don't know. So don't take chance. Don't take chance. Use a dedicated para for that. Dedicated para for that. By the way, I am using a dedicated para. Is it to give objection? No, I'm not objecting. I'm in fact appreciating the company. They're honestly showing everything. I'm only highlighting it. Shareholder, 95th page in notes. I don't know whether he'll read it or not. So I'm just highlighting it. I'm just highlighting it under a specific para called material uncertainty related to going concern. This is a specific para. Sir, here what you are saying is we are highlighting here only. Like here also, similar wordings we draft like emphasis of matter para. Exactly. Material uncertainty related to going concern. Below what we write, we draw your attention to note number 40 of the notes to accounts, which speaks about material uncertainty related to going concern. Company is facing a severe crisis. Company is facing a case with the Supreme Court. If the case turns negative, you just explain it. And at the end of the para, at the end of the material uncertainty para, you should also mention one more. In respect of above matter, our opinion is not modified. Same like emphasis of matter. In fact, if you ask me, material uncertainty related to going concern, emphasis of matter para, they both are actually same. Names only different. In emphasis of matter, you generally highlight various issues. If it is a going concern uncertainty issue, use a separate paragraph. It's a special emphasis of matter paragraph related to going concern. If you ask me what is material uncertainty related to going concern, it is a special emphasis of matter para for going concern issues. That's it. Shall we see the before I again go into that, now I would like to ask you one question, conceptual clarity, whether you got it or not. I will check. I will give the statement. I will give a statement, not writing it. I'm just saying a statement. You have to think the answer. You have to think about the answer. Material uncertainty related to going concern. Material uncertainty related to going concern, which is a paragraph used in the audit report to highlight a note point about material uncertainty related to going concern in the notes to accounts. This paragraph comes in the audit report. This paragraph comes in the audit report when auditor concludes going concern is inappropriate. The statement true or false? False. The statement is false. Why? If the going concern is inappropriate, you give adverse opinion, man. Now, when this paragraph will come? This paragraph will come in audit report only when auditor concluded there is a material uncertainty and that point is very well disclosed in financial statements by the management honestly, and you gave unqualified opinion in respect of that, then you are highlighting here. Suppose, sir, company did not disclose material uncertainty, sir, related to going concern. They are hiding it, sir. Material uncertainty is there, but company is not showing. You give which opinion? Qualified or adverse opinion. In that moment, do you think this paragraph comes into picture? No, not at all. Because you're already objecting that in basis for opinion para. You're already mentioning in basis for opinion para material uncertainty. See, material uncertainty para is a highlighter para, I'm telling you. If you want to highlight, means it should be there in the financials. No. Suppose if the financial statements do not disclose material uncertainty, how can you highlight under that para? Hey, there is no disclosure, man. How can you highlight? Disclosure itself is not there. How can you highlight it? When material uncertainty para will come into picture, it will come into picture when company disclosed in the financial statements properly material uncertainty. Since they disclosed everything true and fair, you gave unqualified opinion. But your unqualified opinion may be misinterpreted by people. So the standard says, dear auditor, very good, you gave unqualified opinion because company did genuinely, honestly. But do one thing, create a separate para, material uncertainty, highlight there that note point. Highlight that material uncertainty para about that note point. Highlight it, that's it. You are not giving any objection. So mention below you are not having any objection on that. It is just a highlighter para which will come into picture only when auditor gave unqualified opinion. Make a note here. Make a note here. This paragraph will come into picture. This paragraph will come into picture. Material uncertainty related to going concern comes into picture only when auditor gave unqualified opinion in respect of going concern. in respect of going concern disclosure, your opinion is unqualified. Only then this point will come. Why you gave unqualified, man? Is it because company going concern is good? No. Company going concern is inappropriate. I mean, is appropriate, but uncertainty exists. But they disclosed it honestly. That's why I gave unqualified opinion. I hope you are able to understand. So that's about material uncertainty related to going concern. Material uncertainty related to going concern. I hope you're confident. You know, most of the standard is almost completed. Now we just have to do a reading, and at the time of reading, once again I will repeat entire this content. Okay, so I hope I'm able to show you even the examples also. Now I will show you how material uncertainty related to going concern will come. ILFS 1718 audit report. I'm just taking ILFS audit report 1718. Same like yesterday we have seen, no, consolidated financials audit report. That audit report I'm opening. Audit report on consolidated financial statements of the ILFS company I'm opening. I think we have crossed 213 page le. Yeah, see, this is the audit report of the ILFS company. Actually, no, in this audit report, if you observe, no, opinion will be somewhere in the middle. If you observe, opinion will be somewhere here, not in the first para. Why? Because this is a old audit report format. At the beginning of audit report chapter, I told this. Until financial year 17-18, audit report formats are different. And the audit report formats are different from financial year 18-19 onwards. I told you. This is 17-18 financial year. So they followed old audit report format. Even in old audit report format also, material uncertainty related to going concern is there. Just a minute. So if you observe material uncertainty related to going concern, if you see here, exactly like emphasis of matter. Below itself, emphasis of matter is also there. You see, we draw attention to. You see here also, we draw attention to. Our opinion is not modified in respect of material uncertainty. You see here, our opinion is not modified. Even at the end of emphasis of matter, our opinion is not modified. Material uncertainty related to going concern and emphasis of matter, they both are actually one and same. But material uncertainty related to going concern para, no, it's a special para for going concern. It's a special highlighter para for going concern. It is just like emphasis of matter. When you can give emphasis of matter, when you can highlight a particular matter in emphasis, only when it is not materially misstated, only when you give unqualified opinion in respect of that matter. Same way going concern also, material uncertainty related to going concern. You know what does it? You see here, we draw your attention to note number 54 to the financial statements regarding preparation of financial statements on going concern basis for one of the subsidiary and it impact on the group. The said assumption, you see, the said assumption of going concern is dependent upon, the said subsidiary company ability to raise further funds. If the subsidiary company is able to raise further funds, no, through issue of equity shares, monetization of assets, or through other strategic initiatives, the said assumption is dependent on this fact. We choose going concern assumption depending upon this. Suppose if the subsidiary company will not get the alternative finance, the answer is it has to liquidate. So material uncertainty related to going concern. And you see note number 54B, company disclosed it honestly. Company LFS disclosed it honestly. There is a material uncertainty and auditor just highlighted here. And you see here the side heading of the opinion is just opinion, means auditor gave which opinion? Unqualified. Which means in respect of going concern also he gave which opinion? Unqualified. Material uncertainty will come into picture only when auditor gave unqualified opinion. Make a note. If at all with respect to going concern disclosures, auditor gave a modified opinion, this paragraph won't come into picture at all. That's it. That's about going concern disclosure, going concern disclosures. Now, if you open SA 570, now we need to discuss about the standard. Another 15 to 20 minutes, the standard will be over. Max 20 minutes or 30 minutes, maximum. This is a very important standard. Now I think you will be in a position to solve any sort of MCQ. I hope you're confident on the conceptual part of SA 570. So we'll read this. Hey, where is this man? What happened? Just a minute. Just a minute, I'll open it. So we'll read SCA 570 now, and now you are going to get few more new points. When we are reading, we are going to get few more new points. Be alert. SCA 570. What is the objective of SCA 570? What is the objective vested with the auditor? Very simple. The objective is we have to obtain sufficient appropriate evidence regarding the appropriateness of management's use of going concern basis of accounting for preparation of financials. The company management have used prepared financials using going concern basis. You just have to get sufficient appropriate evidence. Is it appropriate? Is it okay? Is it okay to use going concern assumption? That you need to get. And based on the evidence you got, conclude whether a material uncertainty exists. Identify, is there material uncertainty? And if so, report accordance with the standard. Accordingly report it. And what is the period covered for assessment of entity's ability to continue as a going concern? For what period you will do assessment of going concern? We generally follow management period. Whatever the period management have chosen for going concern assessment, same period we follow. Suppose if the management have chosen for less than 12 months from balance sheet date, reporting date, then we will ask them to verify up to 12 months. For some cases, more than 12 months is also justified. Suppose no, as on 31st March 2020, I am looking at about a company. For this company, no, one case related hearing or some judgment will come somewhere in 21 September, after 1 year. Then I need to check going concern assessment up to that period. So the assessment period under audit for going concern testing shall be same period as adopted by management. See, this can be questioned for 3 marks itself at CA CA final itself. Okay, what is the period covered for assessment? And this may be tested even for MCQs also. Be careful. So assessment period shall be same period. However, if management is used less than 12 months, then the auditor shall request management to extend the assessment for at least 12 months. Dear management, please verify going concern ability for at least 12 months. Further, in some cases, estimation for more than 12 months is justified. In such a case, assessment shall be for such extended period. Then, one more thing, what you need to do? For every company, see, suppose if I go to Reliance company as an auditor, tell me, do I need to think of going concern there? No need. But every company, irrespective of their strong financial position and performance, I need to do a preliminary assessment. Many students confuse between point number B and point number D. Point number D is what? Audit procedure. If there are any doubts, that cast going concern assumption, like if there are any doubts on the going concern ability, significant doubt on going concern. Suppose you got a doubt on the organization going concern ability, then you have to carry out an audit procedure. That is point number D. For a normal company, I don't have any doubt. Basically, I need to check some formalities, right? That is preliminary assessment. Preliminary assessment you have to do regarding use of going concern assumption by management. Every company, wherever you go, you know very well the company is very strong and good. Still you have to do this preliminary assessment. This is something which you have to do for every company. Preliminary assessment is the keyword. Write about preliminary assessment for entities use of going concern assumption. You have to write this answer. This is not an audit procedure. Of course, it's an audit procedure, not an audit procedure as I discussed in point number D. What is preliminary assessment? For every company, the following factors I will consider. Nature and condition of the business. How is the company business? What is the nature? What are the external events or condition? How the law and regulatory for this company, how it is favorable? Information about operational forecast. Yeah, company, I've seen journals also, company is performing very well. Significant events or transaction that occurred during the period. No, there are no catastrophes, nothing, everything is insured. Prima facie, when I see the company is excellent. No doubts on its ability to going concern. Its inability for going concern. There is no doubt at all. Sir, you are saying many number of times doubts about going concern. When do we get these doubts, sir? When do we get this kind of doubt? Oh, how do we know entity's going concern is affected? How do we know going concern something is wrong? How do we know? Will there be any symptoms? Will there be any indications to the auditor? Will there be any clues, or will somebody come and tell you? Last point you have to come. What are the indicators? What are the indicators that cast a doubt on going concern? Yeah, company going concern, something is wrong. Something is wrong with the company's ability to continue in future. What will indicate that kind of doubt? What will prompt you to get such kind of doubt? Yeah, there are some indicators like financial indicators. There can be operating indicators. There can be other indicators. And because of these indicators, I will stop point number B and I will go to point number D. I will go in-depth audit procedure related to going concern. Generally, when I check point number B, preliminary assessment, if I did not find any of these indicators, I will close the standard, go with my work. Company going concern rock solid. But when I am doing preliminary assessment, if I get any of the following indicators, I will have to do in-depth audit procedure as mentioned in point number D. If the question is, the auditor has identified indicators that cast a significant doubt on going concern assumption, what audit procedure you do? The answer is not Bombay, point number B. The answer is Delhi, point number D. I'll come to that. So let us look at first indicators. The following are the examples or indicators. The following are the examples of events or conditions that may cast a significant doubt on entity's ability to continue as a going concern. First one, financial indicators. The company balance sheet position, if you see, it's net current liability. Net liability, working capital is negative. Oh, net asset value is negative. Oh my God, this is a severe threat. Company at any time default. Fixed term borrowings are approaching maturity without realistic renewal or repayment. I borrowed debentures. They arrived maturity, we didn't repay. Subrata Roy, Sahara Group was in jail because of this issue. Okay, Sahara Group. Next, withdrawal of financial support by all the creditors not giving credit. They're not giving credit. Kingfisher Airlines, Indian Oil Corporation stopped sending fuel on credit basis. Only if they pay, they'll send the fuel. Jet Airways also the same way. Negative operating cash flows. Understand, negative operating cash flows. BSNL, already operating cash flows are negative. By the way, negative operating cash flows doesn't mean always going concern affected. Suppose you take all new companies like Amazon, Flipkart, Oyo, Paytm, for them operating cash flows are negative, but for them it's a penetration strategy. There is a big investor behind. So no need to worry. Not every time negative operating cash flow is a going concern effect. Okay, it's not an effect of going concern. Sometimes it may be a market penetration strategy. It may be a startup. Financial ratios are adverse. Substantial operating losses. Significant deterioration in value of the assets used to generate cash flows. The assets which will generate cash flow no more useful. Substantial operating losses. Arrears. Discontinuance of dividends. Suddenly company discontinued dividend on account of cash crunch. It's a going concern indicator. Inability to pay creditors on due dates. On time we are unable to pay. Of course, already repeated. Inability to comply with term loan agreements. If at all company defaulted any EMI, interest repayment, OD repayment, indicator something is wrong. Change from credit to cash on delivery. I already told Indian Oil Corporation, like Kingfisher. Inability to obtain financing for essential new product development or as other essential investment. Companies unable to get finance for new. Right now, Ford India, the position is similar to that. Ford sales, in especially April month, April 2021, there is a model called Ford Figo. Actually, I am having two cars. One is S-Cross, another one is Figo. Figo is such a beautiful car. Of course, sometimes Indian market don't accept it. Okay, only one car was sold in the entire country. Only one car was sold. Once upon a time, popular model. Why? Because there is no development and company is not getting funds for development. Fiat Motors closed already. Fiat Motors closed. Chevrolet, cars company, Chevrolet. Earlier you have Beat. There is a car called Beat. There is a car called Cruise. The company has closed, shut down its business. There are so many companies that are closing it down slowly. Operating indicators. Sometimes no going concern is affected. There will be some operating indicators. Example, management only want to liquidate the company. Loss of key management without replacement. In 2019, Infosys, when the CEO resigned, the stock was trembled. Like so many ups and downs in the Infosys stock price in 2019 when the CEO resigned, Vishal Shikha. You can see that news in this one. Infosys CEO resigned. Loss of key management, no, it may sometimes severely impact going concern ability. Loss of major market. Suppose BSNL, no, why BSNL today is unable to compete? 4G spectrum, they didn't get proper allocation. Tomorrow if 5G auction comes, if BSNL did not get 5G, BSNL will close off. Loss of key customer. Loss of franchisee license, suppliers. Labor difficulties. Like you would have seen, no, state road transport corporation companies like APSRTC, TSRTC, KSRTC, MSRTC, BMRSRTC. Yes or no? Bus companies, the laborer will do strikes. If they do strike, no, that company cannot continue. Labor strikes is a very potential threat. Shortage of important supplies. Sometimes the supply based on which your product has a demand, based on which your product is manufactured, if the supply is in shortage, going concern is affected. Emergence of highly successful competitor Jio. So it's a big threat for Vodafone, Idea, Airtel, all of them. Emergence of highly successful competitor. Now Reliance is entering into e-commerce business, and all the companies, Amazon and all, are creating a propaganda against Reliance. Okay, of course it's all economic issues. Now if at all you found any of these indicators, no, you have to do an audit procedure. The following audit procedure should be performed by the auditor if the auditor identifies any circumstance like indicators we have seen that cast significant doubt on entities going concern. Significant doubt on entities going concern. The entity going concern is affected. I got a doubt. You have to do the following. First one, is there a policy of assessment of risk related to going concern by the management? Do management has a proper policy relating to risk assessment of going concern? If so, look into it. Evaluate management's plans for future actions. Future, these are the threats, no. Indicators are there, no. What is the management plan of action? How to deal with them? Whether entity has prepared a cash flow forecast based on reliable data. Ask management, where is the cash flow forecast? I am finding tomorrow you will default. Show me the cash flow now. And fourth one, not required. Fifth one, get a written representation, declaration from the management that their future plan of actions and feasibility. Yes, management showed you future plan of action. Get a declaration that they believe it will work. Because as an auditor, I don't know whether how far they will work. I will get an expert opinion if needed. But at the end of the day, whatever management gives me, I have to believe. So get a declaration. You check it. In addition to that, get a declaration. Written representation. What is written representation? We will discuss in SA 580 standard. SA 580 standard. Then you have to do further analyzing cash flow, profit and other factors. You have to analyze latest interim quarterly financials if available, and now ask entity lawyers, legal counsel regarding any pending litigations. Example, Vodafone. Look at the minutes of the meetings of managing committee, audit committee, remuneration committee, nomination committee, board of directors, all of them. You may get some information and see whether any subsequent events happened that affects entity going concern, and see whether whenever the company want, do they have borrowing facility if necessary? Is there anybody suddenly is there anybody, is there any financier who will give suddenly if the company needs money? Check out all this. After checking all this procedure, if you conclude going concern assumption is inappropriate, after you perform the audit procedure, first you did preliminary assessment, you saw some indicator, then you did in-depth audit procedure as mentioned in point number D, then you understood going concern is inappropriate. If the financials have been prepared using going concern basis of accounting, but the auditor judgment, management use of going concern basis of accounting for preparation of financials is inappropriate. Look at the word inappropriate. The auditor shall express an adverse opinion. Or no, going concern is appropriate. You felt unmodified opinion, you'll give, that's okay, leave it. What if you felt going concern assumption is appropriate but a material uncertainty exists. If it is so, what is the thing? How will you take the action? And suppose material uncertainty is there. Going concern is okay, but uncertainty is there. Financial statements do not disclose adequately. This point, no, company is hiding it from people. Misleading. Audit, if the auditor concludes that the financial statements are not adequately reflecting material uncertainty related to going concern, then the auditor shall express a qualified or adverse opinion and explain reasons for modification in the basis for qualified opinion section, which means in audit report, material uncertainty related to going concern para will not come. Understand that. Suppose financial statements are very cleverly showing the disclosure, honestly showing the disclosure, genuinely they're showing the disclosure. If auditor concludes financials are adequately disclosing the material uncertainty related to going concern and management plan of action to deal with these events, everything is honestly disclosed, then look at the C point, then you read the B point. C point, then, and you can strike off this also point, then the auditor shall express an unqualified opinion as the entity adequately disclosed. Since company honestly disclosed, give unqualified. But then in addition to that, what is one more thing? Further, the audit report shall include a separate section under the heading material uncertainty related to going concern and draw the attention of the reader to that specific note point which is presented disclosed adequately by the management regarding material uncertainty. Plus, below that you have to write further, auditor shall state that his opinion is not modified. His opinion is not modified in respect of above. You need to clearly mention that. Whatever you are drawing attention, no, there, do you have any objection? No, right? Mention that. Further, auditor shall state, make a note there, okay? Further, auditor shall state that his opinion on the above matter is not modified. You have to make a statement like that. You know how this question can be asked? You know how the questions can come from going concern? A 2 marks question can come. Write about objective of SA 570. Write about preliminary assessment relating to entities use of going concern. Write about period covered under going concern assessment, or a combination of this they may be asking. What is the audit procedure to be followed if the auditor has identified any circumstance that cast significant doubt on going concern ability of the organization? This you have to write. Write about financial indicators 5. Write about any 5 indicators of operational in nature, and other indicators I didn't tell you. Non-compliance with statutory norms, yes bank. Other indicators I'm telling you, other indicators. Yes bank, you know, it has been now controlled by State Bank of India. 2020 this issue arose. And pending legal or regulatory proceedings against the entity, if successful, result in the claims that entity unlikely to be able to satisfy. Vodafone, if at all the court case was successful and the court demanded to pay, company cannot pay. Changes in law, regulation or government policy expected to adversely affect the entity. You know, very recently, Facebook, Instagram, Twitter and all will be banned in India. You have heard, no? Why? Because there is a change in the data privacy laws. And these companies have not complied with the e-commerce, not electronic service provider something laws. If there is a change in law and if the entity did not comply, entity may require to shut down. Underinsured or uninsured catastrophe. There is a catastrophe and some assets were destroyed. Unlucky, no insurance. Other indicators, okay? Fine. Coming back. And how another question can be asked? What is the manner of presentation of, inverted commas, material uncertainty related to going concern? Manner of presentation they'll ask. You have to write first point. If the auditor concludes that there is a material uncertainty related to going concern and concludes that the management has adequately disclosed in the financial statements about the material uncertainty related to going concern, then manner of presentation indicate, you see here, The audit report shall include a separate section under the heading material uncertainty related to going concern and draw the attention of the user to the specific note point which is mentioned in the financial statements regarding entities' ability related to going concern and material uncertainty. Below that, state that the auditor's opinion is not modified in respect of the above. Answer over. Sometimes examiner may ask you like this also. And don't say it is out of the book, sir. It is within the book. Sometimes you have to write answer on your own words by using the same thing which you learned. I think now you have got confidence on the standard. Don't worry. We have questions on SAF 570 also. You know, till now what are all we have completed. I'll just listen to this carefully. Don't stop the video. I know you're lazy. Array, this was stuck. It's okay. Okay, so you know what are the standards that we have completed? 700 we have completed, 701, 705, 706, 600, 299. Then we have covered 570. 3 plus 4, 7 standards over out of 12 in this chapter. 7 are over. Now on all these standards, I'm telling you, on all these standards we have practical questions also. Yes. We have below illustrations. There we are going to see that. Sir, why we can't see simultaneously? No, I don't want you to see now simultaneously. Now you understand concept, you remember the concept, you can easily tell me the answer very immediately. Okay, for this chapter I want to take separately. So at that time now when I'm revising, it will be like a revision for you. So what is our next agenda, you know? So 570 is over. Then I will discuss about 720 and 710. 720 deals about other information. 710 is a normal thing, comparative information, not a big deal, not a very big deal. Okay, very simple standard. Then I will discuss about coming back to audit report. Again, I will come back to audit report. If you observe, no, in audit report we have completed. I will highlight it. We have completed which one? Material uncertainty related to going concern. See, now we have completed 8 sections of the audit report. Title, addressee, opinion, basis for opinion, material uncertainty, key audit matter, emphasis, other matter. Then we still have other information. SA 720, that's our next agenda. Then responsibilities of management, auditor responsibilities, report on legal and regulatory. This is there, no? This is again one more lengthy discussion, this para. Then these are jujubes. Very small, very simple. Okay. So once we discuss 720, then I will go to this. Okay, of course, this and this I will just finish it off within 5 minutes. Then I will go to this report on legal and regulatory requirements. I hope now you understood what is our next plan of action. Once we complete all this, then how we do, you know, we will once again read right from the page 1 of the audit report chapter till the last. We will read one by one, line by line. Wherever we already finished a discussion, wherever we already seen the content, we will skip it. Remaining pending content, we will read one by one line. Certain small concepts I didn't cover, so that I will cover. That I'm going to cover. Then we will solve practical questions. Some 18 questions are there. Then illustrations, some 10 or 12 were there. Total 30 questions we have for solving. So I think probably to best of my knowledge, we still require SA 720 some half an hour to 40 minutes. Report on legal and regulatory requirements, CARO, all that is there. That will take some 3 to 4 hours. Then remaining standards and all reading everything stuff together some 6 to 7 hours. As a whole 10, max 10 hours. Max 10 hours. That's it. I'm telling you, company audit and this chapter together, the weightage is minimum 20 to 25 marks. In the form of MCQ or in the form of theory question. 20 it will come. Okay, so careful. Because 12 standards, man. Okay, fine. Carry on. So I'll come up with next video. So, welcome to part 7 of the audit report. In this session, we are going to discuss about 2 standards. Of course, they are also very important. That is, one SA 720. Another standard that we are going to focus is SA 710. Generally, these 2 standards are mostly neglected. But from past few attempts, at CA final and at CA inter, 710 is being tested many times, and of course 720 is also very important because that is one of the main content of the auditor's report. Like if you look back at the auditor's report that we are discussing, and if you recap what are all that we have covered, we have already covered this even in the previous session, we have even covered material uncertainty related to going concern also. So out of our comprehensive format as we have in our material, first 8 sections we have completed. Then the next section that we are now going to complete is other information paragraph, other information section of the auditor's report. See, whenever a student heard of other information, he wrongly confused with other matter paragraph. Other matter paragraph is SA 706, whereas other information is completely not about financial statements at all. It's not about financial statements at all. See, all the above paragraphs, 8 sections, if you observe, we are discussing directly or indirectly related to audit of financial statements. But other information is not at all about audit of financial statements. It is something else. You see here, the heading of the standard, if you observe, auditor's responsibility in relation to other information. Before I explain you the meaning, I would like to show you an annual report of a company. Let us take Reliance Industries Limited 18-19 annual report. We'll take 18-19 financial year annual report, Reliance Industries Limited. And if you observe, this is the annual report consisting of 460 pages. 460 pages. If you look at 19-20 financial year annual report, it will hardly have 250 pages in PDF, but actually it is also 450 pages only. So here if you see the annual report, inside this report, what is there inside this report? You see, financial statements are somewhere starting at 259th page, and the consolidated financials are starting at 335 and ends at 433. So broadly speaking, 259 to 433, some 180 to 190 pages only deals with financial statements. Rest of the 460 pages out of 460, even you take off this 200 round figure, 260 pages of information is given, something not related to financial statements. Something that is not part of financial statements. In fact, I can say the more accurate sentence is remaining 260 pages is something that is not part of financial statements. And if you remember, we are giving opinion. What is our objective of audit? SCA 200, if you recap, our objective of audit is to obtain reasonable assurance about whether the financial statements are showing true and fair view or not. Yes or no? So our audit report here on standalone financials is only with respect to these items. We are not giving opinion on remaining part of the financials. And if you take consolidated financial statements, here also we are giving audit report. And that report is only in respect of balance sheet, P&L, statement of changes, cash flow, notes, and silent features of subsidiary, associate, joint venture in line with Ind AS. Only that's it. Now tell me, is our audit or is our audit report covering any other content of this annual report apart from what we discussed? Definitely not. But then you see here the contents of audit report. The company is explaining about Reliance at a glance. Okay, it's good. Second point, you see key performance indicators. Key performance indicators. Okay, let's open and see whether is there any monetary things that were shown. What are the key performance indicators? You see here they have given key performance indicators. If you observe, Reliance at a glance, they have given here. And what are the key performance indicators? If you check, yeah, here they have given, you see, turnover of the company 6,22,809 crore. Understand, by the way, right now what I'm showing you is Reliance Industries Limited. Somewhere at the beginning of the annual report, company is just exhibiting, demonstrating its achievements. One of the achievements that they are demonstrating is by way of key performance indicators. And if you observe, turnover is some 6,22,809 crore, something they showed. Profit after tax 39,588 crores. Earning per share 66 rupees. And market capitalization, this is something taken from stock market figures. Here they would have given here below all that. And book value per share they would have given. Debt equity ratio they have given. Net worth of the company also they have given, and what is the formula and what is the written as per CAGR method they have given. Dividend per share, how much they have given. So how much they have contributed to the exchequer, national exchequer, in the form of taxes, they have given 1,16,000 crore. So you see, they have given so much of this information. But tell me, here they have showed no turnover 6,22,809 crore. This should be matching with our P&L. Agreed? Or no sir, our profit and loss account turnover can be different and this turnover can be different. How come? Whatever the company achieved turnover, that is only we are showing. No, here also they are showing 18-19 turnover only. In P&L, in the profit and loss account, 18-19 also they are showing 18-19 turnover only. How come they show a different turnover here and there? Obviously it should match. Agreed or not? See, if at all company is publishing facts at some news article or publication, let them give whatever the number they want to. But the problem is, in this report only, my audit report is there and the financial statements on which I gave opinion is also there. In the same report, he is also mentioning his own performance indicators in a separate segment. Of course, if you observe clearly, our financial statements and audit report is given in a separate page number, separate set is there inside this annual report, and these performance indicators are given separately. And in board of directors report also they will talk about all these financial metrics and all. And in management and discussion analysis, CGR, corporate governance report, at so many places they will be discussing about numbers like turnover, P&L, research and development expenditure, so many things they'll be talking about. But the same numbers are also there in our financial statements on which we gave opinion. Now, in the same report, we are giving opinion on the financial statements which contain some numbers, and the same information in the same report somewhere is given in the form of some other information. What we need to see? This number, suppose here 6,22,809 crore is there, right? Shall we cross verify with our P&L account? Shall we cross verify? By the way, they are saying it is a consolidated, not standalone revenue. They are saying consolidated revenue. Means as per consolidated profit and loss account, 622,809 should only be there. If at all some other number is there, no, it will mislead the user, misguide. Suppose I am a user, I am a stock market analyst. I saw this, and when I open the audited profit and loss account, it is containing some other number. Oh my God. Now I want to know what is the true number. Should I believe the management which expressed this, or should I believe the auditor which certified that? Which one? So there is a conflict. It should not be there. Such kind of conflict should not be there. So before I proceed into the actual concept, let me show you once again the consolidated P&L. What is a consolidated P&L page? Consolidated P&L is somewhere in the 347th page. So if you look at the profit and loss account, so value of sales and services, 6,22,809. Yeah, accurately shown. You see, this is the profit and loss account which is prepared as per schedule 3. And you remember, and if you observe here, this is even certified by two audit firms, means joint auditors, certified also. And this is authenticated by all the directors and chief executive officers, all the company, like whoever. And if you see, the turnover what is shown here is 6,22,809, and even in the company, in their performance metrics also they are showing 6,22,809. One example I want to show you, just one example. Matching, no? So I think shareholders need not worry, because directors of the company, the management of the company maintained numbers in line with audited financials. So they are not giving some number, random number. Okay sir, this is fine, we understood. What is our responsibility in this context? What is our auditor's duty in this context? In this context, auditor duty is, we have to ensure, see what the standard talks about, in relation to other information, what is the auditor's responsibility? What do you mean by other information? What do you mean by other information? I will straight away open the definition and then show you. What is other information? It may be a financial information or it may be a non-financial information. But remember, it is other than financial statements and audit report thereon. It is not something financial statements or audit report. I am not talking about financial statements and audit report. Financial statements is something on which I give audit report. Financial statements is not other information. What is other information then? Financial info. It may be a financial data or non-financial data included in the entity's annual report. So, but that is something other than financials. Means if you see the Reliance Auditors Report index, if you observe the index, now you see this is the annual report, right? This is the annual report, right? Just a minute. This is the annual report, right? In this annual report, financial statements are there for 190 pages. In the same report, other than this financial statement, so much of financial and non-financial data is given. That is other information. And what is the responsibility of auditor in relation to other information, which is given in an annual report along with financials on which I gave opinion? What is my responsibility? That is what the standard is talking about. What is the responsibility of auditor? You know, what is the responsibility of auditor? You know, the objective of the auditor is read the other information. Read the other information. Why? Whether there is a material inconsistency between other information and financial statements which I am signing. I have to see financials I am signing. 6,22,809 crore turnover, balance, profit and loss account I signed. And the company showed in other information somewhere at the first page or second page somewhere, but not as part of financials. Somewhere they showed in the form of performance metric, key performance metric. Somewhere they showed. Now, whether is there any inconsistency, I should check. Whether there is any inconsistency, I should check. That's my duty. Second one. Further, whether there is any material inconsistency between the other information and auditor's knowledge obtained in audit. Sometimes no. When I'm reading this 460 pages of annual report, when I read this 460 pages of annual report, remember, before the company publish this annual report, they have to give a copy to the auditor. Only if auditor agreed for this, then the company can send it. Of course, we don't do any signing of annual report and all, but it is the duty of the company to show us once the draft annual report before it is publishing or before it is published to the people. Okay, so I will get this annual report. And what should I do? I need to check all this financial and non-financial data. And when I'm checking this data, no, sometimes I may get some other new information about the company. Example, in this annual report, there is a report called Corporate Social Responsibility Report. Somewhere it will be there. Yeah, you see here. Report on Corporate Social Responsibility. Somewhere in the 170th page, there is a report. In that Corporate Social Responsibility, the company is spending on so many new projects. Why? Best example, you take Reliance Industries Limited 1920 annual report. I'm not showing you. Why unnecessary to open once again. So just understand. 1920 annual report, if you see, Reliance Industries Limited spent so much of amount, around 5.5 lakh liters of fuel. 5.5 lakh liters of fuel has been given as a donation to ambulances carrying COVID patients. You know, in the 1920 annual report they showed. In the 1920 annual report, the Reliance Industries showed 5.5 lakh liters worth of petrol or fuel was given to ambulances carrying COVID patients in almost 18 states, 240 districts. And you know, that is treated as CSR expenditure. When I read that CSR report only, I understood that company has paid so much of amount incurred for ambulances for COVID patients, and the company is treating it as CSR expenditure. Now, I need to check whether this expenditure is authorized as per Schedule 7 of CSR. As per Schedule 7 of CSR, is it authorized or not? Maybe when I'm originally doing the audit and certifying the financials, I did not get this data. I did not verify this because I do audit as per sample. I do audit on a sample basis. I did not notice this. So only when I read the CSR report, only when I read the annual report, inside that CSR report, I understood an expenditure, huge expenditure for ambulances diesel cost as part of COVID program, which is treated as CSR expenditure. Now my question after reading that, originally when I understand about the company, I don't know this. Now I got additional information only after reading that. Now I got a doubt. Is it accepted as per CSR expenditure? Suppose if at all that expenditure is not a permitted CSR expenditure activity, that amount shall not be considered as part of 2% of average net profit. That amount shall not be considered as CSR expenditure. That amount cannot be considered as spent. Auditor has to give a modified opinion on that. If at all company have shown it as CSR expenditure, which is a violation of section 135 of the Companies Act. But of course, after I noticed that point, I inquired management. Management showed a government circular. Ministry of Corporate Affairs have issued a circular with respect to amount spent on COVID related issues, and they have added new clause, disaster management. Okay, for that purpose, if a company is spending money, it is considered a CSR activity. Okay, fine. After looking at that, okay, I understood. Okay, fine. It's okay. See, that's how annual report sometimes helps me. Maybe as long as I'm doing the audit, I would have not come across that information because I do audit on a sample basis. Maybe after reading the annual report, I may get knowledge of some additional information which I didn't get earlier. Next. Now you see, now you after reading the other information, by the way, what is other information? Please make an important note. Other information is something other than financial statements and audit report thereon. We are not talking about financials and audit report thereon. We are talking about other information other than this, but which is included in annual report. That's it. So what is auditor's objective now? Auditor objective is whether there is a material inconsistency between other information and financials, that I need to ensure. Whether there is a material inconsistency between other information and my knowledge about the entity. Suppose if the auditor identifies material inconsistency, suppose if I identify, what to do? You have to respond appropriately as per what the standard says. Appropriately. When the auditor otherwise becomes aware of that other information appears to be materially misstated. What does it mean? What is respond appropriately? Very simple. Suppose after reading other information, I discovered a misstatement. Don't conclude immediately. Misstatement means not in financial alone. I discovered a misstatement. What misstatement I discovered? The misstatement I discovered. Misstatement in other information I discovered. Other information. Which means within bracket, the related item is the related information in the financial statement is there. No, the financial statements related information is true and fair. So what they showed in financials is true and fair. 6,22,809 crore in profit and loss account is true and fair. But in other information, they showed 6,30,000 crore. Over enthusiastic, overstatement. So if I found a mistake in other information, what should I do? Suppose because of other information, I discovered a material misstatement in the financial statements. Oh my God. Because of other information, after reading other information, I found a mistake in the financial statements. Suppose if you found a mistake in the financial statements, material mistake in the financial statements, after reading other information, these are the two possible consequences. And how should you respond here is what the standard deals with. Suppose if the mistake is found in other information, what you have to do, just report to those charged with the governance. Report to those charged with the governance and ask them to rectify. Suppose if they rectified, chill, happy. Suppose if they don't rectify, if they don't want to rectify, they want to publish the other information as it is, which in the opinion of the auditor containing a material misstatement. Why I worry about that? Because that is conflicting with the audit report I gave. Tomorrow people may doubt about the financials which I signed based on your information given. So I don't want any sort of doubt on my audit. I did my duty perfectly. But because of the information wrongly given by you, people may question my information also. So that is something which I am not ready for. Suppose if other information is containing mistake, not the financials, and I reported to those charged with the governance, top management of the company, audit committee, everyone I reported, none of them took any rectificatory action, none of them took any remedial measure. They didn't take any measure to rectify that. If they don't rectify, By the way, here many students coming to a conclusion, since mistake is there, material mistake is there, we have to give modified opinion. Wrong. Never. We have to give modified opinion only when the financial statements are materially misstated. Please make a note. We have to give modified opinion only when the financial statements are materially. What is the objective of audit? Is the objective of audit is to obtain assurance about other information, or is the objective of audit is to obtain reasonable assurance about the financial statements? Obviously, financial statements. And we got assurance. Financial statements are true and fair. But then, when the company is publishing the financials which I audited and the audit report which I gave on that, along with that, company is also publishing other information, and that other information is containing mistake. The question of modified opinion will never arise, because the mistake is not in the financial statements, but the mistake is something other than financial statements. In such a case, what should I do? That is the reason where other information paragraph comes into picture. That is the reason where other information paragraph comes into picture. So in audit report, we will add one more paragraph, other information paragraph. In that para, we will explain what is the nature of mistake given in the other information. What is the nature of mistake given in the other information? That's it. Suppose if the mistake is found in the financials based on other information, we got to know some additional data. After getting that additional data, we started researching. We again did some additional audit procedure. Then we discovered it is not other information which is wrongly showing, but the financials only which is wrongly showing. And we asked management again, same thing. If they rectified, happy, unmodified opinion I'll give and proceed. But they didn't rectify the financials. But other information is right. Financial statements only is something wrong. They didn't rectify. What should I do? I will express a modified opinion. I will express a modified opinion because the financial statements are containing a material misstatement. But now here you may get it out. Sir, first of all, what is the process of all these deliverables? What is the process? First I'll tell you. 31st March, let us assume 2019 or 2020, whatever the dates. Books of accounts will be closed. Somewhere immediately or within a few days, the financial statements will be prepared. Understand, I'm only talking about will be prepared. And the auditor will start the audit. Auditor would have even started the audit long back before 31st itself. Only thing is he is doing audit of transactions and all. Now after 31st March, he will be doing transaction of balances also, balance sheet items also, because balance sheet is ready only after 31st March. So auditor is conducting the audit. Somewhere audit finishes on 20th May 2020. Somewhere the audit finishes. I'm only talking about finishing of the audit procedure. I'm not talking about audit report. Audit finishes on 20th May. And whatever the balance sheet P&L which is draft, which are draft one, whatever the draft balance sheet and draft P&L, no, they were handed over to the auditor. They were handed over to the auditor. And auditor agreed every amount is fine. Auditor originally agreed every amount is fine. And now management on 25th May 2020, approved these financials. Approved these financial statements for issue to the public. Section 134, Board of Directors approved it. Now, auditor has to give audit report on the approved financials, yes or no? Of course. Only first approval should happen. Then only audit report shall be given. What is the date of audit report? Date of audit report should be on the date of approval date or after the date of approval. It can never be before approval date. Only once management finalizes the financials which are to be issued to the public, only on that financials only you have to give the audit report, yes or no? So audit report date shall be on or after date of approval of the financials. So now financial statements are signed by the management on 25th May. Okay. Now what shall I do? Before I sign these financials, I will ask this question to the company. Dear management, okay, you signed balance sheet, you signed P&L, everything is over. Now my signing is left. I want to know, along with the financial statements, plus of course I will give audit report, right? Along with entire this set, what other information you are going to give to the public? I want to know. please hand over me a copy of that. Only once you hand over me a copy of other information, only then I will read it and I will ensure my responsibility as per SEA 720. Only then I will give audit report. That's what I will request the management. Now what management can do here? Management can do whatever other information they want to publish, they will give it to me fully. Now I will read, I will sign and give it back. Sometimes, dear auditor, sorry, there is so much of other information which we have to prepare. Out of it, only 50% of the other information is ready. Take it. Remaining 50% we will give later on. But the problem is I need to sign audit report now because I have some other assignments. I need to sign it and go. And moreover, timelines have come. So company is also asking me, please, dear auditor, please sign the financials. Please give the audit report. We need to even send it to holding company also. So they are also waiting for something. The company is nonsense saying, okay, fine, I signed and gave. But remember, in the second case, I signed only after reading partial of the part of the other information, not full other information. There is some other information which is yet to be received. What should I do then? Same, come back to the same other information paragraph. You are giving audit report, no? In that you mention so much of other information, namely related to so and so details were not given to me. With respect to that, my duty is to ensure there is no inconsistency between this and the financials. That's what my duty. And even, you know what the standard also says in other information paragraph of the audit report, auditor shall always mention one point. Auditor shall always mention whose responsibility for this other information. 1 minute. By the way, whose responsibility is relating to other information? Is it auditor responsibility about other information or management? See, auditor has responsibility to give opinion only on the financials, not on the other information. By the way, the standard is talking about auditor responsibility relating to other information, right? The standard is talking about auditor responsibility relating to other information, right? Does it mean do we need to provide any assurance on other information? Do we need to provide Reliance 460 pages annual report, out of it 190 pages my financials and all? I gave opinion. On what about remaining 200 pages? On the remaining 200 pages, should I give any sort of assurance? Not required, man. Not required. Then what is my responsibility? Your responsibility is nothing but, first of all, understand other information is management responsibility. But why you need to worry? Because that information and financials which you signed are given together. So what is your duty? Just check what is there in other information, what is there in financials. Are there any conflicting data? That alone, if you check, enough. Oh, that's it, my duty. That's it. What if I find any conflict? What if I find any discrepancy, difference? Nothing. Do this one. Just do this analysis. Where the mistake is it in the financials you signed the mistake, or is it in the other information? Other information. Okay, do one thing. Tell to the management, tell them to rectify, dear management, your other information is contradictory to the financials, which is actually true. So change it. Management did not. Don't worry. You have another paragraph in the audit report, right? Other information para. In that para, mention to the shareholders that there is a mistake in other information. Does it mean you are giving a modified opinion? Arey man, first of all, I'm not giving opinion. I'm not giving any opinion. I'm not giving any assurance. I'm not dealing anything with respect to other information. I just have to check it is not contradictory to financials which I signed. It is not contradictory to the financials which I signed. That's it. Suppose after reading other information, you found some inconsistency and you investigated and you discovered there is actually material mistake in the financials. Okay, what you will do? Tell the management, tell them to rectify. They didn't rectify. Don't worry, your opinion paragraph, modify. That's it. Give modified opinion, qualified or adverse, whatever it is. Then what else my responsibility? You have another responsibility. With respect to other information, you should give some data to the shareholders. What data? What data you have to give? See, I will directly show you Reliance audit report. Reliance audit report. You see the side heading in the Reliance auditors report. I'll show you the audit report from the beginning and then I'll come to this. This is the audit report of the Reliance Industries Limited for 18-19 year. After key audit matter, if you observe, after key audit matters, this particular other information paragraph came. So you see, sir, actually the paragraph side heading name is other information, no? But See what they give? They just give definition. Rather than other information side heading, instead of mentioning side heading other information, they wrote definition itself. Information other than financial statements and audit report thereon. This is what the definition of other information is. So now what is other information? It is a financial or non-financial, whatever it is, simply information other than financial statements and audit report thereon. Nothing but other information definition. Okay, what auditor has to mention here? Dear shareholders, the company board of directors is responsible for the other information. Okay, the other information comprises information included in the annual report, whatever the 460 pages you got, no, that 460 pages other than, but does not include standalone financials and our audit report. And not only that, consolidated financials and our audit report, that is mentioned in consolidated audit report. Our opinion on standalone financial statement does not cover the other information. Correct, no? We are giving only on the financials, not on the other information. And we do not express any form of assurance conclusion thereon. Remember, we are dealing nothing with other information. If at all something went wrong in that, don't ask us. In connection with our audit, now we are explaining what is our relationship with that, what is our responsibility. In connection with our audit of standalone financials, our responsibility is to read the other information. My responsibility is 460 pages, 190 mine. Okay, my responsibility, remaining not mine, but still I will read. And in doing so, when I'm reading, consider whether such other information is materially inconsistent with financial statements. Okay, is there any information which is contradictory to financials, or our knowledge? Is there any information which is contradictory to our knowledge of the client business? Knowledge. Okay, if based on the work we performed, we concluded that there is a material misstatement of other information. Suppose, if at all, when we are doing this, if we found a mistake in other information, what we have to do, we are only talking about responsibility. What we have to do, we are required to report that fact here. Here we are required to report. Now here what the Reliance auditors are saying, ultimately, we have nothing to report in this regard. Say positive comment. So auditors are saying we have nothing to report in this regard. What does it mean? Reliance auditors have read remaining 210 pages of the, remaining 250 pages, I think so, 250 pages of the annual report, and they found nothing is contradictory to financial statements. So they are saying that fact, we have nothing to report in this regard. Clear, matter resolved. I hope you understood how other information impacts SCA 720. Getting it? Now, if you observe, we'll read the SAS 270. Once again, the objective. What is the objective? Whether there is a material inconsistency between other information and financials. Okay. Whether there is a material inconsistency between other information and our knowledge obtained. Okay. Respond appropriately if you identify such material inconsistency exists, or when you become aware that other information is materially misstated. If there is a material misstatement in other information, respond appropriately and report as per this standard. Don't worry, you can report as per this standard. Now you see here, important note, the auditor responsibility relating to other information apply regardless of whether the other information is obtained by auditor prior to the date of audit report or after the date of audit report. Very important point. This is important for MCQ or true or false question. This is important for MCQ or true or false question. So our responsibility will be there. It may be whether you give audit report or not, doesn't matter. You have always responsibility. You always have responsibility. You cannot say, I already gave audit report, later on only company issued the other information, I don't know, please. You can't. You can't escape like that. You have responsibility for other information as long as your financial statements which are audited by you are included with them. Very simple. So, which means indirectly SCA 560 standard also may come into picture. Subsequent event concept also may attract. Now, by the way, what is the responsibility as per this standard? What responsibility is not covered for you? See, my responsibility is to check is there any contradictions. That's it. Does it mean do I need to check entire other information and ensure that it is free from material misstatement and to give opinion thereon? No, mister. Your duty is only to give opinion on the financial statements. You have nothing to do with other information. You are just checking is that information contradictory to this. That's it. The auditor responsibilities under this standard do not constitute an assurance engagement on other information, do not impose an obligation on the auditor to obtain assurance about other information. You need not get any assurance on the other information. You need not give any assurance on the other information. You need not give opinion on the other information. Then what I have to do, sir? Once again, nothing. Check that. Check with financials. Is there any contradiction? Highlight. That's it. So, sir, is it something like assurance? No, man. Assurance means what? Hey, dear shareholders, please believe other information. That is true and fair. That is assurance. Here, I am not talking about assurance. Same. This is also important for true or false question or MCQ. Whatever it is, it can come. And by the way, this standard do not apply with respect to prospectus. Okay, if it is prospectus, no need to look at this standard. Or this standard do not apply for preliminary assessment of preliminary announcement of financials as per SEBI rule, something quarter results, that and all, not applicable. I hope you understood. Now, what is other information definition? The other information can be financial data or non-financial data, but it is not about financials and audit report thereon, which is included in entity's annual report. Very important note, other matter paragraph is completely different. What is other matter paragraph? There we talk about audit, auditor responsibility for branches and all. That is what we talk about. Other information we talk about what? In the annual report, about 250 pages of the annual report, which is not something financials, regarding that we talk about. Now, sir, what is annual report? Of course, the standard beautifully gave definition for annual report also. It is a document or a combination of documents prepared typically on annual basis by management or top management with law, regulation or custom, the purpose of which is to provide owners with information on the entity's operations, entity's financial results, financial position as set out in the financials. So we just want to give so much of information to the users. On an annual basis, we just want to tell them how we are performing, what are our goals, what are our objectives, what is our vision, how much we achieved, all that. Okay. Next. And an annual report contains or accompanies the financial statements and audit report thereon, and usually include information about developments, future outlook, risk, uncertainties, statements by governing bodies, reports covering governance matters, CSR report, governance report, various other reports. What is meant by misstatement of other information? A misstatement of other information exists. When a misstatement will exist in other information? When other information is incorrectly stated or otherwise misleading. Getting it? Like some information which is not necessary for proper understanding is disclosed. Something which is not necessary is also disclosing. Unnecessary information also they are giving. That is also, mistaken other information. So what is the audit procedure? So what you have to do with respect to, okay sir, now we understood conceptual, we are very strong sir. So what auditor has to do? This question can be asked for 3 to 4 marks in question. Write about audit procedure for other information in the line in context of SA 720. What you have to do, man? Just simply tell me. Obtain, inquire management, get other information, read it, identify, is there any material inconsistency? If you identify any material inconsistency, is it in other information or is it in the financials? Decide that. If it is in the other information, give to the top management, tell them to rectify. If they rectify, fine. If they didn't rectify, you have a para no weapon in audit report. One of the side heading para, one of the sub weapon. In that, mention a fact that other information is wrong. See, the auditor shall obtain other information, determine through discussion with management which documents comprises of annual report. Ask management, dear management, you are going to give annual report, right? What are all you are going to include in annual report? A management said, Reliance company management, no, they said very clearly, sir, we are going to give corporate overview, we are going to give management review, we are going to talk about governance, we are going to talk about shareholder information. Okay, so company told you this. Now, and the entity's planned manner and timing issuance of the document. So when you are planning to issue all these documents, no sir, all of them we are going to issue at a time in annual report. No, different times, at a time only. Okay. Make appropriate arrangements with management to obtain on a timely manner, if possible, prior to the date of auditor's report. That is the most important precaution. You have to get prior to the auditor's report, prior to the auditor's report date. What you have to get? The final version of the documents which are part of annual report. Prior to the audit report date you have to get. Very, 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 very exceptionally rare cases. In reality, not possible also. Sometimes other information data will be obtained by auditor after audit report date. But generally, no auditor will take that risk. when, see this, some or all the documents will not be available until after the date of audit reports. Okay, sometimes until you give audit report, even after giving the audit report, some of the other information is not available. In such a case, what auditor has to do? Request management to provide a written declaration. Get a written declaration that the final version of the document will be provided to the auditor when available and prior to the issuance by the entity to the public. The auditor can complete the process required by SA. So what will I do now? Okay, management not ready information, don't worry. Whatever information ready, give me. I checked it. Signed audit report and gave. Still some more information is pending. I will tell the management, dear management, give me a declaration first. Then I will give you audit report. First give declaration. What declaration, sir? That other information which I have not given you, I will give you as soon as it is available. Before publishing it to the public, before we release it to the public, we will give it to you. Give a declaration. Gave declaration. Now I will give audit report. They will all printing, do everything, printing, arrangement, everything they'll be doing. Once other information is ready, they'll give it to me. Before announcing it in the annual report, before announcing to the public. That's their responsibility. Next. Then what auditor has to do? So first you see party, if you check, we just have to first obtain the other information. First ask the management. Step 1 is what? Ask management what are all they are including as part of annual report, which is actually called as other information. First ask them. Second one, obtain the information prior to the date of audit report. Okay. Third one, what if some of the information is not available? Get a declaration from the management that it will be given to the auditor before publishing to the third parties. On that declaration basis only you give the audit report. Okay, fine. Finally, I got other information. What auditor has to do? Shall read the other information and check. You read it, check whether material inconsistency there in other information and financials, material inconsistency between other information and my knowledge of business. You remember ambulance example, COVID, Reliance Industries 1920. Further, he shall remain alert, be alert for indications that other information is not related to financials or auditor knowledge obtained in the audit appears to be materially misstated. Some knowledge which I obtained while conducting audit and the other information now I am seeing is not different. So that's it. Actually, B and C point are closely similar, mostly similar, but here I'm talking about auditor's knowledge of business. Here I'm talking about auditor's knowledge of, audit process. We are just comparing with the audit process actually. That's it. Mainly these 2 points are most important. If these 2 points, if you wrote, that's it. Third point is not a big deal from exam point of view. So you can do one thing. You can strike off this. Better, no? Strike off this. Suppose when a material inconsistency exists or other information appear to be materially misstated. Yes, sir. Sir, after doing this process, point number C is, this talks about process, right? First what I did, I just asked the management what is other information. I got the other information before the date of audit report. Then I read it to identify any inconsistency between that and financials, any inconsistency between that and my audit methodology, audit knowledge, all that. Suppose now I identified, sir, some inconsistency where other information only is wrong, sir, not financials. What should I do? If the auditor identifies that a material inconsistency appears to exist, then the auditor shall discuss the matter with the management and perform other audit procedures. Getting it? This bracket point, no, you can strike off, not that required. Okay, not that required. Of course, you can read it. It's okay. A little complication they'll make unnecessarily by using another sentence. Okay, simply you can strike off. So you may get it out, sir. If you are saying strike off, why did you include it in material? I just wanted to show you it is there, but not relevant. If I delete, you may not know that this point is there and we have deleted. If you know it, it will be better. So fine. If the auditor identifies that a material inconsistency appear to exist, the auditor shall discuss the matter with the management and if necessary, perform procedure to conclude whether a material misstatement in other information exists or a material misstatement in financial statements exist. So the moment you found some inconsistency, classify. Is it a mistake in other information or is it a mistake in financial statements? Classify that. Okay. Then if material misstatement exists in other information, request management to correct it. If the auditor concludes that a material misstatement of the other information exists, the auditor shall request the management to correct the other information. Suppose if the management agrees to make the correction, the auditor shall determine whether correction has been correctly done or not. Happy. Suppose if the management refuses to make a correction, don't worry, we have a weapon. The auditor shall communicate the matter with those charged with the governance and request that correction is made. And suppose even then if the correction is not made, you have a paragraph in audit report, in other information para, information other than financial statements and audit report thereon, that is a side heading, or you can use side heading called other information. Whatever the side heading you want, you can use it. In that para you highlight this. Suppose if the material misstatement is identified before the date of audit report, if the auditor concludes that material misstatement exists in other information prior to the date of audit report, but it is not corrected after communicating with top management also, just now I told, the auditor shall take appropriate action, including whether implications of the auditor report. What are its implications of the audit report? Yes or no? Report in other info para of the auditor's report. Report in the other information para of the auditor's report. If possible, suppose that is so severe. That is so severe. This kind of reporting is also not enough. Withdraw from engagement. Resignation of auditor. But that is a rare case. First of all, identifying conflict itself is rare case. Suppose if conflict is there, and if auditor identifies, management will modify it. Management will rectify it. No management will refuse it. They know if they refuse to the auditor, what consequence they face. Suppose if material mistake is identified after audit report, I gave audit report, now they gave it. Now they gave some, I don't know, some information is pending. And they gave declaration, then I released audit report, and before they publish, they gave to me other information. Now what should I do? Suppose if auditor concludes that a material misstatement exists in other information after the audit report date, then auditor shall, if the other information is corrected, suppose ask the management to correct it, and if they corrected, perform the procedure necessary, like see whether it is corrected properly or not. Suppose if the other information is not corrected and you already gave audit report, after communicating with top management, take appropriate action considering the auditor's legal rights and obligations to seek to have uncorrected misstatements appropriately brought to the attention of the users with whom audit report has already been prepared, for whom it is prepared and communicated. Now, management prepared other information, they sent it to public, and now you understood there is a material mistake. Okay, other information is actually wrong. It is contradictory to the financial statements, and I came to know only after I issue the audit report. I should do process given in SA 560. What should I do? I should make sure the shareholders are aware of it. Nothing but I am having right to attend general meeting. Yes or no? In the general meeting, I'll stand out and speak out. Simple. Over. Sir, the mistake is not in other information, sir. The mistake is in financial statements only, which we didn't identify. But after reading other information, we identified it. Now what should we do? Very simple. If the auditor concludes that the material misstatement in the financial exists, or auditor's understanding of the entity and environments, like we wrongly understood about the company, okay, which is needed to be updated, then auditor shall respond appropriately. Very nothing but if the mistake is there in the financials, I'll ask management to rectify. If they didn't rectify, I'll give modified opinion. If they rectified, happy, I'll just verify, I'll proceed further. So what is the audit reporting requirement in this case? What is the reporting requirement with respect to other information? Whenever the financial statements are issued, along with other information, what is the reporting requirement? This is an important question again. The auditor report shall include a separate section with a heading, other information, or other appropriate heading. What is other appropriate heading? See, Reliance auditors have used that other appropriate heading. What heading the Reliance auditors have used? Instead of using the heading other information, what information they have used? What heading they have used? Information other than financial statements and audit report thereon. Sir, instead of using other information side heading, we are using the definition itself as side heading. No, is it permitted by standards, sir? Yes, it is permitted. I will show you standard proof also. I will even show you the standard proofs also. Don't worry. You see here, standard. You see here, other information is one heading. This is in the Institute illustrations in SAS 720. In the Institute illustration 720, I'm showing you other information or another title if appropriate, such as example, information other than the financials and audit report. They're on the same heading Reliance auditors have used, or you can simply use the word other information. Why some people prefer this one, in order to make sure a shareholder don't confuse between other information, other matter. They both are after all synonyms. Matter or information, both are same. No? That's why Reliance auditors would have preferred this side heading. So you see, yeah, and if you observe, let us compare with our theory. The auditor shall include a separate section with a heading other information. Yes, it is there in a separate section after key audit matter. A statement that management is responsible. Yes, first para, the company board of directors is responsible. Very good. An identification of other information, if any, obtained by auditor prior to the date of auditor's report. See, our opinion on the financial statements, the other information comprises identification. What is other information? Comprises information included in annual report, but does not include standalone. So we mentioned that. For an audit of financials of listed entity, other information, if any, expected to be obtained after date of audit report. Have you obtained all the information? If you obtain, nothing to say. If at all some information is pending, you have to say, mention additionally that so and so information is yet to be received. So and so information is yet to be received. Sir, where is the example? Practically there is no example, but illustration is there. Illustration is there. You see here, this is an illustration. If you open illustration number 4 in SA 720, expects to obtain other information after the date of audit report. What auditor has to do here? You see here other information side heading. The company board of directors is responsible for other information. Yes, we know. The other information comprises information included in so and so report, but does not include financials. Very good. The X report is expected to be available to us after the date of audit report. See, we mentioned it. After the date of audit report only, this information is made available to us. And when we read the X report, what is our responsibility? If we conclude there is a material misstatement, we are required to communicate to top management. And we have to take some actions like that. We are just telling to the shareholders. And next, what auditor again? Auditor has to give a statement in other information. In other information section, auditor has to give one more statement. What statement? That auditor's opinion does not cover other information. Yes or no? You see here, our opinion on the financial statement does not cover other information, and we do not express any form of assurance thereon. Yes or no? That's what, right? Accordingly, the auditor does not express any opinion or any form of assurance conclusion thereon. And auditor has to again describe a description of auditor responsibilities relating to reading, consideration, reporting of other information. You need to mention that. That's what the standard says. The standard says you have to talk about what is your responsibility. So see whether Reliance auditor spoke about it. In connection with our audit, our responsibility is to read other information and consider whether such other information is materially inconsistent with financial statements or our knowledge obtained in the audit. Yes or no? When other information has been obtained prior to the date of audit report, a statement that auditor has nothing to report. See here, we have nothing to report in this regard because everything is obtained and you concluded everything is fine. Suppose if there is a material mistake, if auditor concluded there is a there is an uncorrected material mistake, some mistake is there but not corrected by management, a statement that the uncorrected misstatement of the other information, you have to mention here. Here you said no, we have nothing to report in this regard. Instead of that, you need to mention sales figure is 6,30,000 crore mentioned in the performance indicator. Actually, the sales is 6,22,809 crore. Please make a note in this regard. We have completed the standard already. So what is summary of reporting? Simply, if MMS is there in other information, you give unmodified opinion only, but you need to report that point in other information para. Suppose if the mistake is in financials and management did not rectify it, uncorrected, then you give modified opinion and reasons you should give in basis for MO para. And also once again in other information para. As discussed in basis for opinion, you have to. That illustrations are also there in the pronouncement. In pronouncement, there are totally 7 illustrations under SA 720. Those 7 illustrations, out of which one I showed you, remaining 6 are not required. That much you would have understood by this time already the concept. If at all you just want to have a look at, you can look at, nothing wrong. Okay, everything covering in the class takes huge amount of time, so I'm not covering that, and not required also from exam point of view. But I think what essentially required for you from exam perspective and conceptually knowledge wise, I already gave you. That's it. So with this, we have completed the SEA 720. I think how much time we took? Oh my god, almost 55 minutes. I thought half an hour it'll take, but it went 1 hour. It's okay. Every standard is almost important for getting 3 to 5 marks weightage. Of course, not every standard you will get marks, but every standard has a weightage of such that much. If a question is asked in SEA 720, no doubt they'll ask for 4 to 6 marks, no doubt about it. Or an MCQ may come for 2 marks, 1 mark. So why to take risk? Let us be perfect. First preparation itself should be our best preparation. You should never revise once again later on. Revision is only for advancing our knowledge or advancing our grip, not for relearning. Most of this auditing subject, advanced auditing, believe me, you just depend on me. I'm telling you, you will not require that much of time to revise also. Believe me. 99.99% concept and terminology grip you will get in the class itself. Actually, I thought of covering SEA 710 also in the same video session, but as a practice what am I doing is I'm recording a separate video for every standard. So 710 I'll come in the next video. Okay, so with this 720 is completed, and as I already told, one more thing, we are going to solve 28 to 30 illustrations, practical examples after end of this chapter. Okay, after we finish all other topics, concepts, we will again start reading from the beginning. SEA 700, whatever pending is there, we will read that and finish, solve the questions also. Okay, that's it. So wait for the next video. I mean, just tune to the next video for SEA 710. And once SEA 710 is completed, then I will again come back to the audit report. Once I would like to come back to audit report and show you that, yes, now tell me, we have completed other information. Over 9 contents of the audit report we have already discussed. 9 contents of the audit report. I think you're now learning how to prepare audit report. If tomorrow someone comes and asks you any question, okay, you should answer. That's it. So that's it. So watch the next video. Yes, part 8 of the audit report. So here we are going to discuss about SEA 710, another interesting standard. Before I proceed further, I would like to bring your attention, one small mistake happened in the material. If you open SEA 299, there is audit reporting. Actually, I'll just open right now and I'll show you what the mistake exactly. It's not a big deal. I think you would have understood. Actually, when you read that, you would have understood probably. So if you open SEA 299, if you open here, no, like page number is 60, page number 60, if you open audit reporting in case of joint audit, they write in that point number B, here actually no joint auditor is bound by majority's opinion. I mean, unexpectedly here the word not has been came, okay, while framing the sentence. You can do one thing, instead of putting here no, you can make it A, or you can strike this not. Anyway you can correct it. So suppose if you put instead of no, capital A joint auditor is not bound by majority's opinion, which is a correct sentence. Or suppose if you strike off this not, no joint auditor is bound by majority's opinion, both will convey the same logic. So please rectify that mistake. So if I come across any other mistakes in future in the form of the same, like whenever I record a video, I'll bring it to your attention. Suppose if at all recordings are already completed by then, I will bring it to your attention through Telegram messages. So don't worry. Then, so let's move on to the actual discussion, that is SEA 710. Comparative information, corresponding figures and comparative financial statements. Comparative information and 2 words are there, corresponding figures and comparative. Logically speaking, this is a standard which practically we use very rare. Yes, I'm saying it is very rare. It is not that big deal, but we have to read this standard every time whenever we are doing the audit. Before we sign the audit report, definitely must and should we have to go through this standard responsibilities also. But of course, When it comes to application of the standard, it is very, very rare. In the standard also, only one topic that is most important, only one topic is corresponding in figures, figures. Comparative financial statements, the concept of comparative financial statements is not relevant in Indian context. Maybe the same concept is there somewhere in the foreign jurisdiction, but not there in the Indian jurisdiction. We don't have the concept of comparative financial statements. I have seen so many students reading the standard without understanding what exactly the difference between corresponding figures and comparative financials. They think it is both are same. Some students even think comparative financial statements means normal financials. Not. Comparative financial statements are some financials, if I have to give a general meaning to it. Comparative financial statements are those, according to me, they are something similar to special purpose. I can say more accurately, it is not general purpose financial statements. They are not general purpose financials. Comparative financial statements context comes into picture in case of special assignments. Special assignments. Why comparative financial statement concept is not applicable, I'll tell you in my in the discussion that we are going through. In the upcoming discussion, I'm going to clarify you. By the way, once again, if you decode the standard heading, the standard heading is comparative information. Actually, the standard deals with comparative information. What is the responsibility of auditor relating to comparative information? What is this comparative information? By the way, as we all know, if you look at the schedule 3 format, we present current year figures and last year figures. Yes or no? The first column is current year and the last column is last year figures. So last year figures are nothing but comparables, right? They are nothing but comparatives. We actually call them as comparatives. Yes or no? So what is auditor responsibility relating to comparatives? That's it. And we all know, generally whenever we are doing audit, our opinion only deals with current year information. Agreed or not? Our opinion only deals with current year information. For this, no specific acknowledgement or provision also required. By default, whenever we hear, suppose we have discussed these many standards from SA 700, anywhere have we specifically discussed expressing opinion on current year figures of the financial statements? No. The sentence that we come across all these days is, auditor has to express opinion on financial statements, which impliedly assumes current year figures, which does not impliedly or expressly assume, last year corresponding figures. Corresponding figures are when I'm doing audit of financial statements, where I'm giving opinion on the financial statements, my opinion deals only with current year figures of the financial statements. My opinion do not deal with the last year comparable information presented. That is nothing but corresponding figures. They are nothing but corresponding figures. So what is comparative information? What is corresponding figures? What is comparative financial statements? The definitions are given. First we need to decode the definitions because they are important for MCQs. Of course, they are important for true or false questions also, if at all they decided to ask. And you know, very recently, yesterday I think so, the CA Institute president have did a YouTube live where he hinted online exams for CA students also, CA course also. So they want to, even the president have emphasized on, our examination pattern should change drastically from memory oriented to analysis oriented. In fact, they are considering open book exams for all the 8 subjects. Open book exams for all the 8 subjects, case study based with MCQs. That pattern they are considering. Anytime soon. May not be for July 21 exams, may not be for November 21. Maybe, if at all things went well, okay, maybe in May 2022 onwards, open book exam may come. And if at all the decision was taken, there are more than 50% chances that the decision can be taken very soon. If at all it is taken, our approach of discussion will be highly helpful to you. Because our approach of discussion, right from the beginning classes you are observing, it is helpful both for you to crack any sort of conceptual question, in-depth question. At the same time, It will also help you to draft descriptive sentences because you are getting good command on the terminology because of the detailed discussion we are doing. Okay, anyway, it will work out for you. So don't worry, whatever the announcement let ICA bring, you don't worry. We should not be afraid of anything. We should face everything. Fine. So what is comparative information? What is comparative information? They are nothing but amounts and disclosures that are included in the financial statements in respect of one or more prior periods. Understand the word prior periods. Only if we mention, only if we disclose prior period data, prior period amounts, prior period disclosures in the financial statements. How many prior periods? It may be 1 year or it may be more than one prior period data. I may be presenting last year or that before last year. Doesn't matter. As long as I am presenting amounts and disclosures of prior period data along with current year data, then the concept of comparative information came into picture. So in accordance with by the way, how we present the last year picture or that last year prior period amounts and disclosures, how do we present? As per applicable financial reporting framework. Yes or no? We just follow the applicable financial. Suppose if it is a company registered under Companies Act 2013, but the applicable financial reporting framework is Schedule 3, accounting standard for certain companies, Ind AS for certain companies. So as per the framework, if you present prior period data, it's a comparative information. Now, whether that comparative information, should we consider it as a corresponding figures only? Should we consider it as a corresponding figures only? Or should we consider them as comparative financial statements? Should we consider them as comparative financial statements? Remember, the concept of comparative financial statements, I told you, it is something that is not as per GAAP. Generally, it is not as per GAAP. Even if you open SEA 710 in the pronouncement book, and if you open illustrations given in the pronouncement, when they are taking comparative financial statements, there the illustration clearly mentions the financial statements are not prepared as per GAAP. Of course, if the financials are prepared as per GAAP means generally accepted principles, means general purpose financials, where major focus will be on the current year. And last year is given only for corresponding figures sake. The last year figures are presented just corresponding to the current year figures, in corresponding to the current year. Last year figures have no meaning if current year figures are not there. The corresponding figures are something you can interpret only in relation to current year figures. So that is the reason why we give last year figures. When we are preparing financials, suppose you have done in articleship some audits of private companies or some public companies, along with current year you are giving previous year figures. How previous year figures should be interpreted in relation to current year? And the reason why we are giving, because we want to know what happened in last year, what happened in current year. We want to analyze the relationship between them and take a decision accordingly. For that reason only we are giving the last year figures. Means they are only figures corresponding to current year. So they don't have any emphasis or importance apart from that. We auditors also focus is on current year figures. We are giving opinion only on current year figures. We are not giving opinion on the previous year figures. I will even show you how illustrative audit report we will be preparing in our general approach, that is corresponding figures, and in a special case of comparative financial statements, we will even see the illustrations. So that's comparative information. Now this comparative information can be divided broadly into two approaches. The comparative information may be a concept of corresponding figures or maybe a concept of comparative financial statements. Believe me, comparative financial statements is not something that is there in Indian context. Maybe, sir, why are you saying, sir, comparative financials are not in the context of Indian, not in Indian context? Why, sir? Look at comparative financial statements definition. Sir, what about corresponding figures definition? I'll come back. First, look at comparative financial statements definition. Yeah, definition of comparative financial statements. Comparative information, of course, it is also comparative information where amounts and other disclosures of prior period, of course, they are relating to last year, are included for comparison with statements of current period. Of course, yes, they are also combined along with current year. But if audited, you see here the word, but if audited or referred in the auditor's opinion, means previous year figures are also forming part of the opinion. We are giving opinion. Generally, whenever we heard of this sentence, auditor has to express opinion on financials, means it is only naturally impliedly current year figures. But if it is an approach of comparative financial statements, the auditor's opinion will be even on comparative information. If the auditor is expressing opinion not only current year but also on the comparative financials, comparative information, then that comparative information is not just corresponding figures. It is not just corresponding figures. They are themselves as a separate financial statements. They are themselves as a separate financial statements, because you are giving opinion on prior period figures and you are giving opinion on current year figures separately. Yes, of course you are giving, but you are giving opinion only through a single report. You are giving opinion only through a single report. Tell me, in which framework in India, or for which form of organization, under which GAAP principles, generally accepted principles, tell me, when an auditor will give opinion on both the financial statement, I mean both the figures, opinion will be given on the current year as well as opinion will be given on the last year, unless the client appointed you for conducting audit of 2 consecutive years and asking you to specifically give opinion on current year figures and previous year figures separately. Unless in that scenario, which is not a generally accepted accounting principle, which is not a generally accepted audit process also. Okay, unless client specifically requests you to do so, you don't give opinion on previous year financial figures. We only give opinion on the current year figures. Along with the current year figures, whenever we present last year figures, they are only for comparative information purpose. They are only corresponding figures. By default, along with current year, any prior period data is given. By default, you can assume the approach is comparative figures, unless second point is highlighted. So that's about corresponding figures and comparative financial statements difference. Now let us see corresponding figures definition. What is corresponding? This is important. Comparative information definition is important. Corresponding figures definition is important. Comparative information means along with current year, previous year data you are giving. That is a concept of comparative information. Now the previous year figures, no, if you are giving opinion on them also, then it's comparative financials. No, we are not giving previous year figures as an opinion. Then it is only corresponding figures. I hope you understood the tiebreaker rule. Are we giving opinion on the previous year figures? If the answer is yes, then they are equal to current year financials. So it is a comparative financial statements. I am not giving opinion on previous year figures. I am appointed as an auditor for current year financial statements, current year figures I am giving opinion. They are only presented for comparison's sake. They are just corresponding figures. Then corresponding figures approach will be applicable. Okay, you can blindly take off the concept of comparative financial statements discussed in this standard. You can blindly take off it. Not there in the Indian context. I don't know in which context also it is there. I strongly feel it's a special purpose framework, not a general purpose framework. Okay, fine. So what is corresponding figure then? What is the definition of corresponding? Is there a definition? Yes. Corresponding figures also nothing but comparative information. They are also nothing but amounts and disclosures relating to the prior period, or included as part of, as an integral part of the current financials. In the current year, in the current financial statements, previous year figures are also included, which are integral part of current year. You see the balance sheet, current year figures, last year figures we are mentioning. How much importance we are giving to this at the time of presentation, same level of importance we are giving, integral part. But they are intended to be read. Last year figures will have a meaning only in relation to amounts or other disclosures relating to current period. They are intended to be read only in relation to current period. And remember, auditor's opinion do not refer to corresponding figures. Sir, where it is? That is there in the below discussion. We are going further discussion, right? There you will get it. Now like the level of details presented in corresponding amounts and disclosures is dictated primarily by relevance to current period figures. Of course, how much level of importance the last year figures we have, that will have only relevance only in relation to current year. It is dictated by current year figures. Very simple. Last year some 10 lakhs debtors are there, 25 lakhs now debtors. Debtors have increased by more than 150%, almost 150%. Only for such kind of interpretations we use it, corresponding figures. Nothing more, nothing much. That's it. Then, so what is the objective of the auditor now in this standard? The objective has been drafted for comparative information. Both are comparative information only, right? Whether it is compared to financial statements or corresponding figures, both are nothing but comparative information. What is the opinion? What is the objective? What auditor is expected to do? The objective of the auditor is to obtain sufficient appropriate audit evidence about whether comparative information included has been presented in all material respects in accordance with the requirement of applicable framework, whether the previous year prior period amounts or prior period disclosures or prior period simply figures, are they presented as per applicable framework? Check it out. And check it out, report as per the standards. As per this standard, you report accordingly. If it is presented appropriately, say unqualified. If it is not, you have to give modified opinion. By the way, let us not right now discuss about opinion part. Now, next. Opinion of the auditors. Tell me where my opinion will also be given on previous year figures also, comparative financial statements. Whereas in respect of corresponding figures, do I give opinion? No. See, the audit reporting differs between the two approaches. That is, for corresponding figures, the auditor's opinion on the financial refers only the audited financials. The auditor opinion on the financials refers only to current period, only current period. Suppose if it is comparative financial statements, the auditor's opinion refers to each period for which the financial statements are presented or each period figures which are contained in the financials. And I'm telling you, this second point is not something that is generally accepted in Indian context. Not only in India, across the world, any country, general purpose framework if you take, it is not something generally accepted. Probably this is the financials are prepared by using other than GAAP. Maybe the financials are prepared for some special purpose. Maybe the banker is appointed you to once again do audit of current year, last year, and banker is asking you to give a separate opinion on each year. Maybe the client is a partnership firm. They never prepared financials, or they prepared financials but they were never audited. Now the partnership firm went for a bank loan. Banker is asking this partnership firm a requirement. Dear partnership firm, you prepare financial statements current year, last year, that before year, and get them audited. And auditor has to give opinion on all the 3 years. Now the firm approached you. You are a chartered accountant. Now you are giving opinion. In that context, comparative financial statement concept comes into picture. Otherwise, generally, is there any framework for that? No. Next. Then what is the audit report for, what is the procedure for comparative information? Okay, whether it is corresponding figures or comparative financials, simply speaking, last year figures. What is the procedure? What we should do? We should ensure these figures are presented correctly. We should ensure these figures are brought forwarded correctly. See this. The following specific audit procedure shall be performed for determining that the financial statement contains appropriately classified comparative information. Whether the comparative information is rightly classified, is it appropriately classified? Whether the classification given in the comparative information, is it correct? How we can check? Ensure comparative information agrees with amounts and disclosures presented in prior period. Example, compare current year balance sheet. Current year balance sheet only we will compare. In current year balance sheet, last year figures we will check. Current year balance sheet, last year figures. Example, suppose this is current year. Let us assume this is current year. By the way, 1920 and 1890. This is current year balance sheet. And simultaneously there is last year balance sheet. In last year 1819, 17, 18. This is last year balance sheet. Yes or no? Now you see the figures which are given under 18, 19. No, here these figures should be compared with these figures. Correct? No? Agreed or not? Last year figures of current year balance sheet shall be compared with last year balance sheet current year figures. Twister. There is a tongue twisting. Okay, so don't worry. You just observe this diagram which I showed. I think you'll get it. You need to first compare them and get an evidence that they are copied exactly. Then what is your next objective? Whether accounting policies are they consistently applied in the current year? Last year some accounting policies were shown. They should be consistently applied. You know, here the audit procedure, what I personally feel is, here the procedure outlined is something similar to SAF item. Something similar to SAF item. For me, I feel SAF item and 17 are closely connected to each other. In SAF item, the actual standard is initial audit engagement and opening balances. I feel SAF item, in that SAF item also, when we are discussing about opening balances, nothing but last year figures only. Something similar sentences will come in SAF item also. Anyhow, when I come there, I'll discuss about it in detail. Suppose accounting policies are not consistent. There are some changes in application of accounting policy. Okay, it's okay. Let it be. See, business is continuous. Unexpected things will happen. New rules and regulations will come. Accounting policies will change. No financial reporting framework denies changes in policy. They are accepting changes in policy. Only thing is whether the changes are disclosed and presented properly. That is what we need to check. Further, suppose if you identify when you are doing comparative information analysis, no, as per above procedure, you are doing current year, last year figures, and you are checking whether accounting policies are correctly brought forwarded, whether there are any changes are correctly disclosed. You are doing all this evaluation. In your evaluation, you identify or you came to know, you are aware of some misstatement. There is some material misstatement happened in the comparative information, some material mistake. Example, in the previous year, company forgot to claim depreciation. Now you discovered, yes, in the previous year financials, the depreciation is not calculated, which is a error, which is a omission. In fact, I can say omission in the last year. It's a prior period item, right? This is also dealt in SAF item. And of course SA 17 also. So if you identify any misstatement, what auditor has to do? He should perform necessary procedure to obtain evidence. Get an evidence that there is a material mistake. And if auditor has audited prior period financial statements, suppose you are only one who audited them, you are the one who audited the last year, then please modify it is, then he should follow the relevant requirement of SA 560. What does it mean? You know, suppose you are the one who did the financial statements audit in the last year. Okay, and you found there is an error. If it is subsequent event, the definition satisfies as per SA 560, rectify them. Suppose if it do not satisfy subsequent event definition, then don't follow that. You just have to record in the current year. You ask management to record it in the current year as a prior period item, and they will record it and they will mention it. You just have to check whether it is correctly done or not. Further, auditor has to get a written declaration from the management representation. The auditor should request written representation and obtain a specific written representation regarding any prior period item that is disclosed in the current year. Whatever prior period items you disclose in the current year, only those are there. No more prior period items. We have taken every care and diligence. Management has to give a declaration like this. Finally, what is the audit reporting? So what we have seen now, if you observe from the beginning of the standard, we understood what is comparative information. Then we understood what is corresponding figures. Then we understood what is comparative financials. Then we concluded what we see in Indian context is only corresponding figures. We don't have the concept of comparative financial statements actually. Then we understood how generally we audit comparative financials. We understood we just have to prepare, we have to perform specific audit procedures like comparing current year financial statements with the prior period figures with the last year balance sheet, audited balance sheet. Yes or no? And see whether accounting policies are consistent. If there are any changes, are they disclosed? If there are any mistakes, you know, like see whether the same has been, get an evidence and inform the management so that they'll rectify and record it as a prior period item, all that, and get a declaration that all the prior period items have been properly accounted and disclosed as per standards. Just get a declaration. Then what is reporting? When corresponding figures are presented, suppose if you decided the comparative information given is an approach of corresponding figures, is an approach of corresponding figures, then auditor shall not refer, then the auditor shall not refer to corresponding figures except in the following circumstances. Suppose, actually our opinion won't refer, but we will mention it in the other matter paragraph like this. If auditor's report of the previous period contains other than unqualified, means if the previous year auditor gave modified opinion, if the auditor, means current auditor, is of the opinion and has evidence that a material misstatement exists in the financials of prior period which was not addressed earlier, depreciation omitted and not addressed earlier, and if the prior period financials are not audited, then he should obtain sufficient appropriate evidence that the opening balance does not contain material misstatement. See, actually, this along with third point you have to read together. What they're saying is, if the auditor's report of the previous period contain a modified opinion, then you may have to report in our current audit report one situation when we will refer about corresponding figures in audit report. Generally tell me, my audit report will not deal anything with respect to corresponding figures. Now please make a note importantly. Okay, generally my audit report will not deal with corresponding figures. However, my auditor's report, here opinion should be interpreted as report. However, my audit report will interfere in three circumstances. My audit report will bring discussion about corresponding figures in three circumstances. In three circumstances, my audit report will talk about comparative information where the approach is classified as corresponding figures. Observe it carefully, my words. My audit report generally don't discuss about corresponding figures, okay, but it will discuss about corresponding figures in three situations. It is only information they are giving. One situation, when previous year audit report contains a modified opinion, at that time our audit report also discusses something. So what our audit report reports, that is discussed below, third point. Or second situation, suppose if I have sufficient appropriate evidence that there is a material misstatement in the prior period, but it was not addressed in the audit of the prior period. Or third situation, when I will be worried about corresponding figures, when I will be discussing about corresponding figures, prior period financial statements are not audited. Prior period financials are not audited. And if the financial statements of prior period were not audited, you should obtain evidence that opening balances does not contain any material misstatement, ACA 510. And this question was asked in November 2019 for 4 marks. Generally, the same question. What are the circumstances where the audit report refers about corresponding figures in the context of SA 710? Straight question. So this is the answer. Three circumstances we have to refer about corresponding figures. 1. Prior period auditor gave other than unqualified, means modified opinion. Second point. If the auditor obtains sufficient appropriate evidence that there is a material misstatement in the prior period financial statements which is not addressed. Third one, the auditor concluded the prior period financials are not audited at all. In such a case, we need to obtain sufficient appropriate evidence regarding opening balances. Not only that, last year financials means corresponding figures were not audited, right? You need to mention that fact in the other matter paragraph. See once again other matter paragraph importance is coming into picture in the context of SA 710 and read with 510. I hope now you understand how current year audit report will contain about this. Actually here I have used the word common reporting. So please take off this actual, of course it's actually common reporting, but then just a minute, I'm taking off this. Actually there is a common reporting treatment. Whether you are doing audit of comparative financial statements or whether it is a case of corresponding figures, in both the approaches, my audit report other matter paragraph will contain the following information. My audit report other matter paragraph in the context of 706 will contain the following data. What? Suppose if the prior period financials are audited, somebody have audited, okay. If the financials of prior period were audited by predecessor auditor, previous auditor, predecessor auditor means not me, somebody else have audited. The auditor shall state The financial statements of prior period were audited by predecessor auditor. Mention this fact. What you will mention? The financial statements of the prior period were audited by predecessor auditor, and the type of opinion expressed by predecessor auditor. So what opinion the previous auditor is expressing? Mention that. What opinion that the previous auditor has expressed? Mention that. Suppose we just have to, in other matter paragraph, we just have to mention the financial statements of the prior period were audited by predecessor auditor and he expressed an unqualified opinion. Just mention that. And date of the audit report also mention. Suppose if the prior period financials are not audited at all, if the prior period financials were not audited, then he shall report the same in other matter paragraph that the corresponding or comparative figures are unaudited. However, now you are getting already slight confusion. I can sense it. Don't worry. I will sum up this entire standard once again for you. First, we are learning individually and we are combining it at a later point. Yes, this standard itself is slightly confusing, I'm telling you. And I challenge you will not find clarity anywhere like this. Fine. However, the disclosure does not relieve. Just because you are saying previous year financial statements are not audited, does it mean are you exempted from obtaining sufficient appropriate evidence regarding whether opening balances are free from material misstatements? No. SA 510 further says auditor has to obtain sufficient and appropriate audit evidence regarding opening balances, whether they are free from material misstatements. You have this duty. Suppose last year figures, no, they were presented in current year financials. Last year figures are presented, they are not audited. I mentioned in other matter paragraph, they are not audited. Does it mean, am I relieved? Am I relieved from the responsibility of obtaining sufficient appropriate evidence regarding whether opening balances are free from material misstatements? No, you are not exempted. You have to still get the evidence relating to opening balances. It is your responsibility. Whether opening balances are free from material mistakes or not, you have to get this. But I'm telling you, this is again a rare situation. Very extremely rare situation. Fine. However, this disclosure does not relieve. This can be tested as an MCQ. This can be tested as MCQ. How MCQ can be drafted? You know, when the financial statements of the prior period were not audited, and that prior period amounts or disclosures are presented as corresponding figures, the auditor shall disclose in other matter paragraph that the financial statements of the prior period were not audited. This disclosure would relieve the auditor. Would relieve the auditor? No, it won't relieve the auditor. That's the answer. Okay, so does not relieve him from his responsibility of obtaining sufficient appropriate evidence that opening balances do not contain misstatements that materially affect the current period financial statements. That's it. Now if you look at comparative financials, similar words only you'll get. With respect to comparative, what is my reporting responsibility? When comparative financial statements are presented, the auditor opinion shall refer to each period for which financials are presented. Suppose when current year, comparative financials are presented, current year figures you have to give opinion, last year figures also you have to give opinion separately. Suppose last year some other auditor was there already and he audited. He gave an opinion, and now you are also giving opinion on the last year figures because it is an approach of comparative financial statements, which I told practically not there. Suppose if it is there, suppose you are doing comparative financial statements audit, and you have to give an opinion on last year figures also. Suppose if your opinion and last year auditor he gave opinion, no, if it is conflicting, what? See, when reporting on current period audit, if auditor opinion on such prior period financials differs from the opinion previously issued on such financial statements, the auditor shall disclose substantive reason for different opinion in other matter paragraph. I told you last year financials were audited by some other auditor and he didn't identify the depreciation omission and he gave unmodified opinion. Now when I'm doing the audit, I discovered there is an omission of depreciation in the prior period, which is a material misstatement. And now I am giving on the last year financial statement figures are not true and fair because depreciation is omitted. Of course, it is rectified in the current year as a prior period item. You are writing it. Conflict is, you have to give that reason in the other matter paragraph. Suppose if the auditor concludes that material misstatement is present in previously audited figures of the financial, he should report it to the next level of appropriate level of management. Request that predecessor auditor be informed if then prior period financials are amended. Suppose, no, this is another approach. If the financial previous year we informed him, sir, first please rectify the prior period financial so that it is free from material mistake. Then I am also doing current year financial, I will also do last year figures. I need to give opinion, right? I also should need to give opinion on the last year figures, right? So I will give normal unmodified opinion. Suppose if you don't rectify, no, I will give here modified opinion, and you give unmodified opinion on the last year figures. I'm giving now modified opinion, and I will give reasons also. So request the predecessor auditor be informed, and if prior period statements are amended with a new report by predecessor auditor, then the current year auditor shall report only the current period. Current period, what does it mean? Don't worry, I think you would have confused already. Suppose I'm doing audit of, suppose I'm doing audit of, 1 minute. Suppose I'm doing audit of 1920 and 1819. The nature of assignment that I have accepted is comparative financial statements. Of course, it is comparative information, but the approach is comparative financials. I need to give opinion on this, and I need to give opinion on this both. This is practically not there, but then for the sake of making you understand what is given, I'm giving you opinion I have to give. Already, let us assume last year financials were audited by Mr. B, and he gave an unmodified opinion. Okay. Now somewhere in the asset, depreciation is not considered, which is a material misstatement in the last year financials. In the current year, by the way, this mistake I discovered when I am doing audit of 1920, I discovered a material misstatement related to 1819. What should I do? I should inform this mistake to the management. What management has to do? They have to inform the previous auditor, Mr. B. Dear Mr. Auditor, you forgot to identify this mistake. And management of the company rectified this mistake in the last year itself. They reopened the accounts and rectified the mistake. And this old auditor also gave a new report with unmodified opinion. Now in the current year, should I refer both the financial statements in my opinion? No need. Even though mine is comparative financial statements, it is enough if I give opinion on the current period only. Why? Because last year auditor, whatever opinion he gave on the figure, same opinion I have. Of course, I found a mistake, but it is rectified. Last year auditor gave new report. So now if I give once again opinion, it is not going to change anything or not going to affect anything. That's what the standard says. And I feel absolutely ridiculously meaningless. This is absolutely ridiculous, I can say. Meaningless. This whatever is given here is meaningless, absolutely. Okay, but comparative financials is not in Indian context. I told you one example of partnership firm. Maybe in such kind of rare scenarios it will apply. Now what is the approach for corresponding figures? What is the approach for corresponding figures? Shall we put it in the form of a small notes? Don't write. I'm just giving you for the sake of clarity. If you want, you can write it, you can scribble it. But suppose I have appointed as an auditor for the financial statements. I have been appointed as an auditor for the financial statements. As part of conducting audit, I am the auditor for 1920. When I am conducting audit, previous year figures are also included. By the way, I am the auditor for conducting audit under general purpose financial statements, general purpose framework, GAAP principles. I need to check. If it is GAAP principles, any last year figures presented are nothing but corresponding figures. Any last year figures presented are corresponding figures which are intended to be read in relation with current year figures only. Now, when this is the approach, my opinion shall be given only on this, and I will not give opinion on the last year figures. That's it. What is the audit approach? As we see, no. What is the audit approach for comparative information? What is the audit approach for corresponding figures? What is the audit approach for comparative financial statements? For all the three, common answer you can give. What is the audit approach for comparative information? Same answer you can write. What is our audit approach? Auditor has to obtain sufficient appropriate evidence Specifically, auditor has to perform the following: whether the current year financial whether the corresponding figures, comparative information presented, is it matching with the previous year audited figures or not? Second, whether accounting policies are consistent or not, I should check. If there are any changes, whether the changes are disclosed properly or not. If there are any material misstatement, see whether the same has been rectified as a prior period item or not. That's it. Now, what is the next concept? Now, what about audit reporting with respect to corresponding figures? Generally, with respect to corresponding figures, we don't refer about it in our audit report. If it is a case of corresponding figures, our opinion do not deal with that. Our report do not deal with that. However, there are three circumstances where our audit report discusses about corresponding figures. What are the three circumstances? What are the three circumstances? This question. If the audit report of the previous period contains other than unqualified, means modified opinion, in that time we will refer in our audit report. What we refer in our audit report? In other matter paragraph, we mention that prior period financials are audited by predecessor auditor and the predecessor auditor gave a qualified opinion. That's it. Second situation, whether if the prior period financials are audited by predecessor auditor and there are some material misstatements that we have identified which are not rectified in the prior period, which are not rectified in the prior period, then we will refer about in the current year and we will ensure that it is rectified as a prior period item, and that fact we will mention in the other matter para. Suppose prior period financials are not audited, that is a third situation where we will refer about corresponding figures. We just mention in our other matter paragraph that prior period financial statements are not audited. However, we have obtained sufficient appropriate evidence whether the opening balances are free from material misstatements or not. Over. So what is audit reporting here? See here, if prior period financials are audited, then which opinion he expressed, you just have to mention. If the prior period financials are not audited, mention that they were not audited. Getting it? And if you link it here, SA 510, which is an additional concept I'm telling you right now. What SA 510 says, you know, suppose if the prior period financial statements are audited by another auditor and he gave a modified opinion. Whenever he gave a modified opinion, in the basis for qualified opinion or basis for adverse opinion section, he would have mentioned the reason. Yes or no? Look at that reason. See whether that reason is present in the current year also. If the reason is present, same situation repeated in current year, and you also felt it is relevant in current year, material in current year, you also give modified opinion. Which standard says this? SA 510. I know you are again confusing here. Don't worry. When I come to SA 510, I will connect SA 510 with SA 710 and then make you understand this. I hope as far as SA 510 individually is concerned, you understood. Comparative information will be there whenever you are signing a balance sheet or P&L. That comparative information generally is corresponding figures. Whether that corresponding figures are right or not, you have to ensure. I mean, that also you need not do anything. Three situations you have to think about corresponding figures. When the previous year auditor gave modified opinion, when the previous year financials are audited plus material misstatement is there, and when the previous year financial statements are not audited. In that case, you need to refer in the audit report. Where do you refer? In other matter paragraph. How do you refer? That additional point which is there in SA 510, I will discuss. That's it. So that's about SA 510. With this, another important standard also completed. If you observe, I have changed the video outline format. Now if you see, the entire material is visible over the screen and somewhere at the corner I'm visible. I think you like this approach. Okay, fine. So carry on. So go for the next video when you find time. Bye-bye. So the next session, in this session, our primary agenda is covering SA 610 and ancillary agenda is discussion about the pending aspects of audit report. If you remember, in our previous session, we have covered report on legal and regulatory requirements, where we discussed about 3 sections reporting requirements under Companies Act covering 32 matters. And that is done. So we just have to finish other contents of audit report and we will just cross verify with a practical example. That's it. There ends the preparation of audit report. And as soon as we complete this, I will start immediately SEA 610. Okay. Now, so the next element of audit report, I hope by this time you are very much perfect in preparation of audit report. Today someone comes and asks you suddenly, prepare an audit report of a company. I think you can do it on your own. Fine. So the next element of audit report is signature of the auditor. Signature of the auditor. What is the signature that you have to give? See, there is a difference between initializing and signature. Signature means your proper signature. You know, I'll show my signature. My signature is with this. Yes, this is what my signature is. And my initial is this. This is my initial. I think I'll show you on another page, okay? This is my initial and this is my signature. Very simple signature. And I don't worry, sir, why your signature is very simple. If someone can copy or can someone forge it, no? It's okay. They can't do anything by forging, because today, whenever I'm signing, below I need to mention a unique document identification number wherever I signed. So this will protect me. This will protect me. And that is what UDIN number below wherever you are signing, especially whenever you're doing audit and attestation functions. Almost today, wherever auditor is signing, he is using UDIN concept, UDIN numbers. You know, suppose if at all my membership number, I can tell you 239714. This is my membership number, and you know my name, my membership number. You can bring a stamp of your own. I mean, like, you can just go to any stamp vendor, give these details, he'll give you a stamp. You just stamped it on somewhere and you did my signature, forgery. Okay, once upon a time people used to like blame the auditors even though they did not sign, if it is a case of forgery, and proving that it's a forgery document takes lot of time and energy. But now forgery cannot be done, because what is the proof that it is you only signed? Whenever I'm signing a document, what is the proof that yes, I originally signed it? I must give a document identification number, unique document identification number. Every document I'm signing, I should give a unique identification number to it. And this number, whatever I'm giving here, is the acknowledgement, this acknowledgement that this signature is by me. If at all a document do not have UDIN number, though my signature is visible, I can easily escape. I can say it's not signed by me. So UDIN number is protecting the chartered accountants, especially from forgery, forged documents and all, fake certifications and all. Even it is protecting the users of the reports, which are like forged. Getting it? So that is UDIN concept and signature. Now I will show you a practical example of how UDIN is working, how UDIN works. Okay. Next. So signature you have to do, full signature you have to do. Initializing you should not do. Initializing, if you say like this one, initializing. And if you remember, right from your school, if you come across most of your teachers, when they are signing on your work diary, they used to do this kind of initial only. Universally accepted signature this is. Even you go to a bank, they do sign on counterfolio, right? Similar to this only it will appear. Similar to this only it will appear. Whether it is V or P or S, whatever it is, this is a universal signature. So that's called initializing. Okay. So make sure your initial letter is very much clearly visible in the initializing. Generally, whenever we are doing, signing of tax audit report like that, first page where the name is visible, there we will give always our full signature. And the last page also, wherever name is visible, full signature. And middle some other page, we will give full signature. Okay. So wherever the name is not there, but that page we need to sign, initialize we will do. That's how we do, and we will put a seal also. So that's signature of the auditor. Then place of the signature. What is the place? Generally, this place is the city name of auditor's office. If the city name is very prominent, like if you know, if I say Chennai, Hyderabad, Kolkata, Pune, Nagpur, or I can say Lucknow or Patna, like famous cities, Mumbai, Bangalore, getting it? Mysore. These are all famous cities. If it is a famous city, you just mention the city name. That's enough. Place. And that city name should be the place where you usually sign the report. Generally, auditors sign the report in the auditor's office. Generally. So, generally, wherever the auditor's head office is situated, that city place only we will mention. Suppose if the city is not prominent, if a city is not prominent, you have to mention city name, comma, state. Getting it? Fine. And you need to mention date also, on which date you signed this audit report. And make sure date of audit report should be on or after. Date of audit report should be on or after date of approval of financials. But we always keep the same date of financial statements approved. On which date management approved, same date only we will keep audit report date also. Okay, next. Why we keep same date, I will clarify you in SEA 560 subsequent events, don't worry. Then we will also mention UDIN number. What is this UDIN number? I will show you. I'm opening State Bank of India audit test report. This is State Bank of India standalone audit test report, and I told you State Bank of India is having joint auditors. See, 14 joint auditors are there, if you remember. And you see, how do I know? Like somebody, Rajesh Sethi is there, some auditor, one of the joint auditor. He is for JC Balla and Co. He is one of the partner, and his membership number is used by State Bank of India, that he signed the report. How do I know he really signed it? He gave a UDIN number, UDIN number. He gave a UDIN number. I will check it. I will check this. This number will enable me. This number will let me understand whether Mr. Rajesh Seth really signed or not. So there is a UDIN portal. There is a UDIN portal, UDIN ICI. Okay, I'll open that UDIN portal. Open UDIN. Like here there is a thing called verify UDIN. So I'll verify. Name of the authority. I'll mention my name only. You can mention your name. So mobile number and email. And one more point, as soon as I verify this, he will get a message also that I verified. Yes, I used to get daily some 5 to 6 messages that somebody has verified my UDIN number, which I generated. And what is the unique document? We already copied. And the capture code 7698 and send OTP. You will get an OTP also, whether your number given is correct or not. And just a minute. Yeah, the OTP is 54568. 54568 and verify OTP. What happened? Sorry, 586. So verify OTP, verify UDIN. So now you see Sethi Rajesh, his membership number are 085669. See what they mentioned? Yeah, correct, they mentioned. And document type, this is an audit document, right? Audit and assurance function related. Type of certificate, any other audit not covered above, audit related one. And date of signing the document 5th June. Shall we see here below what is the date they mentioned? See, 5th June. Correct, no? And financial year 1920, very good. This PAN number of the SSE, State Bank of India PAN number, AAACS is a State Bank of India PAN number. Any comment or recommendation or adverse comment, some emphasis of matter, they gave something. Firm registration number they gave, capital of State Bank of India 892 crore. Shall we see capital of state? See here 892. Correct, no? Cash and cash equivalents 251,097. Where is that? I think probably these two together, I think so. Yeah, 257, probably both of that together, I think it will come. Maybe. No, not that. Maybe. I'm not exactly sure about that. So balance with banks. 84 something balance with banks. Some details they are giving. Okay. And it is March 20 financial statement standalone of State Bank of India. So that is active means what UDIN number is not revoked by him. Not revoked. He is still keeping it active. Suppose if the status is revoked, what does it mean? This document, wherever the State Bank of India mentioned here, this number, this document is not reliable. So he did not sign this document. Sometimes what happens is we will give number to the client. Yeah, please mention that number. But what client will do, the upper data, he will change it and then keep that number. At that time, what I will do, if I come to know, I will revoke that number. Because he's mentioning the number, I'll revoke it. That's how. Okay, fine. So that's how the usage of UDIN. I think, I don't know how many of you have used this UDIN concept practically. Okay. So, but it's a very good protection for the auditors against forgery, all that fake attestations, all that. Tomorrow, if a client is coming and asking me, if a bank is, dear auditor, you signed this report, you're answerable. Where is UDIN number? You show me, I'll ask him. He didn't show. And I'll say, I did not sign, leave it. And he can't do anything. Because UDIN number is must. Next. So that's about the contents of the audit report. With this, we have typically covered how to prepare audit report completely. Now, the pending standards we will discuss SEA 610, 260, 620. We will finish it off. And the company audit pending questions, we will finish it off. Then comprehensively we will read. That will be something like a revision for you as a whole. Getting it? We will revise. We will finish the pending topics in each and every standard. Some paragraphs are pending for reading. We will finish it off and discuss practical questions. With that, this particular reporting chapter will be finished. Okay. Now, so coming to the actual standard, the main agenda of this particular session, SA 610, using the work of internal auditor. Sir, it is very confusing, sir. At one place you are saying using the work of internal auditor, at another place you are saying using the work of other auditor, and there are like auditor as a statutory auditor, like at how many places we will be using work, sir? I will first classify that. Okay, so SA 299, here I am using the work of joint auditors. SA 600, I am using the work of branch auditors. SA 220, I am using the work of my article assistants and my audit manager, my staff. Example, that is dealt under SA 220. SA 610, currently the standard which we are going to discuss, using the work of internal auditor. SA 620, using the work of an auditor's expert. SA 500 deals with management expert, one of the component only. I'm not talking about entire 500. Actual 500 is evidence, audit evidence, the standard is in that management expert. So these many people's help I will be taking into, when I'm doing audit. Okay, sir, acha, understand. But why did you split them into two parts? In these cases, there is a division of responsibility. Whatever the work joint auditor is doing, okay, and I will use his work, he will use my work, and we will give collectively a report. But each of us are responsible only for the work performed by each of us, not for the work performed by others. Branch audit also the same. But whereas when you are using the work of your staff, or when you are using the work of internal auditor, or when you are using the work of auditor's expert or management expert, whatever the work you are using, you cannot divide responsibility there. You cannot say to the shareholder, dear shareholder, sorry, I believed internal auditor and trusted, and I did not do any work. Based on his report, I gave my report. You cannot use his work in such a way. Division of responsibility. Even though you are using the work of these parties, articles and staff, internal auditor, expert, management expert, ultimate responsibility for the opinion expressed by you is you. Only you are responsible for the ultimate opinion given. You cannot blame them. Make a note of this. Very important observation. The statutory auditor of a company, in the course of performing the audit function, can use work of these people, and this is how it can influence. I hope everyone understood. Pause the video and take a note of it and then proceed. Next. So what is SA 610 using the work of internal auditor? What it is exactly? Sir, are we now, first of all, who is an internal auditor? Who is an internal auditor? We are actually having section 138 under Companies Act, which we are going to discuss in our 9th chapter called internal audit, management audit, operational audit. Very extensively we are going to discuss the concept of internal audit, applicability of internal audit, the concept of internal auditor, all that we are going to discuss in that particular chapter. So internal audit means it's an audit function within the entity. Why internal audit function came into picture? It is very clear. The stat auditors cannot do entire 365 days audit, and they cannot cover all the transactions in depth. And in fact, most of the occasions, statutory audit starts after 31st March. So even if at all some errors and frauds that are going on during the year, if at all stat audit is conducted, maybe it will be detected only after year end. So if at all we have an internally audit function within the management, as part of the management, we can detect the frauds and errors earlier, and so that it will not be repeated, so that the company assets can be safeguarded. And internal audit is one of the internal control. It is one of the internal control. It is one of the internal control system, internal audit. So the concept of internal audit came in light. Now, later on, after understanding how important and how needed the internal audit, Companies Act made it mandatory by virtue of section 138. Of course, internal audit function is not mandatory for every organization. They have given criteria. For all listed companies, it is applicable, compulsory. For all unlisted public companies, they have given some criteria. For all private limited companies, they have given some criteria. The unlisted public company, and the private limited company who fulfill that criteria, they must constitute an internal audit department. The department should consist of number of qualified people. There must have some qualified people. Getting it? Having regard to the size of the organization. Depending upon the size of the organization, you must have a sufficient internal audit department commensurate with the size of the organization. Suppose you go like today, you all know after you qualify CA, now all of you are aiming for campus selections, right? So in the campus selection, there are some companies like Wipro, Infosys, all that companies who participate, even big four entities. You know what is the primary purpose why they recruit you? Because they want to recruit you in the field of internal audit. That is, internal audit is becoming very, very, very popular. You know, there is an exclusive course on internal audit, CIA. Certified internal audit course, which is an international course, certified internal audit course, completely objective oriented and one of the excellent course. You get immense knowledge if you do certified internal audit course. Fine, I'll talk about all internal audit stuff in the internal audit chapter. Now, who can be this internal auditor? In a company, who can act as an internal auditor? Anybody, whatever board of directors think of, they can act. Sir, is internal auditor must be a chartered accountant? No such prescription under Companies Act. Companies Act clearly says he may be a CA, he may not be a CA. He may be in COP or he may not be COP. He may be employee, he may not be an employee. There are no qualifications and disqualifications like stat auditor. So that's a brief overview about internal audit, and to best of my knowledge, you would have already come across this topic at CA inter level itself. Now what we are going to discuss now in the standard SAS 610, using the work of internal auditor. Who is using whose work? Who is using whose work? External auditor. Who is using? The external auditor. The external auditor is using the work of internal auditor. External auditor, statutory auditor, independent auditor is using the work of internal auditor. What is that, sir? Example. See, let us assume Reliance Industries Limited. We will take the same example. Reliance Industries Limited has appointed me. Or else, well, let's take Infosys itself. I told you fixed asset example for Infosys, right? Caro. Let's take Infosys example itself. Infosys appointed me as a stat auditor. And as part of Caro, first point that I need to report is whether fixed assets are physically verified by the management at reasonable interval. And what management did? What management did? They appointed internal auditor and they are verifying physical verification aspect, all that extensively. So I want to know whether the company is doing reasonably that work or not. So what should I do here? I'll just look at the management. I'll ask management, look, give me your physical verification report, and they forwarded me internal auditor's report on physical verification of fixed asset. Now the question lying before me, can I use this report? Can I believe this report? That's a question lying before me. Another example I'll tell you, where you will connect even more stronger. Every one of you know GST, right? I'll take this classic example every time. GST. And we all know GST is a state-wise registration. Yes or no? State-wise registration. Suppose I'm talking about Reliance Industries Limited. Reliance Industries Limited. They have operations, let us assume, in 29 states or else 20 states. They have operations in 20 states. Obviously, they will have 20 registration numbers. Yes or no? So obviously they'll have 20 GSTR numbers. And we all know very well, since it is a company having huge scale of operation, they are not eligible for quarterly plan. They are only liable for monthly return. Monthly, how many returns they have to file? 2 returns they have to file. Monthly, how many returns they have to file? 2 returns. One is GSTR 3B, another one is GSTR 1. One is outward sales and 3B is a summary return. 2A, 2 all not that required. 2B all that now. You know, I think if you have done GST works, I think you would have understood. And 2 returns they have to file monthly. 20 states, 2 returns. 12 months they have to file like that. 12 months they have to file. How many returns it will come? 20 into 2, 40. 12 fours are 48. 480 GST returns they did. And if you remember, Caro, if you observe Caro, 7th clause, I need to report whether the company is regular in depositing undisputed statutory dues such as GST, income tax, all that. The Caro is asking you, Mr. Auditor, is company regular in depositing undisputed statutory due? One of the undisputed statutory due, GST. So they are asking, is the company state-wise, registration-wise, are they paying GST liability regularly within due dates? Which means for all the GST 20 GST states, all the states, April month, May month, June month, likewise state 1, state 2, April month, May month, June month, output tax, input tax, and the balance payable, how much, when they paid, how much they paid. Is there any delay? I have to do a very lengthy reconciliation sheet. Lengthy reconciliation sheet I need to do in order to figure out whether the Reliance company is paying GST in all the 20 states regularly within time, and are they filing returns within time. So this much I need to check. Oh my God, this work itself takes for me 10 days. This work itself takes for me 10 days. I need to keep some 1 or 2 assistants on this work for 10 days. But we don't have that much time for stat audit. We cannot do each and every work. This is the work which management should have completed. Luckily, this entire work is already done by internal audit department, internal audit function. One of the staff member of internal audit function has already done this work on a monthly basis. He has entire 12 months reconciliation for all the 20 states. Now I need now tell me, if I have to know about GST paid regularly, do I need to work from the scratch? Can't I use his work? He did the work. No. Can I use his work? The SCA 610 says, dear auditor, you can use his work. You can use the work performed by internal auditor. But remember, ultimate responsibility is with you only. Don't depend too much on internal auditor, or don't depend on him. Use his work. But if at all tomorrow something goes wrong in his work and you believed his work and gave opinion, you cannot escape saying you trusted him. You cannot escape like that. So that's what the standard says. But the standard permits us use his work, no problem. At wherever possible, you can reduce your work burden and use his work. So the standard permits it. So this is one way, type 1. This is type 1. How we can use the work of internal auditor. Type 1 I showed you. Like here, work is actually performed by internal audit function, and that work we are also using the work actually performed by internal auditor. Sir, why you said type 1? Is there another way how we use internal auditor? Yes, that is type 2. The standard says the internal audit function of a company. The standard says the internal audit function of a company can be used by the stat auditors. The internal audit function of a company can be used by stat auditors in 2 ways. Type 1, we already covered. Type 2, no, I don't want to use his work. His work is fine. GST I took. Now I want to use him. I want to use him directly. So I want to use internal audit function to provide, I want internal audit function to provide direct assistance. I want their direct assistance. It's not that their work I'm using. I want them itself to come under my work. I want them to work for me. Direct assistance under the direction, supervision and review of external auditor. Internal auditors providing direct assistance under the direction, supervision and review of external. Sir, what is this type 2? Suppose I'll imagine a hypothetical situation like this. Suppose originally I went Reliance company, audit. So I went with 35 staff, 35 members, my team, and along with me engagement partner, we all went. And suddenly 5 of my staff members fell sick because of change in weather or whatever reason, or we went in COVID time to Mumbai, and Mumbai being hotspot, 5 of my staff members affected with COVID and they took leave. Okay, and now I'm in shortage of resources. Now I requested company, dear company, originally I told you that I will give audit report by so and so date, but now it will delay because my staff members were not there. I need 10 more days to complete the audit. Company said, sir, sorry, please don't delay it, sir. I know audit quality should be ensured. You have to take enough time, but don't delay because of this reason, sir. Do one thing. We have staff, and even in our staff, we have so many internal auditors. All of them are familiar with finance and all, everything. Finance and accounts are very good at. Why can't you take their help instead of your staff help? Okay, is this facility available? Is the standard permitting this? Yes, the standard is permitting you. The standard is permitting you to take internal auditor help as part of your team. You can take him as part of your team. You can take his direct help, direct assistance. But remember, you're only ultimately responsible even if you do some mistake. Just like how you allocate work to your articles, same way allocate to this fellow also. And whenever you are allocating work to your articleship, your articles, you are reviewing, right? You are directing them how to do. You are supervising how are they doing. You are reviewing after they completed the work. Yes or no? Same way, you direct the internal auditors temporarily working under you. You direct them, monitor them, review the work, just like how you do with your articles. Is this facility permitted? Yes, it is permitted. These are the two ways. These are the two ways how internal auditors work can be used by external auditor. Now, what the standard is saying here then? What the standard is described, what the standard is then discussing about? Dear Mr. Auditor, you can use the work of internal auditor in these two ways. Now, when you are using type 1 work or when you are using type 2 work, what are the precautions to be taken? When you should not go with type 1 assistance, when you should not go with type 1 work, when you should not take his work at all, or when you should not take that internal auditor to provide direct assistance, when you should not do type 2, when you should not do type 1, what are the precautions that you have to take? Suppose if you are taking type 1 help, their work you are taking, how do you know whether this work is a sufficient appropriate or not for your audit? How do you check it? How to check whether internal audit work is useful for you or not? Standard is explained. And what are the formalities that you need to follow when you are using direct assistance? What formality you need to follow when you are using direct assistance? The standard is explained. So that's what we are going to learn in this standard. I hope now we have got a clear picture about the whole standard. So let's continue with type 1. When we can use type 1 work. What I'm going to do is now I'm going to first explain you entire content, entire concept. Then we will open the book and read line by line. So that's how we understand the concept, and we also have connection with the terminology and the material. That's it. So we'll continue. So accidentally the previous video was stopped. So anyhow, the continuation can be listened from here. So SES 610 classifies using the work of other auditor into two parts as we discussed. Part 1, type 1, using the work performed by him, example GST which I told. Type 2, using the internal auditor to provide direct assistance. Now, the standard further describes when type 1 work cannot be used. Actually, no, the standard starts explaining when type 1 work can be used, when it cannot be used. The answer is mostly similar. So first we will discuss when it cannot be used. When internal auditor function, his work cannot be used. When his organizational status, what is his importance in the organization, and policies and procedure, whatever the policies and procedure they are adopting, are not supporting his objectivity and independence. Suppose when the organizational status and the policy and procedures that are being followed by internal auditor, they are not supporting his objectivity and independence. In the organization, they have not given enough authority. In the organization, the policies and procedures are like every time internal auditor has to take a decision, they need to consult the executive directors. They are simply like management puppets. In such a case, the SES 610 says, dear stat auditor, don't risk using this kind of work. Second one, internal auditor lacks skill and competence. Suppose you want to use the GST workings of the internal auditor and he doesn't know anything about GST. He just copy pasted the formats of reconciliation and just pasted the numbers. If I ask him any question, he cannot answer also. Then don't use his work, don't risk it. Third scenario, when internal auditor using the work of internal auditor is prohibited, is third one. When internal audit function lacks, when internal audit function lacks sufficient, discipline. There is actually a word called discipline. When the internal auditor lacks systematic and disciplined approach. When internal auditor lacks a systematic and a disciplined approach, then also don't use his work. Actually, this question, how it will be asked in exam, What are the factors The external auditor evaluates in order to determine whether the work of internal auditor can be used or not. What are the factors he will use? The external auditor, in the course of determining whether internal audit function work can be used or not, will check the following factors. First one, whether internal auditor's organizational status and policies and procedures are supporting his objectivity. Whether internal auditors are having possessed with necessary skill and competence. Whether the internal auditors are having a systematic and disciplined approach. If the answer is no, 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 don't use his work. That's it. Very simple, straight question. And this question, when it was asked in exam, many students couldn't write. And you know, from here we can adopt a life lesson. If you don't have objectivity and independence, if you are not unbiased, if you don't have skill and competence, if you don't have a systematic and disciplined approach, your work cannot be used by anybody. It's a life lesson also. From the standard we can take it. Okay, fine. Anyhow, so that is topic 1. That is the type 1 work, using the work of internal auditor. When we can use, what factors we have to evaluate, when it is prohibited. Okay, suppose you decided using his work, you took his GST workings. Can you directly take it and document and proceed? No, you need to check this GST workings. Before even checking the GST workings, I need to check his skill and competence. What is his qualification? What is his credibility? Is it an external firm or is it an internal auditors? Internal auditors only. Are they employees or are they practicing firm? What is the level of independence they're having? How management is giving weight to their decisions? Are they involved in the decision making process, control designing process, control implementation process? How far their decisions were given importance? I need to check this. I need to check their competence, objectivity and their status in the organization. First I need to check. Then I will look at the workings. Did internal auditor exercise a reasonable judgment in this work? I will just sampling I'll do and then check it out whether internal auditors have reasonably worked on it or not. Okay, and if at all they take any assumptions when they are performing GST reconciliation, I will look into whether these assumptions are reasonable or not. And one more thing, external auditor can use work of internal auditor in such a way that it should not be like you are not doing any work. Make sure you are not doing any work. Such kind of demonstration you should not give. You are doing your own work. Whatever the involvement that is required from external auditor, should always be there. And the standard also says external auditor as much as possible perform work on his own better rather than using the work of internal auditor. Only for very small works use his work. Why for every work, why you will use his work? I know internal auditors were involved in every area of operation, every work they did. Does it mean you take every work and use their work only and give opinion? Then why are you here? What you are doing? So the standard also gives how much external auditor shall involve, to what extent external auditor shall involve, to what extent internal auditor work can be used. The standard also gives guidance for that and we will read it in the material. That's about type 1. I hope you have understood type 1, using the work which is performed by internal auditor. Now type 2. What is type 2? Using the internal audit function, to provide direct assistance so that they work under my direction, my supervision and my review, just like my article assistants, just like my engagement team. These people are temporary engagement team members for me. So standard here also gives some guidance. What factors you will take into account when you are taking them for direct assistance? I will look into 2 factors. 1, are they independent? Are they having independent attitude? 2, are they having competence? Sir, same points, no, like type 1? Yes, exactly same points. But type 1 third point is no, do they follow systematic disciplined approach? Here, no, they are working under me. Their approach is irrelevant for me. If I am using his work, no, then his approach of work is needed. I am not using his work, I am using him. And I am directing him how to do. So the approach is something which I am directing. So that's why third point here it won't be there. And when you are using direct assistance, no, that is prohibited. When he is not independent, when you found there are threats to his independence, 2, when they are not competent, so don't use his work. Suppose in an organization you evaluated, you decided these internal auditors are very, very genuine, honest and competent people. You are taking their help. Now you called them as part of your team. Now along with your team, you need to allocate the work to these fellows also, yes or no, because they are working under you now. Because they are working under you now. So you need to allocate them the work also. Agreed. So when you are allocating the work to them, don't allocate the following works. Very careful. Don't allocate the following. What does it mean? Don't allocate, do not allocate the following works to these people. Do not allocate the following. First one, items, areas involving significant risk. Wherever you think huge amount of risk of fraud or risk of error is possible, very huge amount of risk, high risk is involved, don't allocate that to internal auditors. That work either you do or your staff, own staff, or then give them the work. Don't allocate to these people. See, at the end of the day, ultimately they are management people, not yours. Remember, they are not your staff. They are, at the end of the day, they are managing staff, management staff only. So wherever significant risk you think in a particular area, let us assume revenue from operations, you felt significant risk of fraud is there, don't allocate them. Don't allocate them to identify fraud. Though they identify, they may not reveal you because it's a very significant fraud. Second one, items involving significant judgments. One more item also don't allocate. Suppose you want to allocate him, you want to allocate to the internal auditor to check provision for depreciation in respect of 3 lakh crore worth of plant and machinery. Oh my God. Such a significant work which involves significant judgment. Don't allocate. Don't allocate. Don't take risk. Third one, items of work in which they are already previously involved. I want to allocate payroll work. I want to allocate them the work of payroll where they have to check Provident Fund, DSI and all. And they are the one who originally did that work. And I decided not to use that work. Now if I call him and allocating him the same work, there won't be any scope for improvement. So don't allocate the work which they already involved in. See, very logically drafted the standard. Who said standards are not understandable? Who said standards are something which we need to muck up? No need. And for everything there is a clear logical explanation. Till now, I think this is 10th or 11th standard I'm dealing with. You would have understood nowhere I explained it without a proper logic. So you can use him, direct assistance, take him help, take his help. Let him mingle part of your team. But don't delegate these works. These works either you do or your team members will do. Okay, fine, I'll take this work. So which works I can give them? Give them where there is no significant risk. Some clerical works, give them. Give them where there is no significant assumptions, judgments, thinking process and all. Okay, give them clerical works, nothing but. So give them clerical, mechanical works. Like, vouching. Or maybe sometimes vouching is also not a clerical work, man. If you do proper vouching, vouching is like evaluating control systems. I'll talk about vouching when I'm discussing about risk assessment and internal control, how significant vouching is. We all article assistants know, so stupid. We never understand the importance of vouching. And when the senior is giving us vouching work, we feel so bad and we always, we'll be scolding him inside. Okay, well, this vouching and all, because they never make us realize what is the importance of vouching. Forget about them. They are making us, they themselves don't know, first of all, what is vouching. I'll talk about vouching in internal control topic, how important vouching in an audit. In fact, vouching is the most important thing in an audit, I can say. Most important. Fine, I'll talk about it later. Now, fine, you're taking him, not allocating him, all that. Fine, now when you're taking this fellow work, when you're calling him as part of your team, you need to enter into two agreements. One agreement with management, another agreement with the internal auditor, who is providing direct assistance. What with management? You will enter with management. Dear management, you are agreeing that you are providing these 5 fellows to work under me for next 15 days. In these 15 days, please give a declaration that you will not disturb them. You will not interrupt them. Okay, management sign and give declaration. Second one, internal auditor. Hey, dear 5 members, these 15 days you are my team. Forget that you are an employee of the company. And whenever if management is asking you some information behind, please immediately intimate me. If you have any threats of independence or any intimidation you are getting from management, please immediately come and share me. So I need to give them the confidence and get an agreement, consent from them that they are interested to work with me. Once documentation is over regarding this, I will use their work whenever possible and use these fellows under direct assistance. I'll proceed with the audit. That's what SEA 610 is talking about. Over. Very simple. SEA 610 is talking about using his work, using him. When you're using his work, check, is he independent? Is he competent? Is he having systematic disciplined approach? Yes, 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 use it. No, 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 don't use it. Direct assistance. Competent, independence, take him. Not, ignore him. Okay, you took him. Don't allocate him the work which involves significant risk, significant judgment, the work which they already were involved. Over. The standard. So simple. So let's now read the standard completely. Very important standard. This one also for MCQs and maybe sometimes a straight question can come. So using the work of an internal auditor, objective. What is the objective of the standard? The objectives of the external auditor. The standard requires an external auditor to determine whether the work of an internal audit function, work of means type 1 work of an internal audit function or direct assistance can be used. This standard is ultimately helping you. Can you use his work type 1 or can you take type 2 or not? So this standard is helping you when to use it. Not only when to use it. This standard also helps you. Second point, if using the work type 1, determine whether that work is adequate. How much you can use, that also standard is guiding you. Third one, the standard is also helping you. Suppose if you are using the direct assistance, how to direct them, how to supervise them, how to review. So the standard objective is very simple. Can you use type 1 and type 2 or not? First it tells you the standard. Second thing, if you are using type 1, how to use it. If you are using type 2, how to direct it, supervise it and review it. Very simple. The objective is very simple. Sometimes this can be a straight question. Write about objective of SEA 610. Then see, that's why whenever you're reading, every word you must understand. When you see every word I give emphasis and equal importance when I'm reading. When I'm reading, every word I stress, because that's how you understand the logics. Now, okay, definitions. What is internal audit function? It is a function of an entity, of course, organization, client, that performs assurance and consulting activities. Of course, they provide assurance to the management, controls are working properly, all that. And they also give consultation. Whenever management have some doubt, they will consult these people, designed to evaluate and improve effectiveness of entities, governance, risk management, internal control. Sir, what is governance? What is risk management? What is internal control? I am going to discuss in the 9th chapter called internal audit. Wait until then. What is direct assistance? It means use of internal auditor. We are using internal auditor, directly him only. We are not using his work to perform audit process under the direction, supervision, review of external auditor. C, part C, using the work performed by internal auditor, type 1. Prohibition on type 1, first I will read, then I will come to evaluation. Prohibition, the external auditor shall not use the work of internal auditor if external auditor determines the functions, organizational status. In the organization, they don't have status, relevant policies and procedures. The policies are not at all favorable to them. Do not support objectivity, or the function lacks competence, or the function does not apply a systematic and disciplined approach, including quality control. They don't have quality control policy. They don't have any systematic approach, no disciplined approach, irregular fellows. So which means what factors you are evaluating? You are evaluating whether the internal audit function, organizational status and policies and procedures are supporting the objectivity, whether the level of competence is there or not, whether the function applies a systematic and disciplined approach, including quality control. That is what. So the external auditor shall determine whether the work of internal audit function can be used by evaluating the following. This question can be asked. What are the points external auditors takes into account while evaluating the work of internal auditor? Straight question. And if a question comes like this, people say out of syllabus. Then third one, nature and extent of work of internal audit function. Which work I can use? Nature. Which works of internal audit I can use? Extent. How many works I can use? See, in every company, internal auditors will take care of everything. I'm telling you. They do risk assessment process, they do verify opening balances, they verify all the transactions, they verify all the balances, they verify all liabilities, assets, everything. Typically speaking, you have nothing to do. So does it mean I will take entire his working and sign it? What you are doing then? So the standard is guiding you, the standard is giving you some hints. Dear Mr. External Auditor, don't be too much dependent on that fellow. Okay, which works you can use, how much work of him, how much work of internal audit you can use. The standard gives some precautionary measures. The standard is giving you some warnings and hints. What? The external auditor shall consider nature and scope of work performed by internal audit function. What is the nature and scope? What is the, so internal auditors were there, what functions they are doing, what is the nature, what is their scope? Hey, internal auditors are there only for controls evaluation. They are not involving in financial accounts aspects. Okay, which means with respect to only control aspects I can use his work. So first understand what works they are doing. In order to use his work, in order to decide which work I can use, first understand what works they're doing. Nature and scope. Example, and you can use his work in the following, especially the standard says in the following works you can use. What works? Testing operating effectiveness of controls. Okay, you need not sit and test every control. They already tested. Risk control matrix is already prepared by them. Check it out. You document it. Substantive procedures involving limited judgment. Limited judgment. Understand the word limited judgment. They would have performed some actual verification of transactions, right? Wherever there is no much significant judgment, normal, mechanical, clerical works. With respect to that, you don't work. Use his workings. Observations of inventory counts. You can send him to observe physical verification of inventory. Testing compliance with regulatory requirements. Okay, whether the company is complying with regulatory requirements, they worked on it. Their workings are there. Okay, such kind of workings you can do. There are just compliance works. Okay, no judgment is involved. And in some circumstances, audits or reviews of financial statements. Whenever you're doing either audit or you may be doing a review. Sir, what is review? Don't worry. Next chapter, standards on auditing, I'll discuss there. Like information of subsidiaries that are not significant. Underline, not significant. If you see limited judgment, yes or no, compliance works, controls related works, not significant. Okay, so like suppose this company have 280 subsidiary companies, man. 280 companies are there, subsidiary. Not every subsidiary company is very big. Out of 280, almost 170 subsidiary companies are small. With respect to these 170 subsidiary companies, which are components to the consolidated financial statements, I will ask internal audit to review. Instead of me doing, I'll ask him to review. Provided there is no conflict with SA 600. Ultimately, subsidiary company audit reports you're only checking. Branch audit reports you have to check. Insignificant, small branches, small subsidiary company related reports, instead of you checking it, ask internal audit to check it and give you opinion. That's it. And the external auditor shall make, look at what is external auditor responsibility. You are only one responsible for significant judgments in audit, and you are only responsible to prevent undue use of work of internal. Too much of exploitation don't do. Okay, you are also getting fees. In fact, you are getting higher fees than that fellow. Just because you are statutory auditor, company is paying you higher fee, don't be dependent on him unduly. Use his work. His work should be 10% or 20% of your total work. It should not be 80 or 90% of the total work. Okay, so, and shall plan to use less of the work of function, perform more of the work directly. You perform directly, use his work less. The relationship between internal auditor and external auditor should be like fish and water, but not like fish and fisherman. Maybe if it sink, use it, otherwise ignore it. Now next, the external auditor shall also evaluate. One more thing you should evaluate. What? Whether using the work of internal audit function to the extent planned would still result in external auditor being sufficiently involved in the audit. You decided out of 20 areas, 4 areas you are deciding to use. Okay, 4 areas means okay, 16 areas I am doing. No, okay, organization don't think that I am depending on him. Organization will think that I am only working. Suppose out of 20 you are using 15 works of him and 5 works on you're doing, it will like clearly show that you are not involving in the audit. What staff also, what bank, what the company also may think, this fellow, no, don't do any work, he will always come and do internal audit work only, he will never involve in audit. So that kind of name you should not get. Okay, reputation of the profession you should always safeguard. Next, the external auditor finally communicate with the top management, share an overview of the planned scope and timing of the audit in accordance with SA 260. Communicate how you external auditor is planning to use. Dear management, I checked your internal audit function and we decided to use in these works. And by the way, we are doing these many works, out of which these works we are doing. So communicate with management as required under SA 260. Over. And finally, when you are using the work, you now using the work, no, type 1 work, no, what you need to do, how you and internal auditor should be like. I told no, fish and water, not fish and fishermen. First, discuss and coordinate with internal auditor. First, if the external auditor plans to use the work of internal audit function, the external auditor shall discuss planned use of its work with the function as a basis for coordinating the respective, okay, which work you want to use. So you want to use GST workings, but still he is not yet completed GST, half work is completed. So ask him, tell him, hey, dear internal auditor, can you please finish the GST work sooner because I want to use that work. So tell him, coordinate. The external auditor shall read reports of the internal audit function relating to work of the function that the external auditor plan to use, which work you want to use, read the report, concerned report, and obtain an understanding of nature and extent of procedures performed and related findings. So how much they performed, what findings they did, check it out in the report. The external auditor shall perform sufficient procedure to determine adequacy of internal audit function. See, are they working adequately? And for the purpose of audit, for our audit, including whether the work of the function is properly planned, performed, supervised. That's what systematic and disciplined approach. Are they performing in a planned manner? Are they having a plan? Are they performing proper? Is there anybody to supervise them? Are they reviewing it properly? Is their works reviewed properly? And are they documenting it properly? Check it out. And see whether sufficient appropriate evidence is obtained by them. Check samples and see whether evidence is there or not. Take 1 month GST return and that 1 month related output tax, outward supply, input tax, purchases. See whether evidence collected by them is matching it or not. And whatever conclusion they are reaching, are they appropriate in the circumstances, and reports prepared by them are consistent with the work performed. So they are giving a report and they have workings. See workings and report, are they matching or not? Check it out. And one more thing, the nature and extent of external audit procedure shall be responsive to external auditor's evaluation of amount of judgment involved, risk of MMS, supports the objectivity, level of competence. What is this? What is this point? The nature and extent of external auditor's procedure shall be responsive to. What does it mean? Now here if you see, external auditor performs sufficient procedure, no? I need to verify his workings, no? I need to verify whether are they planning, performing, supervised properly. Second point, are they getting evidence or not? Are the conclusions reached by them correct or not? Every time, in depth, I am going and verifying everything. In such a case, no, it is better you can do on your own. Instead of verifying everything in depth. So how much extent you should involve? How much extent you should verify that work? How much extent? It depends on judgment involved. How many assumptions they are taking? How much risk involved? Suppose the work which you are going to use, GST work. If at all you think GST work is having so much of risk, maybe you may have to verify little more in depth their workings instead of prima facie verification. And are they independent? If they are independent, you can trust their work. You need not go in-depth analysis. You just take the working, document it. Slightly verify, document it. And competence. If they're really competent, very competent, take the work, sample basis, check it, document. If they're not competent, I need to check thoroughly. So that's what the point number D talks about. The nature and extent of external auditor procedure shall be responsive to the evaluation of the following. How do you evaluate? What is the following result? How much judgment is used by internal auditor? How much risk is involved in the work they performed? And are they independent in the organization? Are they having competence? If you think the answer is yes, your audit procedure of how they performed, your audit procedure of how they performed, C point, your audit procedure of how they performed will be reduced. Don't worry, I'll sum up. After finishing it, I'll sum up. The external auditor finally shall evaluate whether the external auditor's conclusion, your conclusion regarding internal audit function and the determination of nature and extent of work remains appropriate. Finally, after you understood everything, after you took his work and you verified his work, after that finally once again give a look how much work you have used, what is your total works, and have you properly analyzed it. Just look at a glance all the events, series of events happen, just summarize it, and finally check is it fine or is it okay, everything. Just check it out. Then finally you can proceed aram se. So what they are saying, using the work once again, first discuss with the internal auditor, coordinate that and tell him that you are going to use his work, which works although you have to communicate him. And two, read his report and check how he's working, getting it, and obtain an understanding of nature and extent of procedures they performed. And what procedures you check here, you need to first understand the adequacy of the work that they did. Only if the work performed by them is adequate, then only you will use it. If the work performed by them is not adequate, you will not be using. So what you will check, whether they performed adequately or not, look at their planning, look at their execution, and see whether they obtain sufficient appropriate and see conclusions reached by them and the report they are giving consistent or not. Now how much you will verify his work, it depends on judgment involved by him, judgment used by him, risk involved, and in his independent status, level of competence. Based on this, how much you will verify his workings will be decided. That's it. With that, type 1 work is completed. Type 1 is completed. What you have to do, as soon as you finish the class today only, please revise it. I'm telling you, wherever you have to revise. If I tell you you have to revise, means you have to revise. That's it. No exception, no excuse, because it is very important. So this question you have to read once again. And my request is read 3-4 times. Nothing wrong. Read 3-4 times. And which works we can use his work? This question can be asked in such a way. What are the works of internal auditor that can be used by external auditor? Give some examples. Give some example of nature and extent of work that external auditor can use. So what works? These are the 5 nature of works that we can use. And now you see, and wherever possible, make sure you're not depending on him unduly, and ensure that even after using his work, there is a clear indication of you have sufficiently involved in the audit. Ensure that. What the D point is saying, communicate with management what are all you're going to do. Out of this much, how much you're going to use his work. Once everything is done, formalities, then use his work. How you will use his work. Coordinate with him and look at his report and verify, perform the procedures, whether he worked correctly or not, whether his work is adequate or not, and how much you will verify his work, how much extent you verify his work, depends on these factors. I think I have given you a logical connection to it. Now, type 2. Using the internal audit function to provide direct assistance. What is this? The external auditor shall do evaluation process. I'll keep it pending. Prohibition. When direct assistance is prohibited, the external auditor shall not use internal auditor to provide direct assistance. Areas involving significant judgment. I told you, significant areas, don't give them. Higher assessed risk, don't give them. Relate to work which they have already involved, don't give it to them. Which means, what are you checking? Oh, sorry. I think I wrongly took. Prohibition I need to talk about. So once again, type 2 work. Using the internal audit function to provide direct assistance. You decided to use his work. And when you should not use him is threats to objectivity. Threats to objectivity means they are not independent, lacks competence, don't use the work. Which means, when you will use his work, what are the points? This is important. Right? What are the factors? This is how the question can come. What are the factors external auditor takes into consideration in order to determine whether internal audit function can be used as a direct assistance? What factors? See, whether internal auditor possesses objectivity and independence. And how do you know whether they're objective and independent? Inquire the internal auditor. What you will inquire? Regarding interest and relationship. What is the interest they have in the how they're interested in the company? What is the relationship? Example, do they have any family and personal relationship with an individual working or responsible for entity work? So, do you have any top management relatives and all? Association with division or department in the entity. Do you have any association with any divisional heads and all? And significant financial, oh my god, this internal auditor is having 10% shareholding in the company, significant financial interest in the entity other than remuneration related. So check his independence by asking all these questions. Second one, see, do they have necessary skill and competence? Tell me, what's your qualification? Where did you work earlier? So what is your credibility? Check it out. So prohibition, when you will not use it, if he is not objective, after checking all the relationships and all, you decided, no, this fellow is not objective, he is only having shares in the company, why do he give negative report on the company? So don't use his work. Competence is not there. Suppose if the answer is yes, he doesn't have any relationship in the top management, he doesn't have any association with any division or department of the company, he doesn't have any financial interest or operating interest in the company, he's just an internal auditor, he's independent person. If you decided to use his work, getting it, you decided him directly to provide direct assistance, you call him, hey, come part of my team, be part of my team, you decided. Now don't allocate the following works: significant judgments, higher risk, relate to work which they were already involved. So that I have given in the form of a diagrammatic representation. You see, nature and extent of work that can be assigned to internal auditor providing direct assistance. Nature and if you see, nature and extent of work that can be assigned. So diagrammatic, the external auditor shall consider, the external auditor shall consider, the external auditor, I think, sorry, I think it is alignment is changing, man, sorry. I think I need to, just a minute. Fine, it came back. So the external auditor shall consider, what he has to consider: amount of judgment involved, assessed risk of MMS, evaluation of any threat you need to consider. So, and you need to evaluate the audit evidence gathered by internal auditor. The external auditor shall not use the auditor to provide direct assistance in respect of significant judgment, high assessed risk, related to work which is reported to management or TCWG by internal audit function. Maybe, suppose if at all they are reporting to top management, don't use his work also. There also significant works. That means they are significant works. Related to decisions internal auditor makes in accordance with this standard. I mean, related to decisions the external auditor makes in accordance with the standard. If at all, this is for this, no, the example is, suppose you are talking to one internal auditor and you are asking him a decision. What decision you are asking him? Can I use internal auditor direct assistance or not? You are asking internal auditor only that can I use his assistance or not? That's what this sentence, relating to decisions the external auditor makes in accordance with this standard. As per this standard, SA 610, you have to take some decisions, no? Decision taking process, don't delegate him. That's what they're saying. Whatever works that you have to do as per this standard, you only have to do, you cannot delegate him. And finally, now you decided to use direct assistance, right? Obtain written agreement. What? From management. What you will obtain? That they will not intervene those 15 days. And one from internal auditor, what? They will keep whatever the matters I'm instructing him confidential, and they will immediately come and complain me. They immediately come and complain me if some problem comes. Inform the external auditors of any threat to their objectivity. And finally, once agreement everything is over, now I need to direct them. Which works they need to do, and I will regularly monitor how are they doing, and I will review once they performed the work whether they gathered sufficient appropriate evidence or not. All that, just like how I verify my team in accordance with SA 220, how I verify my team, how I direct my team, same way I direct internal auditor and verify the audit evidence for the work performed by internal auditor and ensure is it sufficient. Now that fellow as part of my team performed work, right? I will check whether the evidence and conclusions reached is sufficient and appropriate. And finally, I do documentation. See, documentation is not that very important. You can read on your own. This is not so big deal. I think you understand. So see, thoroughly we spent almost in the previous recording 20 minutes we spent on this, and now in this recording almost 36 to 40 minutes we are spending. Now what I decided now, let's continue SA 260 also. Let's continue with SA 260, not 620, okay? 260, we'll discuss 260 also. 260 is a very small standard. Very small. Communication to those charged with the governance. Actually what I feel, this standard is useless, I feel. This one, and there is another standard called 265. What is 265? Communicating deficiencies in internal control to those charged with the governance. And SA 265 related discussion we are going to discuss in risk assessment and internal control chapter. So there we are going to discuss. 260. Communication to those charged with the governance. What the standard talks about? You are an external auditor, right? And the company has top management, right? Communication by external auditor to top management. What are all you have to communicate to them? What are all you need to get information from them? What you can get from them? What you need to give them? When and all you have to communicate. If at all you have any difficulty in communication process, what to do? That and all is there in SA 260, a general standard, a simple standard. I don't give so much of discussion on this standard. I'll just tell you what are all there. It is the responsibility of auditor to communicate with those charged with governance in an audit of financials, irrespective of entity's governance structure or size. To the top management, you are ultimately responsible to communicate them what are all going on in audit. Objective. What is the objective? To communicate clearly with top management responsibilities of auditor in relation to financial statements audit. What is your responsibility relating to audit? Here I would like to bring one general layman concept. You remember SA 210? SA 210, letter of engagement related. Actually, the standard heading is terms of agreeing to terms of audit. Agreeing to terms of audit engagement. That's actual standard heading. Now I'll ask you a general question, you reply me. By the way, now we are going to discuss which standard. SA 260 we are going to discuss. 260 we are going to discuss. So tell me a general question. In any business contract, like you are purchasing some goods or you are procuring some services for your day-to-day needs or whatever. Terms and conditions. I'm using the word very clearly. Terms and conditions. The terms and conditions are decided by the buyer or the seller. Or in case of a service contract, the terms and conditions of the contract are decided by the service provider, or the terms and conditions are determined by the service receiver. Who decide terms and conditions? My question. And I can even give you an example in order to answer this question. Suppose you are going to a movie and you are buying a movie ticket. So what are all the terms and conditions that you have to follow? Who are deciding? You are deciding with the theater owner, or the theater owner have already decided and printed on the ticket? Theater owner. Any business contract you take, service provider is the one who decides terms and conditions. Correct? Yes or no? Same way, in an audit, who is service provider? The stat auditor, you and me. Who is the service receiver? The client. So what are your responsibilities? What are his responsibilities? What are your rights? What are his rights? What are the terms and conditions? Who should communicate to whom? Auditor should communicate to those charged with governance, and that concept is what even highlighted here. So to communicate clearly with those charged with the governance, responsibilities of auditor in relation to audit of financials. This is the objective of SA 260. What is your responsibility as per audit standards? You have to communicate to the top management. They don't know what it is. And an overview of planned scope and timing of audit. How many days you are going to do audit? When you are going to do audit? Give them an idea. So the auditor, and in that, know what you will include, the auditor is responsible for forming and expressing an opinion. And by the way, one more thing, how do auditor communicate this? How do auditor communicate this? By SA 210. By SA 210. Letter of engagement we will issue. By issuing this letter, we will communicate them. And the audit of financials does not relieve the management of their responsibilities. Yes or no? Just because we are doing audit, does it mean management directors can take backseat? No, they have responsibility to run the business. They have responsibility to prepare the financials, all that. And not only communicate, obtain, get from top management information relevant to audit. Tell the top management that you have to give information relevant for audit. And provide those charged with governance timely observations arising out of audit that are significant and relevant to the responsibility to oversee the financial reporting process. And you're doing audit, you found some frauds and errors, communicate them on a timely basis. And the standard SA 260 objective is what? Nothing but, dear auditor, you and management, you must have a coordination, a proper liaison. There must be a two-way communication, an effective communication. Management should not say, auditor, he has never involved with us, sir. He comes and do whatever he want to do. No. At the same time, you should not say management is of adamant attitude. No. You should have a proper communication between both of you. That's the standard objective. Next. Note. This is not required. Not required. You can take off. Not required. Okay. Sometimes no. Some matters may not be useful if you communicate to chairman every time. Sometimes you may need to communicate audit committee. So top management, those charged with governance means relevant person. For whom? it is right to communicate. Suppose some production related problems, some control related problems, go and communicate to CEO. Accounting related some problems are there, communicate to audit committee. Internal audit some problem is there, communicate to audit committee. That's how. Now you see here, significant findings from audit also you have to communicate. Significant findings. When in an audit, we can use the word significant finding, and the SA 260 says the stat auditor shall communicate significant findings from the audit. This can be a straight question. Write about significant findings from an audit as per SA 260. Significant findings, a straight question can come. The auditor shall communicate with top management, those charged with governance, auditor's view about significant qualitative aspects of entities' accounting practices, including policies, estimates, financial statement disclosures. When applicable, the auditor shall explain to the top management why auditor considers a significant accounting practice that is acceptable under applicable framework not to be the most appropriate for a particular circumstances of the entity. Sir, what is this? Nothing but, see, we need to look at whenever we go for an organization for audit, we look at how they're working. Internal controls, risk assessment we do, how are they functioning, the organizational hierarchy, their structure, decision making process, level of management, number of committees involved. So we analyze that, and along with that we also analyze how accounting system is. Sir, mercantile cash, not that system I'm talking about. I'm talking about the system. How the accounting system, is it disciplined? Is it qualitative? How the accounting policies are decided? Who are deciding? The person who is deciding accounting policy, do he have the competence to decide? Qualitative aspects of entities' accounting practices I need to check. I need to check quality of accounting system. Quality of accounting system I need to check, and I will explain to the top management. What I will explain to the top management? Which accounting practices for them are useful. Sometimes generally accepted accounting principle may not be suitable here. SLM WDV may not be suitable here. Production units method may be suitable here. And I will also communicate significant difficulties if any encountered. If I come across any significant difficulties, I will communicate. Sir, what do you mean by significant difficulties? There is another SA 260. Open a pronouncement book. Here I am giving you one indication. Please remember, significant difficulties are there. There is a pronouncement. Open a pronouncement book of ICI. Pronouncement books. What are significant difficulties in audit? You have to read. That is also important question. But it doesn't require my explanation of much. But I am requesting you, open SA 260 in a pronouncement. What are significant difficulties? Please read that. Please read that. Significant difficulties means what? Suppose you are not getting information, requested information, communicate top management that you are not getting. Yes or no? You would have done this when you are going for audit of some company. Probably when you are not getting the data, you will go and complain to the top management. You will put a mail, CC mail to top management. Yes or no? You would have done this. Same. And sometimes GST workings and all, they said we didn't do, sir, we did not do GST, and now you are supposed to do, you are doing it, and it requires extensive amount of time. Undue efforts you are keeping here unnecessarily, which management has to do basically. That also can communicate. So what are significant difficulties? Please look at SA 260. That's an important question. Next, circumstances that affect the form and content of the audit report. In which circumstance you may give modified opinion. And if you encounter such kind of situation, dear management, I saw inventory valuation is not good. If you keep the same way, I may give modified opinion. Give an indication. Nothing but draft audit report. This is nothing but draft audit report. The next one, any other significant matters that arise during the course of audit. If you think it is important, communicate to them. If you think this requires communication to top management, communicate it. Suppose you did not get coffee ordered. Don't communicate that, okay? Something related to work you have to communicate. In the auditor's judgment are relevant to the oversight of financial reporting process. Something you feel top management oversight should be there on that. Okay, and it is something financial reporting process related. Communicate to them. These are significant findings in an audit. 4 points are there. What are significant findings in an audit? That requires communication as per SA 260 to those charged with governance. This right question. Second question, write about significant difficulties in an audit as discussed under SA 260. Another question can come from. and write about objective of SA 260, then the part A answer you have to write. With this, SA 610 and 260 also completed. You know, till now how many standards we completed in this chapter? 11 standards we have completed, 11 standards. And still one more standard which is pending is SA 620. In my next video, you will get SA 620. And in that next video, once SA 620, actually SA 620 is very lengthy. It will take 1.5 hours. Okay. Once I finish SA 620, as I told, pending topics in company audit, pending topics in audit reporting, illustrations. Close this chapter. Almost company audit, audit reporting, MCQ weightage, theory question weightage, of course, plus standards on auditing, the upcoming chapter. These 3 chapters together occupy, I can confidently say 40 marks. 40 marks. And I hope until even now, you are very, very, very strong in the conceptual understanding. And of course, I hope you're having a very good command of the terminology as well. That's it. So watch the next video regarding SA 620. So part 14 of audit reporting. So in this particular video, our major agenda is SA 620, using the work of an auditor's expert. Well, as I already told you in the previous session, as an auditor, when we are conducting statutory audit, we will be depending upon so many personnel. Like it may be auditor staff like articles and paid assistants and managers, internal auditors, branch auditors, subsidiary company auditors. Likewise, we depend on so many. Likewise, same way, auditors expert also. So here, external auditor is using the work of an auditor's expert. First of all, why we need an expert's help, why we need an expert's assistance? First of all, who is an expert? Actually there is a meaning for expert. And by the way, understand, the standards on auditing by default assumes people like you and me, chartered accountants, or experts by default in accounts and audit. We know what is reality, keeping aside the reality, but the standard assumes chartered accountants are by default assumed as experts in accounts and audit. So when the standard is defining the term expert, where there is a deemed assumption about accounting and auditing, the definition of expert is definitely not about accounts and audit. So what the standard says, what this standard general definition of expert as per standards on auditing, what expert means a person having specialized skill or talent in any profession, in any field. I can say, sorry, profession, not profession, in any field other than accounts and audit. Simple. This is the standard definition of expert. Like if you observe, there is a definition for auditor's expert: expertise in a field other than accounting and auditing. Very simple. Expert means a person who is having a specialized skill or talent, nothing but expertise. A person having expertise in any field but other than accounts and audit is an expert. So what do you mean by any field? Like, are there any incidents like why we need other field person to help us? Why the hell I will be using other field person's work? What is the necessity? After all, I'm going to give opinion on the financial statements. So why I need an expert assistant who is not accounts and audit related, whereas I'm doing audit about financial statements? Example, suppose you are doing audit of Reliance Industries Limited. And we all know Reliance Industries Limited is the major refinery in the world. One of the biggest refinery in the world. They do oil refining. They import crude, do refining, and bring petrol, diesel, kerosene, all such incidental products, and they sell it. Now, and they bring crude, right? And they bring refining, all that, right? this refining is a continuous process. Every one of us, we know refining is a continuous process. Every day some quantum of raw material of crude will be like sent to into the production process, and the production process will go for a few days, and then finally the output will come. As on 31st March, definitely some amount of work in progress would have been there, right? Like some amount of crude we sent into the refinement process. Now the crude is in the process of refining. Okay, so that ultimate output, there are so many products, joint products as well as byproducts which will come. Okay, so as on 31st March, some amount of crude oil is in work in progress. Now what is the stage of completion? What is the percentage of completion? I must know. You all know inventory valuation, based on the percentage of completion only you will allocate overheads and labor. So as an auditor now, and what is the valuation rule for work in progress also? Generally, what is the valuation rule? Whether it is work in progress or raw material or finished goods, general valuation rule for inventory is cost or NRV, whichever is lower. Even for work in progress also it works out to be same. Even for work in progress also NRV will compute estimated cost of finishing the product, estimated selling price of the finished good. Yes or no? We will calculate estimated price of selling good and the cost of the work in progress plus estimated cost to complete, realizable value, all that. Yes or no? You have that kind of formula for inventory valuation work in progress. So in order to calculate cost of work in progress, what is the actual cost of work in progress? I need to know percentage of completion. How much percentage of refinement process is completed? Tell me, as a financial profession, how do I know the technical aspect? Like you and me, we are all financial professions. We can't say that. Same way, a company which is having oil reserves, how do I can value do that? How can I value that oil reserve? Okay, company will provide me data. Okay, but that is not the evidence for me, right? Company, whatever the data they provide, how can I accept that evidence? So I need to know, is this value correctly arrived or not? But the problem is I do not have the technical competence, the technical expertise. So definitely what I need to do, I need to take a help of an expert whom I trust. So I'll call an expert, I'll ask him to value this and then give me a report. Then I will use this report as an evidence and proceed further. So the standard is ultimately talking about why you are using expert, why are you using an expert help? Because you want an evidence. Ultimately, what is our objective? We want to give an opinion on the financials. But in the financial statements, there are some amounts which I cannot calculate them accurately. I need some experts' help to determine that. So I'm taking experts assistance in order to get evidence. The objective of using expert assistance, understand, the objective, the purpose, the goal of using the experts assistance is to get evidence. Ultimate objective is evidence in order to determine whether the financial statements are true and fair. Now you see the word, the standard is not using the word using the work of an expert. No, the standard heading is using the work of auditor's expert. They have added a prefix called auditor's expert. So what is the necessity of the word auditor's expert? What is the necessity here? Likewise, you and me, even the management of the company also not aware of how to value work in progress, man. They are also some finance professionals only, or they are also maybe some other technical field. They don't know how to value refinery things and all. They are also not aware of it. So management has valued at cost or NRV, whichever is lower, right? Work in progress. How do management has calculated this cost? Based on percentage of completion. Who determined this percentage of completion? Some expert recruited by the management. Who? Some expert recruited by the management. He is management's expert. He is management's expert. By the way, management has recruited expert, right? Is it objective is to get evidence? No. Why management need an evidence? Not for that purpose. Management is calling their own expert for the purpose of determining value, for the purpose of determining something, for the purpose of preparation of financial statements. When a management is recruiting expert is going to help the management. Expert is going to help the management indirectly in preparation and presentation of financial statements ultimately. So management's intention of using expert is to prepare and present the financials, to get an evidence, using that for preparation and presentation of financials. Whereas auditor, we are using an expert work. Why? To get an evidence, to know, to identify whether the financial statements are showing true and fair view or not. So the objective of auditor recruiting expert is to check whether the financials are true and fair. The objective of management recruiting expert is to prepare and present the financials. Both the cases, the objectives are different. So the concept of management expert also simultaneously was there. Management expert. So there are two experts. An expert who were engaged by management, whose work will be used in that particular field. But of course, it is not other accounts and audit, for the purpose of preparation and presentation of financials. Auditor's expert is an expert engaged by auditor. Understand, engaged by auditor in a particular field, not related to accounts and audit, whose work in that field, other than accounts and audit, right? Some other field, right? Whose work in that field is used by auditor for getting evidence, sufficient appropriate evidence. And you know what we covered right now? Definitions we have completed. And what SEA 620 deals with? SEA 620 comes into picture only when auditor has recruited separately an expert on his own. Exclusively he recruited for the purpose of obtaining sufficient and appropriate evidence. And auditor is not using management expert help in that context. Management expert help is not using. So only when auditor is ignoring management expert, recruiting his own expert, then only the concept of auditor expert comes into picture. I only gave one example of refinement, all that. See, if you look at our book, which I gave here, there are so many examples which were there. Valuation of complex financial instruments, land and all. So expertise in field other than accounts and audit means what? Actuarial calculations, oil and gas reserves calculation, interpretation, contracts, laws and regulations. Suppose I have a pending a pending dispute in a court. So is it a contingent liability or is it a real liability? Should I make a provision, or is it enough for me to just disclose it as a contingent liability? If you look at Ind AS 37, if the outflow is probable in nature, generally we call it as contingent. Okay, probable in nature, and there is no present obligation. The obligation is only possible. If there is a possible obligation, we just recognize it as contingent. But if it is a present obligation, and there is a probable outflow and a reliable estimate can be made, then it's a provision. You have to create a provision. So whether there is a present obligation, whether there is a probable outflow, whether there is a realistic estimate can be made, whether that particular case I mean, for sure we will pay something. Who will decide? Lawyer will decide. So we take a legal opinion. And unusual tax compliances issues. Sometimes companies doing cross-border transactions, whether in that jurisdiction tax is applicable or not, or for a transaction carried in that jurisdiction, Indian country tax applicable or not, DTAA. So for that reason also I may take sometimes opinion in order to identify provision for tax, is it correct or not. So somewhere or the other, when you're doing audit of some big entities where so many complexities involved, definitely you will feel the need of an expert. You will definitely feel a need of an expert. Whenever you feel a need of an expert, already there is an expert which is recruited by management. You have an option. You can use him. You can use his report. Suppose you felt management expert is a puppet of the management. You felt he is not having that expertise. You felt he is not independent. Don't use his work. Use your own. Bring your own expert. Now again, no. You are bringing your own expert, right? Again, this auditor's expert, the standard says this auditor's experts are two kinds again. Auditor's internal expert, or auditor's external expert. The standard again divides the experts, auditor's experts, into two kinds. Auditor's internal expert or auditor's external expert. What is auditor's internal expert? Suppose in our firm there is an employee who is very good in technical knowledge. Suppose we have an employee, example, he is a lawyer. Moreover, he is a lawyer. Let us assume he has a good knowledge of law, very good grip on the law. Now I'm interpreting about the company. Now one pending case is there. I want to know, should I create a provision or should I just show it as contingent? I just want to know there is a present obligation or possible obligation. So since I have a lawyer, already working in my firm. I called him and I'm taking his advice. He's auditor's internal expert. Suppose I don't have such facility. I know one of my friend, or in my business circle, I have a practicing lawyer who is a, practicing individually. Now I called him. He is not in my firm. He is not from my office. He is not from my firm. So he is not my internal one. He is external to my firm. So auditor's external expert. By the way, okay, sir, fine. We understood the moral of the story. Very simple. So there are some cases where there will be certain amounts where there won't be any any sort of expertise or competence for the auditor to determine whether that amount is correct or not. Auditor don't know. In such a case, you are saying we will call an expert. Yes, correct. We will call an expert. Now, okay, sir, expert we called, he gave a report. Now we believing that report. Okay, and even fun organization also showed the same amount. Expert also gives similar value and we gave unmodified opinion. But actually, later on what is discovered is expert workings is not correct. And you did not identify that. You also have not verified everything, not completely correctly. So you believed his report directly and went ahead. Ultimately, it is proved that expert report itself is wrong. And of course, financials are also containing similar value. So you gave unmodified opinion, which means financial statements are containing material mistake. And management intentionally did that. It's a fraud. And the expert opinion you have used, right? It couldn't find this fraud. Now, who is responsible, sir? Now, can I blame this expert? You cannot. Understand, he is not signing the audit report. First point. You are the one who is ultimately signing the audit report. Then why, sir, standard? The standard is saying, the standard is giving you a flexibility. Wherever you feel difficult, wherever you feel getting evidence on your own is something out of your scope of competence, don't worry. Take a help of an expert who is having expertise in a field other than accounts and auditing. Take his expertise and use the report and accordingly proceed further. So the ultimate responsibility, ultimate authority on the audit report and ultimate responsibility on the audit report is with the auditors only. Auditor cannot shift his responsibility to expert. Now you may say, sir, what if, sir, expert colluded with management? What if expert colluded with management and cheated me? And because of which my opinion went wrong. Because of which my opinion went wrong. What action, sir? You can't take any action. Huh? You are saying I am only responsible. You can't make him responsible. Yes, I can't make him responsible for the opinion I gave. But I can complain him in his professional thing. Suppose if a lawyer colluded with company and gave me a fake opinion, fake report, I will go and complain him in Bar Council of India. I'll complain him on Bar Council of India that he is like cheating. Like for chartered accountants, we have code of ethics, right? For every expertise, for every profession, there are code of ethics. For doctors, code of ethics, you have seen no Arjun Reddy movie. He was rebarred because of the misbehavior he did. So same way, in every profession wherever there is a practice involved, okay, there will be a ethical standards board. They will debar them. So that kind of action is there if at all he is proven guilty of fraud. So he will be liable as per his own thing. But with respect to audit opinion I am giving, ultimate responsibility is only with me. Whether I have used expert report or whether I worked on my own, nobody cares. I give opinion, I am only responsible. People will come and ask me the question if at all something went wrong and I need to prove I am innocent. I hope you understood another important point, another important lesson. What is that lesson? Even if you are using an expert help, you cannot blame him. He cannot be responsible in any way for the opinion you are giving. Okay, sir. Acha, fine. We understood slightly now. We understood what is an expert, why expert need will be coming, who is responsible even after using the expert work, and sometimes management expert will be there, but sometimes auditor may not prefer to use them, but auditor may recruit on his own, and that auditor expert may be of internal expert or external expert. Good. We understood decently. Tell me, can we refer about auditor expert in audit report? My question is, in audit report, can we refer about them? Can I refer in the auditor's report about the expert? Can I refer? See, generally, suppose you have a doubt on work in progress calculation of the oil refinery process, something, oil reserve. You called expert, he gave opinion that this is the value of the work in progress, and you compared with management, almost similar, 2-3% variation. So you accepted management workings and proceeded further, and you gave unmodified opinion. When you are giving unmodified opinion, why the hell you will refer about this fellow? Tell me, do you need to refer the experts related information in audit report? No need. You got the evidence, you checked it, fine, you trusted it, document it. You have to keep it as part of your working papers, documentation. Physical copy will be there, keep it. Electronic copy, keep it in the file. So keep it, that's enough. No need to refer about this particular point in the audit report. Suppose expert gave work in progress value is 100 crore, whereas management valued work in progress as 125 crore. Management valued work in progress as 125 crore, and there is a 25% variation, 25 crores variation, which is a very, very big material, of course, but not pervasive. Let us assume it is not pervasive. So I asked management, dear management, expert gave 100 crore. To best of my knowledge, he is the most accurate person. Look at his credit rating, everything. International companies and all recruit him for this kind of valuation. Your valuation, your expert report 125 crore is wrong, management. Please write down the inventory value to 100 crores. I requested management showing the expert report. Management said, sorry sir, we don't. We only believe our expert. Dear management, you know what you are saying? You are saying there is a difference of opinion between you and me. Okay, so okay, Mr. Auditor, what you do? I will give modified opinion. So auditor may give modified opinion. Now tell me, why auditor is giving modified opinion in this scenario? Is it his own perception of modified opinion, or he is believing his expert's work and accordingly blaming the management value is wrong, and that is the reason why he is giving modified opinion? Yes or no? Which means based on the expert's opinion, if the auditor is giving modified opinion based on expert report, in order to tell the shareholders, dear shareholders, I am giving modified opinion. Inventory value is wrong. Why it is wrong? I have used the work of an expert and I believe his value is correct. So based on that, management value of 125 crores is wrong. If I have to make a shareholder understand why I gave modified opinion, I may refer about expert. It is not compulsory also. I may refer about expert. Because there is a necessity. Why I gave modified opinion? People asked me, because inventory is wrong. How do you know? Expert gave the opinion. So if I have to tell the user, because of the expert opinion, I am modifying my opinion. If I have to give a proper reason to a particular user, sometimes there will be a requirement to refer expert's name in the auditor's report. Modified opinion. That's it. Now, by the way, SCA 620 applies only in the context of audit of financial statements prepared as per GAAP, nothing but general purpose. They are not applicable for prospectus rules and all. Suppose if I am taking an expert help in my office who is expert in accounts and audit, if I am taking his advice relating to some particular Ind AS applicability or Ind AS related provision, no, SA 620s are not applicable. SA 620 comes into picture only when the field is something other than accounts and audit. Primary criteria for SA 620, field of the work of expert must be other than accounts and audit. Suppose if I'm going for an auditor, another auditor, just I have some doubt in standards on auditing, one particular point, one particular provision. So I went and took an advice of another auditor, a practicing chartered accountant related to the standard implementation. SA 620 do not apply. It is applicable only if I take a help of an expert other than accounts and audit. So now I gave you already the overview of the standard. Now what we are going to learn, one by one. First we will learn objective. Why the standard is, what the standard says. And then we understand who is an expert. Then we understand auditor expert, management expert. Then we understand when expert need will arise. Then we understand when to use this work, when to use an expert work. Getting it? When the need, why need comes. First we are understanding why expert need comes. Then, okay, need we understood, there is an expert need, how to use his work. Then we need to evaluate his work. And remember, whenever I'm using an expert work, no, obviously my audit process also will affect. I thought I can directly finish audit within 20 days. Suddenly in between I came to know I need an expert work and he is taking 5-6 days. So my audit procedure, nature, timing, extent will affect. And I need to verify his workings also, because I am only the one ultimately responsible. Now he is using some assumptions. Whether the assumptions used by the expert is correct or not, I need to check. And I need to check whether his work, his report reliable or not. If at all his report is not reliable, what to do? I don't have evidence here and I called an expert. His report, he is also unable to give any information. Now what to do? And finally, opinion related, which we already finished it off. Major content we finished it off. Only few sub contents are pending. Now I hope you understood a holistic view of the standard. You know, one of the tough standard, SA 620. Many students feel this is one of the tough standard. So let's start. I hope, yeah, fine, everything is clear. So SA 620, using the work of an auditor's expert. Who is an auditor's expert? Expert may be an individual, or it may be a partnership firm or a company or LLP, whatever organization, possessing expertise in a field other than accounts and audit. So expert is a person who is having expertise in any field, but remember, other than accounts and audit. You can highlight this word. Of course, I have already highlighted other than accounting and audit. Now tell me, he is having expertise in some work, right? His work is used by whom? Whose work in that field used by auditor to help the auditor in obtaining sufficient appropriate. The auditor is using work of an expert only for the purpose of getting evidence. Management valued work in progress at 125 crore. Whether that 125 crore value is correct or not, I went and saw workings. I did understood nothing. So I called an expert. Second, an auditor's expert may be an internal expert who is partner or staff, including temporary staff of the audit firm or network firm. Understand, network firm. Suppose I'm a KPMG. My firm name is one of my firm is ABC and Co. One of the network firm in KPMG. There is another firm, network DEF and Co. I call Mr. D for an advice. Okay, and Mr. D is a lawyer. So internal expert. He is also called as internal. Internal expert means he may be from my firm or he may be from my network. That's it. Or an auditor's external expertise is not from my firm or not from my network, some third party. Okay. Now, there is a contrary, there is another thing called management expert. Name itself says expert work is used by management. Why management use experts work? Why management called an expert to value work in progress? Because in order to value inventory, management have to value work in progress. In order to value work in progress, management do not have competence. So management recruited expert. So the primary objective of recruiting expert by the management is to arrive the cost of work in progress so that balance sheet value can be arrived. So see, management expert means also same definition mostly, an individual or organization possessing expertise in a field other than accounts and audit, whose work in that field is used by entity. Understand, here the word is entity, whereas in the above definition the word is whose work in that field is used by auditor. Here the word is entity. To help the entity, there to help the auditor in preparing the financials, there to obtain sufficient and appropriate evidence. I hope you are able to figure out. Next, now, to which cases SA 620 is applicable? SA 620 is applicable only when the expert work is used by the auditor for obtaining sufficient appropriate audit evidence in order to give opinion on the financials. Only then this is applicable. SA 620 do not deal if I use an expertise of a member in accounting and audit. If a person is expert in accounts and audit and if I use his work, SA 620 do not apply. And management expert, suppose no, management is using expert, no, I'm just using his evidences, the evidences produced by management expert, no, I'm using. I'm not recruiting auditor expert and all. I'm not recruiting separate expert. When you're not recruiting separate expert, there is no auditor expert, there is no SA 620. Very simple. If the auditor's use of work of an individual organization possessing expertise in a field other than accounts and audit, whose work in that field is used by entity to assist the entity in preparing financial statements, means you are using management expert work only. In that case also this standard do not apply. So which is dealt in SA 500, nothing but audit evidence provided by company. Now, standard also clarifies. Remember, Mr. Auditor, you are using his work, no, for getting evidence, right? For looking whether work in progress value is correct or not, right? Remember, even though you are using his opinion, you are only ultimately responsible. You are only sole responsible. See, the auditor has sole responsibility. The auditor has sole responsibility. Getting it, for audit opinion expressed. And that responsibility is not reduced, and not reduced by use of work of an expert. For the opinion you give, if any regulatory comes and asks, you only have to report. Just because you are using expert work, your responsibility will not affect, will not reduce. So this point is not required. You can take off. It's okay, not required, not required, not big deal also. So what that point says, nonetheless, you can use experts work and arrive into some conclusion and give opinion. That's what the note point says. So what is the objective then? What SA 620? SA 620 is applicable for who? For which cases we discussed. Now what SA 620 expecting from the auditor? To determine whether to use the work of an expert. Can I use the work of an expert? If so, when I can use, on what occasion I can use work of an expert. The standard helps you to identify the occasion of using the expert. And standard also helps you, suppose if you are using the work of expert, no. How do you determine his work is correct or not? So determine whether the work is adequate or not. So the standard is designed to make you understand, dear Mr. Auditor, you can use audit is expert work. And you know when you can use? Standard only clarifies. And you know how to use his work? Standard only clarifies. That's it. Now, so what are the factors? What are the factors for determining need of an expert? I'm not talking about when to use the work of an expert. Need. First of all, why an expert need comes? Why I will get a need of an expert? Why? What factors will influence me, so that I will reach into a conclusion that no, this is not something I can do. I need to call some expert. What factors or what situations prompt me to approach an expert? So an auditor's expert may be needed in one or more of the following scenarios. First one, in order to understanding of the entity and environment. Suppose for the first time an e-commerce company approached me, Amazon. So Amazon approached me and appointed me as an auditor for entire Indian operations. Let us assume I don't know how Amazon works, and one of the Amazon technical person is saying me this is how it works, and I do understand nothing about the business of the Amazon. So I called an expert who can make me understand the Amazon business model in a very simple way. So example, maybe while identifying and assessing risk of MMS, I may use an expert work in order to identify risk of MMS. Suppose I called an expert. So company saying so and so mission produces so many goods during the year. So I don't know whether it is really producing that many goods or not, whether the mission is having that much capacity or not. I don't know. Okay. So I was thinking there is a possibility of fraud. There is a possibility of risk. Is there a risk or not here? I call an expert. Dear expert, tell me, is there any risk in this? Third one, determining and implementing overall response to assessed risk at financial statement level. You see this point, determining and implementing overall response to assessed risk at financial statement level. Suppose if I find a risk at financial statement level, entity level risk, a very big risk I found. Here what should I do? Which opinion should I give? Should I proceed further audit or should I withdraw from the audit? I can take a legal opinion of a lawyer. I can take a legal opinion from a lawyer. Next, maybe in order to do test of controls, some controls in the company, I want to test whether they are working correctly or not. Suppose most of the controls in one company are completely driven by information technology, and I don't know how the IT is working, how the IT process is working, how the program is coded. I call an expert. And finally, I may call an expert to evaluate the evidence which I obtain is sufficient and appropriate or not. Sometimes whatever information I got, based on this I'm unable to decide. I'm in confusion. Should I convince with this information or not to convince with this information? I'm not exactly sure. Is it probable outflow? Is it present obligation or is it possible obligation? I'm not exactly sure. Okay, so I got all the data related to pending case. I got all the data. But Based on the data I got, I am unable to decide. And I'm not sure the data which I have, is it enough to decide? I'm not sure. So I call a lawyer and he said, yes, sir, dear auditor, whatever you got is enough. And it's a present obligation. He clarified me and went. So whether the need of an expert will arise in one or more of the following. Maybe I will use an expert work in understanding the entity. Maybe I will use an expert work in identifying risk of MMS. Maybe I will use an expert work to respond in an entity where financial statement level risk is found. Or I can use his work in relation to testing controls and substantive procedure. I can use his work to determine sufficiency and appropriateness of evidence. Then, and one more factor, there is another factor, whether you need an expert help or not. There is another factor apart from all the above audit related facts. There is another factor which is most important: how much you have understanding of the other field, how much knowledge you have about that other field. Suppose I don't know any legal related interpretations and all much. Personally, I'm telling you, I do not have that much expertise in legal interpretations and all too in depth. So if I have to take some decision, I may need to call a lawyer. Suppose if I have good amount of knowledge on interpreting things, interpreting the legal deeds, interpreting the legal all that stuff. Now in such a case, I may not call for an expert. There won't be any need for expert. So whether an expert is needed or not, it depends upon the circumstances of the case, plus what is my level of knowledge and understanding about that particular field. An auditor who is not an expert in relevant field other than accounts and auditing may be able to obtain sufficient understanding of that field, perform an audit without auditor's expert. How, sir? But without using expert, how did you perform this kind of other field related works? Because no, I have experience in auditing that kind of entities which require that expertise. Earlier, I already audited Amazon, Flipkart model I have audited. So now when I'm going for Amazon, I no need of expert of, I don't require any expert to understand e-commerce model because I already have an experience. That time I have used it. Or, educational professional development in a particular field. Or I was trained for concurrent audit of banks and I did certification course already for concurrent audit of banks. Example I'm saying. Or I have got a certification course on audit of e-commerce company. This may include like a formal course or discussion with individual possessing expertise in relevant field for the purpose of enhancing auditors' own capacity to deal with the matters in that field. Like I regularly interact with other industry fellows so that my knowledge on that field can be improved. Nowadays, CS are interacting with IT people in order to develop IT skills so that he can become an information systems auditor. Or I may be discussing with other auditors, some internal auditors, that auditor, this, whatever, who have performed similar work, or my peers, another practicing CL talk. Okay, so this is also another. So how much knowledge you have about that other field, and how do you know whether you have that knowledge or not? Maybe you have performed in previously, you have experience, or you have some formal course you learned through a formal course, or you discussed with those people who are expertise in that field, or you're talking to some other professional who has performed a similar work. Suppose my friend recently performed Flipkart audit. Now I got Amazon audit. I will get his guidance. So if I have this kind of understanding or availability, of resources, I may not go for expert. Suppose if I don't have this and I want to understand the business and I don't know how to understand the business, I'll call. So these are the factors. These are the factors that let me decide, do I have a need of an expert or not having a need of an expert? I hope you are confident. Next. Okay, fine. So whether to use an expert work or not. Now you understood there is a need. Now you understood there is a need. Now what points you consider when deciding to use an expert work? Okay, you decided to use expert work. What points you consider further additionally? First you understood why there is a need. Now you understood there is a need already. So what else additionally you consider? After realizing that you require an expert assistance, what additional points you consider? First one, should I recruit or not? Should I recruit or not? First I'll see why I should recruit immediately. There is a management expert, no? There is already a management expert. Management already called a particular expert engineer, a famous engineer who did oil engineering, who can estimate right value of oil reserves. So management expert is there already. And see what is the scope and object of his work. And whether this expert is employed, he's an employee of the organization or third party, I'll check it out. If he's a third party, I feel he's more relevant, more independent. And I will check how management is controlling that expert. So how much control management is having. And management expert, his competence and capabilities I'll check. And management expert is subject to technical performance standards. I will see whether this expert, no, is he been periodically verified by some authority? Like we are verified by NFRA, you know, we are liable for NFRA verification, right? Same way, every profession is liable for some verification by some external agency. Is he liable or not? I'll check all this. Yes, you know, see, first one, nature, scope and objective. I also want to recruit an expert who can give me cost of work in progress computation. Same scope he did, same work he did, nothing else he did. Second one, just 1 minute. So whatever the nature, objective and scope I am looking from expert, same scope he is also having. So one characteristics is fulfilled. Second one, he is employed by entity. No, I don't prefer. Generally, if a management is using a report of a person who is employed by the entity, I may not use his report because he is employed. Third party, maybe I will trust. That's my personal opinion. Sometimes you may decide, employee also find no issue. What I will say, how much control he is having, how much control management is having influence. Suppose this fellow is very independent fellow. Just because he's employee, he will not abide to anybody. He's a very honest, independent fellow. I saw his attitude. I understood that management and all, nobody can control him. Third one, his competence is well qualified, well experienced, having so much of industry knowledge. He has his own personal website, so much of craze with respect to that particular field. Definitely I'll believe it. And this fellow, no, management expert, no, he has very recently underwent a external authority review and he was proved clean chit. Okay, I can use his work. Second one, what is the significance of the matter? Now I'm talking about some incident, right? Some work in progress valuation I'm doing. What is its significance? Yeah, it is 125 crores value. Even if there is a 20% variation, it will impact financials pervasively. So significant. Maybe if it is very significant, I may better don't go for management expert. I'll call auditor expert. I'll call my own expert. Okay. So because it is so significant, risk involved. If the risk is very high, I may not use management suggestion. I will go with my expert. Expected nature of procedures to respond identified risk, including auditor's knowledge and experience with the work of expert. And whether I will recruit an auditor expert or not is also depends upon, do I have any known contacts in my expert? Do I know especially in that field? Getting it? And what is the procedures that I need to perform in order to recruit an expert? After recruiting expert, what are all things I need to do? I need to look at all the complications also. If I recruit an expert, some complications will involve. I need to consider all the complications. And is there any alternative evidence? Is there any alternative source? Okay, I'm having doubt regarding cost of work in progress. Is there any alternative way other than recruiting expert so that I can identify whether the value is correct or not? So these are the points which auditor has to consider. So before I recruit, see this point, if you observe the second point and this E point, no, this entire E point, no, it is talking about how do you realize there is a need of an expert. I may be requiring an expert help in the following areas, and moreover it depends upon my understanding of that particular field. Okay, if you understood it is needed, will you recruit him? Okay, now you have a need, right? Will you recruit him? It depends on management expert. It depends on significance of the matter. Suppose if the matter is not significant, I know I did not understand, but it's not so significant. There is a small petty case pending in a court. I don't know whether it's a contingent or provision, but it's a petty case, insignificant. For which do I need to recruit now? Do I need to recruit the expert now? Not required. So it depends on significance of the matter. It depends upon risk involved. Only if it is high risk, I'll recruit an expert. If not a big deal, I will not recruit. And what is the nature of complication involved? If the complication is very high, very high, or complications, or if at all I don't recruit, complications are going to be very severe, then I'll recruit. And availability of alternative resources. If at all there is an alternative, I won't recruit. 99% of the cases, auditors will not try to recruit expert, because no, if I recruit expert, I need to pay him some fee. Who will reimburse it? Client. So we always have to work in an optimum way. ensure that the client is not incurring much of the cost because of audit. Next. And now tell me, definitely, suppose if you decided to use the work, there is a need, you decided to use because it's significant, risk is very high, management expert, there is so much of influence on him, no, he cannot be useful, and moreover, there is no alternative means also, so you decided to call. Now you called an expert. Because now you are involving expert, you understand your nature timing extent, NTE, nature timing extent of audit procedures will be influenced. Yes, of course. Now, earlier you thought inventory you can do valuation. Now you understood expert help is required. Now audit time delayed, no? Now earlier I thought I can do valuation. Now you are calling another, nature affected, no? Yes or no? Earlier you thought of doing on a sample basis. Now since you recruited expert, you are going to do 100% verification. Extent also affected, yes or no? So nature, timing, extent of audit procedure will affect because of the expert's work, no doubt about it. So how? So in determining nature, timing, extent of audit procedure, the auditor shall consider nature of the matter to which that expert work relates. So what is the nature of the matter? What is the risk involved relating to which expert work? If I use an expert, how much risk will involve? So will the risk reduce or not? Significance of that expert work in the context of audit. In our audit, how significant this expert role will be. If at all, only if we give, suppose expert, no, he is going to give me report in 7 stages. Stage 1 report, stage 2 report, stage 3 report, stage 4 report, stage 5 report, stage 7. And that particular area which I am doing is very, very sensitive and very important area. In such a case, I may need to wait every stage. Stage 1 he gave report, then I'll do some audit. Stage 2 he gave report, then I'll do audit. Stage 3 he gave, then I'll do audit. Suppose no, if at all expert work is not relevant to my audit sub processes, I can do my own process. Once I get his report, I'll look into it. Suppose if expert work is integral part of my audit, then my audit procedures nature, timing, extent will be affected. So whether my nature, timing, extent will be affected or not depends on the following. What? So the nature of the matter, risk involved, significance of his work in audit, and have you worked with him previously? Do you have any experience of working with him previously? And whether that expert is subject to firm's quality control policy. Generally, no, if it is internal expert, our firm quality control policy he will follow. Our rules and regulations only he'll follow. Internal expert. External expert, he may not follow our rules and regulations. So I need to work little more. Example, in the following cases, generally more extensive audit I need to carry out because I'm using expert. Because I'm using an expert, my audit processes will increase in the following cases. Where? If it is relates to a significant matters that involve subjective and complex judgment. A subjective, completely highly subjective, very typical decisions, typical assumptions will involve. You know, Reliance 3 lakh crore worth of plant and machinery revaluation has been done and useful life have been changed, significant, and the auditor has not previously used. No, I am for the first time I am using his work, so I need to be very careful. If at all I'm already experienced, no, nature and timing extent, my audit procedure won't affect. I need not, wait for his report every time. I already worked with him. First time if I'm doing, I can't go. I have to sit with him every time. Next, the auditor's expert is performing procedure that is integral to audit. Suppose no, my work is related to his work. So like only if he completes stage 1, I can do little more work. Only if he completes stage 2, I can go for next step. Only if he completes stage 3, I can go for next step. If the expert work is integral part of my entire audit process, then my nature, timing, extent will increase drastically. And moreover, he is not subject to firms. He is not our internal expert. He is outsider. So he is not following our rules and regulations while performing work. Similar like our quality rules. Okay, so in that case also I may have to go with additional extensive audit processes. Next. And okay, fine. So you see now in E point, whether there is a need of an expert or not, I decided. Okay. In F point, should I use him or not? Should I use an expert work? Should I now call an expert or not? I decided. Okay. Once I decided to call an expert, how my audit process will affect, I understood. Now, now my audit process, how it understood. Accordingly, I planned my audit. Including the experts related things, all that. Now, expert is working and giving me his reports and all. Okay, before I use his report, I need to look his competence, capability, independence. Objectivity means unbiased manner, nothing but independence. So the auditor shall evaluate whether auditor expert has necessary competence, capability, objectivity, and I need to ensure that he is not having any interest in the company, financial interest, operating interest. So external expert objectivity. In the case of an auditor's external expert, the evaluation of objectivity, the objectivity evaluation involve inquiry regarding interest and relationship. I'll ask expert, dear expert, I'm believing you. Tell me, do you have any relationship with this organization? Do you have shares in this company? Interest and relationship that may create threat to the objectivity. So the following evaluations shall be made in order to know whether the expert is objective or not. So inquire of the entity about any known interest and relations. I'll talk to management also. Do you have any relationship with him? Have you seen him anywhere? Like that. Okay. And if relationship exists, discuss with the expert if applicable any safeguards can be taken or not. If at all some relation is there between expert and management, ask him what kind of relationship. So is there any threat to independence? If at all there is a threat, how to mitigate it? Whether the safeguards are adequate to reduce the threats. Okay, he is saying, yeah, no problem, dear mister, I'm giving you honest opinion, don't worry. So this is how I'm going to overcome the threat. So I'm not going to meet that fellow for sure this entire next 10 days. Even I came into this office, I will make sure he will not be aware of that. So don't worry. So see whether that measures. Okay, interest and relationship may include financial interest, business relationship, or maybe he is providing some other service to the organization. Yeah, there it is a familiar threat may come. Next, fine, one more thing I need to do, get a declaration. Don't believe his words alone. Get a declaration that he is independent. The auditor may obtain a written representation from the expert about any interest or relationship with the entity that he is aware of. If at all he is saying no relationship I have, I'm completely independent, get the declaration. And check whether expert work is subject to technical professional standards by external authorities. If at all it is his work is subject to review, his work can be reliable, because if at all he did not work properly, they will punish him. And relevance of experts' competence to the matter which experts' work will be used. Where you want to use his work, cost of work in progress valuation, what is his level of expertise, competence in that, including what is his specialty of the area, all that you may check it out. And understand, experts competence evaluation is a continuous process. It is not one time process. Continuously I have to be alert. Is he doing work properly? Is he doing competently? Is he always competent? Is he always skillful? Is he always careful? Continuously I have to evaluate this process. This can be tested as a MCQ. This entire thing can be tested as MCQ. What is my suggestion is, once you finish the standard discussion, after looking at my explanation, you finish the explanation, right? What you need to do is, if at all you understood it thoroughly, pause the video, once again read from the beginning till now, and once you understood everything, then only proceed with the agreement now, which I'm going to discuss. If at all you did not understand, just rewind last 10 minutes once again, last 15 minutes once again, just rewind it. And don't worry, if at all you are running out of minutes, please feel free to text me. I will add you the minutes if needed in this standard, because this is little complex, but terminology used is of such kind. But if you follow the technique which I said, like as soon as I finish this particular para, I point before, right? Pause the video, once again read from the beginning cumulatively, understand, try to understand one by one point, reimagine, imagine, visualize what I said and connect it with it, get a clarity, then no proceed. So now once again you see what are all we did now. So in the E point, first we are looking at, do I need an expert? F point, should I call an expert? Okay, can I engage an expert on my own? I need expert. In E point I decided I need expert. In F point, should I bring my own expert or can I use management expert? Or don't need to bring expert. There is an expert needed, is there, but do I bring it or not? Should I bring it or not? Is it worthy? Is it enough? Do I need to incur that cost? Then because I'm including experts work, obviously my audit process will affect, especially some cases. Second point if you see, at some cases extensive audit process will be required. Sometimes this question can be tested directly. This question which I'm highlighting now, this question can be tested directly. Second point, generally when auditor is using the work of an auditor's expert, nature and timing and extent of audit process will affect. There are some cases where more extensive audit process is required. Comment. You have to write this answer. Such an in-depth question can also be tested. MCQ can be tested. Careful. And auditor has to evaluate competency, capability, objectivity of the expert. That's it. Finally, once you understood everything is fine. Yeah, I need an expert and I cannot believe management expert, and moreover the matters are significant, risky size, so I call an auditor's expert. My nature, timing, extent will affect, so I plan accordingly my audit, and I saw competence, everything is fine. Now I have to enter into an agreement with the expert. I have to enter into this formality. What formality? The auditor shall agree in writing. It understands shall agree. It's not may agree. Compulsory. When appropriate on the following matters. Agreement is compulsory. A formal agreement with an expert is compulsory. The standard says. What is the nature, scope of an object? Because you are only engaging him. Tomorrow, if at all any dispute comes between you, something should be there to resolve, right? That's why the agreement is nature, scope, and objective. You tell him what is his work, what is his duty, clearly mentioned in the agreement, and what are roles and responsibilities with respect to his work. No, you need to bring him to the office. He doesn't know anything. No, client doesn't know this fellow. You are the one recruiting him, so you need to bring him. You need to introduce this fellow to the client. Yes or no? And you need to support him whatever information he need. And for you, whatever information you need, management will give you. Yes or no? So roles and responsibilities of you and that fellow, write it on paper. Nature, timing, and communication required between you and that expert, that fellow. So how you both are going to communicate every time. So have it on paper, and mention and tell the expert that confidentiality is to be maintained. Tell the expert, dear expert, I don't know, as per your profession, you have confidential requirement or not. Whatever the work you are gathering, under my authority, the client is giving you the information under my authority. If you breach in confidentiality, I will be suffering party. So sign in the bond, sign in the agreement that you will maintain confidentiality. So I will make it right. And finally, then okay, fine, everything is over. Auditor expert is over. He gave report now. Now finally he gave report. The report which I want as an evidence he gave me. Should I blindly believe it? I will not. I will evaluate adequacy of the work. I saw the report, right? Dear expert, give me your workings also. Give me your workings. Show me your workings. What I'll do. The auditor shall evaluate adequacy of the expert's work for the audit purpose, including relevance and reasonableness of expert finding and conclusion. This fellow said some conclusion. Sir, management valuation of 125 crore is wrong, sir. 100 crore is the wrong. 100 crore. This is the finding he made. This is the conclusion he made. Okay, and their consistency with another evidence. So how do you prove 100 crore is correct? You are saying 100 crore, management is saying 125. How do you prove 100 crore is correct? Do you have another evidence? Enquiries of auditors expert. I'll talk to the expert. Review the expert's working papers. I'll review his report. And if needed, I will observe his work approach. When he's working, I'll observe him. And I'll confirm some matters with third parties. He gave 100 crores. I'll call a third party and ask his opinion. Third opinion also, if possible, needed. And perform detailed analytical procedure to see principle of materialities are considered. Has he considered significance of everything, or he did not consider some information? I do reperform calculation. I discuss with another expert. For example, findings of conclusion or audit expert are not consistent with other audit. Suppose no, I feel his report is something wrong. I'll take third opinion. When we consult a doctor, he suggested for operation. We consult third opinion, second opinion, right? For and the same way. And discuss the report with the management. Dear management, you said 125 crore, but this fellow is saying 100 crore. Who is correct? I may discuss with management. And further, no, if expert work involves significant assumption methods, what is the reasonableness of those assumptions? Dear expert, you took so and so assumption. How? Why did you take? He said, sir, as per our standards, you have standards on auditing, right? Same way we have standards on actuary. So we have some assumptions that we need to take. Standards on oil reserves. We follow international standards organizations, ISO. We have some assumptions to take. So that's it. Internationally accepted assumptions he took. And suppose if the expert work involves using source data, I need to ensure the data used is relevant, the data used is complete, the data used is accurate. So I need to check whether the data used by the expert, he has used some background data for calculating cost of work in progress, whether the data used by him is relevant data, correct data, complete data, accurate data. I'll check it out. And suppose no, after checking the adequacy of the report and all, he took some weird assumptions. He took the information background data used is not correct. You finally decided his work is not adequate. No, You're not satisfied. Still you're doubtful about that work in progress cost. What is the cost of work in progress? You are still doubtful about. So his particular work is not adequate at all. Now what you need to do? Talk to the expert. Is there any further work that he can do so that he can resolve the matter? Or can you do further audit procedure so that you can resolve the matter? Suppose ultimately you decided no evidence. This fellow, useless fellow, did not give any report, and you're also unable to perform any other work. Give modified opinion, because you ultimately end up with no evidence. Whether the cost of work in progress is true and fair, you don't know. If the auditor cannot resolve the matter through additional audit procedure, which may involve further work being performed by both expert and auditor, including employing or engaging another expert, if that and all not possible, so it may be necessary to express a modified opinion. You decided this expert work is not adequate and you are unable to do additional work. You did not get any alternative evidence. There is no another expert also available. Modified opinion you go, because an item where you don't have evidence, in order to get the evidence you called expert. This fellow failed. You also failed to get evidence. You don't have at the end of the day evidence for the item which you are looking for. When evidence is not available, SA 705, remember, unable to obtain evidence for a particular item of financial statements, depending upon materiality and pervasiveness, give either qualified opinion or disclaimer of opinion. So either here the auditor will give, because evidence is not there. So qualified may come or disclaimer may come. Adverse won't come because evidence is not there. If evidence is there, expert value correct, management value wrong, evidence is there, proof is there, you give qualified or adverse. That's it. And reporting. So finally in audit report, how you are going to report? Suppose when I'm giving unmodified opinion, ultimately I use expert report, management calculations, everything is right, or maybe management calculation is wrong, but based on my expert report, management recalculated and showed correct figures. I will give unmodified opinion, no reference. The auditor shall not refer to the expert work in an audit report containing unmodified opinion unless required by law or regulation to do so. Unless in a particular law where you're doing audit, the law says whenever you have used an expert work, law says compulsory you have to disclose, then you have to disclose. Fortunately in India that disclosure requirement is not there in any law. If such reference is required by law, the auditor shall indicate audit report that reference will not reduce. Suppose in law there is a responsibility that auditor expert related information shall be given in report. We all know, just because I include his name in the report, did my responsibility reduce? No. That statement also you should mention. Dear shareholder, I have used his work. As per law, I need to disclose this data. Further, please remember, this disclosure will not reduce my responsibility in any way. You need to mention that. Suppose you give a modified opinion. If the auditor may refer to work of an expert. The auditor may refer to the work of an expert in audit report because such reference is relevant to understand why I gave modification to the opinion. Further, auditor shall indicate auditor's report that reference does not reduce the responsibility. Of course, dear shareholder, I gave modified opinion because I concluded management 125 crores is wrong, expert 100 crores is correct. So this fellow gave 100 crores valuation, I believe it is correct. And further remember, just because expert work I have used, don't make him responsible for the opinion. I am only responsible for ultimate opinion given by me. And we have two questions, question number 17 and question number 18 also. Both the questions 17 and 18. Please make a note 18. Before I proceed to 17 and 18 question, shall we do a small revision of SCA 620 once again? I know you are feeling so much of need by this time. So just pause the video, relax for 2 minutes, then look at the revision. So we'll just do a quick revision of what we learned and then we'll proceed to 17-18 questions. Okay. So much we discussed now. So first what we understood, who is an expert? Any person who is having expertise in any field other than accounts and audit. And if that expert is used by auditor for getting sufficient appropriate evidence in a field other than accounts and audit, he is an auditor's expert. If the expert work is used by management for preparation of financials, is a management expert. And expert may be auditor, we are calling expert, he may be an insider of my firm or my network firm, or he may be an outsider. And these are the examples generally where we go for expert assistance. And the standard is applicable only when the auditor is getting expert work for sufficient appropriate evidence, and this does not apply for accounts and audit expert if I recruit, and management expert. And the standard clearly says at the beginning itself, even though you are using auditor's expert, even though you are referring his name in the auditor report, ultimate responsibility auditor only has. And what is the objective? The standard helps you, or the standard requires from you whether use of an expert, whether can you use the work of an expert or not. If you are determining, if you determine to use whether his work is adequate, how to check it out. Now, when do you know that you need an expert? Maybe you need an expert in the following cases: for understanding the entity and environment because it's a new kind of business that you are doing audit, or maybe you want to identify risk in that particular segment in a particular production unit, or you want to, there is some financial statement, very big risk at the entity level, management is not honest, you don't know what to do next, to proceed with the audit or not, you want to take a legal opinion example, and maybe you want to use a test of controls, or you want to know whether evidence you collected is sufficient and appropriate. Evidence you collected is sufficient and appropriate, you're not sure about some pending litigation. Okay, so you called an expert, he will clarify you whether the information is sufficient and or not, and he will also clarify you is it a contingent or provision example. And it also depends whether there is a need for expert or not. Do I feel the need of an expert or not depends upon my knowledge on that particular field. And how do I get the knowledge? Because I worked in that a similar entity having that same, or I did a formal course on that, I educated myself on that, or I discussed with some people having this knowledge, or I discussed with other auditors, my friends, my colleagues who performed a similar business. And what are the considerations when deciding to use an auditor's expert? Suppose I decided to use an expert. So what considerations I need to take into account before I decide auditor's expert usage, before I recruit him? What points? First, I should see whether management expert is involved. So what is his scope and objective? Whether he is an employee or third party, how much management control or influence has, what is his competence and capabilities, okay, what is his work subjected to technical standards and professional standards? If so, he will work very carefully. If at all not, he may be careless. And what is the significance? Is it so important so that you want to recruit an expert and take an opinion? Or for a small item, why you waste money? Example, risk of MMS. What is the expected nature of process that you are going to employ? And do you have any availability of resource? Now, no doubt, when you are engaging an expert, your work is going to affect nature and timing and extent. So, especially in the following cases, your work burden will improve like anything, increase like anything. And further, you need to check competence, capability and objectivity of expert. Now by inquiring the expert whether he has any interest in the company, all get a declaration from expert that he is independent, and enter into an agreement, formal agreement, compulsory. And see, once everything is over, he started the work, he gave the report, don't directly believe the report. Check the adequacy of the report, check the workings performed, check the user, look at the assumptions, all that, look at the findings and conclusion. You reperform the calculations he did, you analytically apply whether it is correct. Get a third party opinion also if you want another expert opinion. And suppose if the work is not adequate, agree with expert whether he is ready to perform additional work or not. If at all he decided this is what he can do maximum, no evidence, and you see, can you do additional work? If no, give a modified opinion. And reporting in audit report, I think I already repeated at the beginning itself and now later explained. No, I'm not repeating. So question number 17 and 18. So now we'll discuss question number 17 and 18. So this is question number 17. So we'll see now. Let's interpret the question very carefully. Now you see, this is a lengthy question. I think for the first time we are doing a lengthy question. Now how to read a question, art of reading a question, how to filter the question. Observe, an important skill you are going to learn. KRP Limited at its annual general meeting appointed Mr. X, Mr. Y and Mr. Z as joint auditors. 3 individuals are appointed, so it's a case of joint audit to conduct audit of 18-19. Very good. For the valuation of gratuity scheme of the company, Mr. X, Mr. Y, Mr. Z wanted to refer their own actuaries. Oh my God. X referred his own actuary, Y referred his own actuary, Z referred his own actuary. Okay. Due to difference of opinion, okay, after referring to actuary's work, all these 3 fellows have some difference of opinion. All the joint auditors consulted their respective actuaries. Okay, fine. Subsequently, major difference was found in actuarial reports. Now X actuary was there, no, he gave 100 crores. This fellow, Y fellow, gave 120 crores. Z fellow gave 150 crore, something like that. However, X and Y actually report. However, Mr. X agreed to Mr. Y's actual report. Okay, fine. Though there are differences, Mr. X ultimately concluded with Mr. Y. Dear Mr. Y, we both are okay. What about Mr. Z? No, he is not okay with these two fellows' opinion. Okay, fine. Mr. Z did not. Okay, Mr. Z did not. Means Mr. X agreed to Mr. Y. Though Mr. Z did not, means with Y report X agreed, but Z did not agree. Okay, Mr. X contended that Y's actual report shall be considered in the audit report due to majority of the votes. Tell me, SA 299, is majority opinion will prevail always? No, a joint auditor is not bound by majority. Now Mr. Z is in dilemma. Array majority you're saying, maybe they are only correct, so dilemma. Explain responsibility of auditor in case report made by vice actuary later on found faulty. Tell me, all of you, when I want to agree Mr. Y report, I have to look at the adequacy of his work, no? Yes or no? Only after looking at adequacy of the Mr. Y's working, then we both can agree. Yes or no? And moreover, it was very clear that Y's actuary report was found faulty. His report is fault. X and Y both relied upon Y's report, which is a fault. Moreover, X and Y emphasized that majority will apply, which is a violation of SA 299 argument. So see, answer. As per SA 620, you know how students write over this question. As per SA 620, using the work of an auditor's expert, an auditor can use the work of an auditor's expert in a field other than accounts and audit. And the auditor can rely upon the expert work only after adequately verifying whether the expert work is sufficient or not in the given case. And they will forget to write SA 299 point. Maybe if some students remember, further as per SA 299, a joint auditor is not bound by majority. Good. In the given case, X agreed to Y's expert actuarial report, Y's expert actuarial report, and whereas it was found subsequently faulty, therefore X and Y are at may be liable for negligence. And Mr. Z has given a separate report, not believing Y's report, so that Mr. Z report may be fine. Something like this they write. Of course, what they're writing is right answer only. Yes, somehow they're analyzing and writing right answer, but then it is not complete. You see what actual answer is. As per SA 620, using the work of an auditor expert, the expertise of an expert may be required in actuarial calculation of liabilities associated with insurance contract, employee benefit plan, etc. However, auditor has sole responsibility for the opinion experts. Very important point. And that responsibility is not reduced. Just because you are using an expert work, your responsibility will not reduce. The auditor shall evaluate adequacy of the expert's work, including relevance and reasonableness of his findings and conclusions, and whether there is a consistency with other evidences. See, this point you may not write. You just have to check whether the expert's work is reasonable or not. Further, in view of SA 620, if expert work involves significant assumption methods, relevance and reasonableness of assumptions and methods must be ensured. You have to check it. And whether the source data used is correct or not. Nothing but here what the content they wrote, adequacy of the work of an expert. How to evaluate adequacy, that point only they copy pasted. Analysis. In the given case, Mr. XYZ jointly appointed, referring their own actuaries for valuation of gratuity, actuary reports. Actuaries or an auditor's expert. In this case, Mr. Y referred actuary has provided gratuity valuation which was found faulty. Mr. Z did not he has not agreed with this report. Therefore, he submitted separate audit report. In such a situation, X and Y, Z, before using the gratuity valuation, they have to ensure reasonableness of the assumptions and methods. They are also required to examine completeness, accuracy of the data. Mr. X and Y will be responsible for gross negligence because on an assumption that they have not checked the gratuity workings, blindly believed, whereas Mr. Y, after checking only, he did not agree. So using such faulty report without examining the adequacy, whereas Mr. Z will not be liable for the same due to separate opinion expressed by him. Because his opinion separate opinion, he did not use faulty report. He used a very correct report. He will not be liable. X and Y used faulty report, and the answer impliedly assumes what X and Y used a faulty report. No, this fellow don't know that it is faulty, which means these people would have been negligent. That's what the answer assumes indirectly. Actually, no, based on the answer what they gave and based on the question, there is a slight confusion. The question is not completely clear. The question nowhere indicates X and Y are negligent. Show me. They just said Mr. X agreed to Mr. Y's actuary report. What I believe based on when I read this, I understand. Originally, when I read this sentence, I understand X verified actuary workings and then believed with Y, not with Z. So there is nowhere an indication that X is negligent and Y is negligent. But the answer said they are saying gross negligent. So which means the examiner have taken assumption. Okay, sometimes this kind of questions may come. Okay, so once again you read this question before proceeding to the further question. Once again read the question, once again read the answer. Okay, further no, in provision SCA 299 point also shall be mentioned. Further it is to be noted that as per SCA 299, a joint auditor is not bound by majority's opinion. You can write that. Next, 18th question. X Limited has a net worth of 1300 crore because of which Ind AS is applicable. Okay. The company had various derivative contracts, options, forward, interest rate swaps, etc., which were required to be valued at fair value, for which company got fair valuation done through an external third party. Means company used management expert. Understand? Company used management expert. Company had various derivative contracts which were required to be valued, for which company got the fair valuation done by third party, means management expert. The statutory auditors of the company involved an auditor expert to audit valuation. So stat auditors also brought an expert. Auditor and auditor's expert were new to each other. Oh my God. If in case of new to each other, auditor have nature timing extent will extensively affect. They were working for the first time together, but developed a good bonding during the course of audit. The auditor did not enter into any formal agreement. Okay, because they have close bonding, they did not enter into any formal agreement. I showed you agreement with expert is mandatory, compulsory. So auditor is guilty. So auditor should have signed a formal agreement, engagement letter with expert. It is compulsory. You see, the need of detailed agreement is required. So when the expert will have access to sensitive or confidential work, or the work is very complex, or when auditor have not previously performed work with him, or the greater the extent of auditor's expert work, sometimes expert's work is very greater amount. So when the involvement is very high, you cannot take risk. Get an agreement. So you can write our agreement related discussion. No, one point. What is that point? You can write. You can write about this one. I point. Agreement with expert work. This point you can write and give a conclusion. Since Mr. Wahoo, since the auditor has not entered into a formal agreement with auditor's expert, it's a violation of SA 620 criteria, SA 620 requirement. So it is advisable for the auditor to enter into a formal agreement. Otherwise, it may be treated as a professional misconduct. Yes or no? Violation of standard is a professional misconduct. We will discuss about what is professional misconduct, all that in ethics chapter. Such a lengthy standard. You once again watch, if possible, if at all you're having a doubt. And at the end of this video, once you close this video, please, before watching the next video, once again read the entire standard slowly, carefully, and read these two questions. This is a very important standard for MCQs and all. The terminology used is so extensive. Even though I tried my level best to give you best explanation, easiest explanation, still I feel somewhere you will not get good confidence like how you got in earlier standards. I can sense it very easily. So better what you do is you do once again reading and then proceed to the next standard. That's it. So proceed with the next video. Bye bye. With this, SA 620 is over. And if you observe, all standards covered in audit reporting, 12 standards we covered. 12 major standards, important standards we covered. 12. Getting it? Now what is our next agenda? In company audit, pending questions, read it off, close the company audit. Next, in standards, now audit reporting, pending small topics, read it, come back to the illustrations and practical questions, finish it off. So in our next 3 hours maximum, I think we are going to close this chapter. So another probably 2 or 3 videos, we are closing this chapter. Then we will start standards chapter.